What's up, Tasty Nation? Happy Monday. It is July 20th. Hopefully everyone had a great weekend. I know Jermal and I did.
Yeah.
Happy belated birthday weekend.
Thanks, buddy. It was good. Yeah, we had the finally had the party for it. It was fun, man. Thanks for coming. It was a good time. Saw a lot of people that I like. It was great. This was always what I wanted to do. So it was a lot of fun, man. And then how about that match yesterday? That was crazy. I did not expect that many people to be out watching. I don't know what it was. I went to the same spot, actually, my local bar, and there was a lot of people there watching that game. And all of a sudden it brings to mind, you start thinking, how many people are watching this thing? Did you have any idea?
I didn't look at the numbers, but I assume it was a large number because right before the game ended, I was in Lake Geneva. I was like, we got to go. We got to get back to the city because it was all green, like going back. And then 20 minutes later, it was like, I added 5 minutes. I was like, okay, so the whole city was just like out, and now they're trying to get back.
Yeah.
Got to be a big number, huge number.
So Super Bowl numbers are 120, 130 million. 1.5 billion. 1.8 is the official number. We looked it up during. I was like, what are the comparable numbers? And yeah, 1.5 was a lot, but apparently 1.8 has been just told us in the ear, the producer. 1.8 billion were watching yesterday.
That's crazy.
Yeah.
Insane.
Yeah.
I mean, that's just the global sport is football.
Yeah. So. It really is. It really is.
Insane. But yeah, good for them. I was hoping to see Messi get one more, but what are you going to do?
What can you say?
I mean, they had no business even being in that game.
I know, right? Like
Spain
those
had
last
20 shots on, like maybe not on goal, but they had 20 shots, and then Argentina had like 0 shots, and then Argentina had like 0.
Yeah.
Like, how are they even at that point?
I mean, that was Spain dominance. What's the numbers, guy? Did they not give up a goal at all during the whole tournament? Is that what I heard? Or
I think they gave up one.
Right?
Yeah. Their goalkeeper was just insane.
They deserve to win.
Yeah. But yeah, join us on the YouTube channel if you haven't already. We're streaming live there. Just pop over to Tastylive. You can throw in your trade ideas and questions along the right-hand side chat. We'll get to them as the morning goes on. But it appears all is clear in these markets. E-minis up 30, Nasdaq up 260. The Dow and the Russell are up. Bitcoin, ETH up. And crude oil is just chopping around 82, which is interesting. But what do we got today on deck?
Yeah, we got a great show on deck here. It's going to be, I mean, not just the show, the whole day. We had a real busy day here. What about this is later in the day, but we got the usual stuff that we got going on throughout the day. But today we're going to do something a little different, and this is beginning this week. We're going to start doing trade ideas of the day. So at 11:30 Central, I'm going to have a trade idea. At 11:45, Errol's going to have a trade idea. At noon, you're going to have a trade idea. And then we also have a guest trade idea person of the day at 12:15 Central Time. So this is kind of going to be the new format we got going forward. But we also obviously got the great content that we have every day for you here. So check it all out, man. It's going to be great.
Yeah. It's going to be a wild time, as always. I thought about putting on an SPX Global Trading Hours trade this morning, but I already have one because I forgot that last week, I put it on for the Monday expiration, the 3-day expiration, and that turned out to be a great idea because now the SPX market's going to open up at probably like 75, maybe 74.80-ish.
Yeah.
We'll see. But it should be a nice winner on the open. I can close it. I'll probably close it right on the open, especially if my call spread appreciates here. 15-point wide call spread, 10-point wide put spread. The put spread will probably be worthless. Pretty close to it, being 80 points out of the money in this low VIX environment, but we'll see what it's trading for.
I have the same one you have, and on the end, first of all, we just have to address Friday real quick. That was ugly. It was not ugly, but it was not that great, and we did not finish well. We did ended up lower, and it just seemed like last week was just not that week for semis. We'll see what ends up coming this week. Maybe it was a little bit of a selling off heading into what is beginning to be the big earnings week as we arrive here, and I guess that's about as good a cue as any. We're going to probably show this earnings thing throughout the day, but we should show it right now because we got a lot of earnings coming up this week in advance of and this is not even the week that we're going to, in about a week from now, we're really going to have the big earnings, but we do have 2 of the Max 7 this week, but Domino's Pizza actually is up 7%. I saw that just had earnings before the open. AMC, I don't even know what that's doing right now, but had earnings. Not that I really don't care about AMC, dude. Like, I'm just not one of those people. But I know it's a name that's a lightning rod, and a lot of people pay attention to it. So, you can see on here, Tuesday before the open, you got GM, you got 3M GM. How about that? Ally Bank. You also have what else is interesting? Throughout the week, you also have AT&T. You also have T-Mobile, I think, is also having earnings this week. Tesla, like I mentioned, some of the Mag 7s. CSX, well, that's not really a big mover, but IBM obviously is going to be an interesting one. We did see that IBM pre-announced a week ago, so wondering what's going to happen there. ServiceNow is the first of those service names. We've talked so much about service names and how, there's been a lot going on with those, and Microsoft and Palantir. That's the first one on deck, so we'll see what happens there. GE, Veranova, Intel. So, yeah, it's the beginning of a very busy time when it comes to earnings.
Yeah, 100%. And I think this is, as always, the banks kick it off, and then you have this run up, which is this week, and then next week you'll have a lot of earnings as well, even more earnings than this week. So IBM, I think, is going to be really interesting. IBM had that big gap down from 310 down to 200, so just a 100-point sell-off, and now they're actually having their conference call on earnings announcement. So, it's going to be wild, but right now IBM's down a little bit. Micron's actually catching a bid here, so maybe this is a chip day.
Ooh, that was another end of the day trade I did. I did two end of the day trades. I did another. I keep trying in Micron and SanDisk. I did a call butterfly in both of them.
There you go. Well, those should be looking good today, with a little bid in both of them. But we got Chris Vecchio on the line, and he's always got the heat. Chris, how you doing this morning?
I wish I could say that I had a wild birthday this weekend, which is why I can't find my glasses. But honestly, I just can't find my glasses.
They're on your face. What are you talking about? It's not that wild.
These are the backups.
That's right.
These are the backups that I haven't had new lens put in years, right? Because these are the backups. My eyes have gotten a lot worse as I've gotten older, let me tell you.
It happens. Yeah. It's a thing.
So I've been told.
Yeah.
I need more carrots or something in the diet.
Did you do something fun for the birthday? Nothing? Anything? What's that? Chill out?
We had wildfires and we were under tornado watch.
Perfect.
So, no.
Yeah.
Just hung out.
The air has cleared here, at least for the time being. So you might have a little reprieve coming up shortly.
It's good. Today's a nice air quality day. I can go back outside. It's not orange. My neighbor's White House over here doesn't look orange when I look outside, which is nice.
That's a good thing.
That's wild. Yeah, this is nice. Turbulent times for this here Earth.
Yeah, seriously.
Crazy.
I'm just saying, the Knicks win, and then just diarrhea plague and wildfires. I mean, it really was the end of times when you guys were telling me that in the run.
How long do we have to keep hearing about this Knicks win? I mean, is this going to be like through
53
August,
years.
September?
Hey, and you got your Jets are. I mean, I no.
Yeah, exactly. Yeah.
Yeah, the Jets are going to be. They might be worse than Miami this year, but at least the Giants are going to be fun to watch.
I don't know. I have the just end the season for my football team, and I have the must end the season for my baseball team.
You do.
The JETS and METS. There you go.
You do.
Oh man, what are you looking at this morning?
Well, I wasn't here Friday, so apparently Friday was a bad day in the market. There were a lot of idiosyncratic things going on as well. I can't help but take a look at Coca-Cola first and foremost today, which going into Friday looked like it was going to be an all-time high close and then got smacked down pretty quickly. I was told that they had a cyber attack of some sorts, which is apparently really bad for the company. But listen, volatility is high, and how long this sell-off lasts is anyone's guess here. So I've been poking around looking for something around like that 32, 39 days to expiration here pre-market, looking for something that may be giving me, a third of the width of the strike on a short put spread here. It's a 95.9 IVR, and yes, the volatility IV is only 25 or so, but this is a staple, right? It's Coca-Cola. To that point, I'm having difficulty identifying such trade right now. So even if looking at like the 75, 77 and a halves, so $2.50 wide, I can only get like 42 cents of credit there. That doesn't seem like a lot right now. That's less than 20% of the width of the strike. So it's on my radar right now. That's one thing that I'm poking around with. Likewise with J&J, I need to see when liquidity comes into the market. These aren't your mega cap tech names, gentlemen, so you're not going to find those tight bid-ask spreads, particularly in the early part of the session. I may need to wait for the first 15 or 30 minutes of the day to go by before I can ultimately get a fill that I want here. But the one that I am looking at that's pertaining to at least non-mega cap tech that I do have a working order in because I was able to find some prices that I like. Over in Novartis, NVS, they do have their earnings coming up here this week. We, of course, don't have weekly strikes right now for a company like Novartis, so it's only going to be the monthlies. It's out July 21st, this earnings report. So 32 days to expiration. I'm looking at the 150, 145 short put spread here. The chart seems to be rounding a corner of sorts recently. It feels like it's kind of trying to carve out a series of higher lows. Feels like a little bit of a cup and handle sort of situation here now that we're finding a little bit of a bottom. So I'm willing to take a gander on maybe looking for an expansion here to the upside. Again, 89.1 IVR. Not the super highest volatility on the screen with a 29.9 raw volatility for this cycle, but it's an earnings play-ish, and there's a decent trade set up when you look at the chart coupled with decent pricing for short put spread.
So I'm glad you started with Coke, actually, because that's an interesting point. On Friday, it was a bad day. It was mostly semis. And we bounced back, actually. I think we were like, let's just say we started the day down like 80 points or so. We bounced back. We were only down 50 or 40 at some point. And then we fell lower. And what happened was exactly what you see here in the red bar. These names were actually up in the morning, the consumer staples, Coke, Pepsi, Costco, Walmart, and they faded throughout the day, which was really kind of interesting. And it was the first time we saw something that I've been talking about for a while. I did get a little worried thinking it was going to end up creating a much bigger sell-off, which we did end the day lower, but luckily it wasn't like the 2% variety in the SPX anyway, on the S&P 500. It was down 2% in Nasdaq. But we had semis down. We had these names eventually reverse and go down. So, I mean, that's what's going to, at some point, that's going to take us down. Hopefully, I'm glad it didn't happen on Friday, and hopefully we don't see it again anytime soon.
Yeah, every single stock I just pulled up between Coke, Pepsi, Walmart, Target, Costco, McDonald's, all of them had an intraday reversal that was pretty noticeable. So yeah, it is kind of interesting that this isn't permeating through the rest of the market, but we'll see today. Some of these are up pre-market, but
yeah, I felt it on Friday, like because I'm long all these names, and so I felt it. It was,
yeah, I mean,
it was
like
not
Wednesday, Wednesday, Thursday last week, we were going in there getting some long deltas, and it's like, oh, good. I feel pretty good about going into the weekend with this exposure. And I happen to peep it Friday night. It's like, what do they do to my staples? These are supposed to be boring stocks.
I know, right?
But that's the beauty of the short put spread versus the long call spread in these environments right now, because you do have that sustained higher volatility here. Jermal, you and I have referred to it as like the wedding crashers perspective. We don't need you to marry him. Or marry me. We're just saying don't marry him, right? So stock doesn't need to go up. It just needs to not go down. And quite frankly, what we're seeing with Procter & Gamble and like Kimberly-Clark, which were put on last week for me, we're still well above the short strikes and well above the entry points. So little Friday volatility doesn't really spook me here. But it's definitely the place to look this week, because if we get this rotation away from consumer staples and back into all the growthy stuff around the earnings, I think it would catch a lot of people off guard right now, given how this market's been positioned. Certainly, guys, semiconductors here having a little bit of a bounce back this morning, but it feels like it's been 3 or 4 steps down and maybe 1 or 2 back. I don't know how much I believe in this little rally here.
Speaking of believing, how much do you believe in this quote unquote ceasefire? As we have the chart here, it's a great chart about semis. Right.
Sorry. Just the concept that we were going to put like a toll booth in the Strait of Hormuz is so funny. Having, America, we can't get our toll booths here in America. We're going to administer one 9,000 miles away.
I don't know, man. Is this 3 weeks in a row for semis? Is that right? Well, almost. Not quite. Sort of.
We talk about it being 3 weeks in a row for semis. I don't want to ignore the Strait of Hormuz first and foremost here, because we are seeing backwardation coming across the energy complex. It's not just crude oil here. You're seeing a little bit of natural gas. European natural gas prices just at their highest level since March. You're seeing it in oil as well. The front month contracts are rapidly going up relative to the back month here, although oil has settled in a little bit, despite the headlines, gentlemen. Would you believe the headlines? Only 5 ships transited the Strait of Hormuz yesterday, and this is the best that oil can do for us? I don't know. I'm a little disappointed right now. I'm a little disappointed, likewise, in gold not going to go down further on these bits and pieces of information. Aren't yields going up still? How come gold's not falling? that doesn't make my shorts feel comfortable. So I mean, I do think that we need to contextualize all this. The market is not overreacting right now. And if we learned any lessons from March, particularly as it pertains to the stock market sensitivity around this, folks may be keen to hedge their bets, bid up volatility, buy downside protection, rather than sell off their equity names. Because if you have a cost basis in a Micron at like $200 a share, on what planet are you giving up your position simply because of a headline in Iran? You have tax considerations to worry about. You got to figure out ways to hedge that exposure. So stocks could be sticky here. The war, if it's going to really show up, it's going to be in gold and oil. But I don't think we can look to the stock market as the barometer for whether or not this is actually making an impact.
So I did put a gold trade back on last week. I got long MGC, and then I'm short the call spread in the 22-day cycle.
You and Ilya.
Yeah.
Why? 8-2, Jermal?
It's a trade, Chris. It's not a marriage. But it's interesting because the upside call spread is I'm actually up almost 50% on that, and it's 4,200, 4,225. Usually, I'm not up. Usually, I'm not up this much money, even with this much amount of time. Only 22 days to go. So it might speak to the fact that there's just a little release of pressure to the upside, and there's not expected to make a big move. It's just kind of what I'm seeing here.
This is a good example for a question. So you're long and out of the money call spread. You're still not above your long strike.
I'm short.
Now.
I'm short the call spread. I'm short the call spread.
Oh, sorry. You're short the call spread.
And I'm long
MGC. You're looking.
It's like a covered
and you're
call
long
kinda.
MGC.
Yeah.
Yeah. Okay. So now that you're getting close to your rolling over the decay curve here, and you're at 50% probability of profit, this thing can move against you. Let's say gold jumps $100 tomorrow. Your
That's
short
good
call
for
spread doesn't
I'm
have.
great because I got MGC.
You feel good about that?
I do. Yeah.
Okay.
I do. I feel fine about that. I'd be up because I got MGC at around, oh, geez, it wasn't 4,000, but it was like 40.15, I think. I can't remember. So I'd be up almost 1,000 on that, and maybe down. I don't know, maybe down a couple $100 on the short call spread, maybe.
Mm-hmm. Yeah, my cost basis right now for my short gold position is 41.62 and some change here right now. But it's fascinating the past few days. Gold, look what happened to gold when oil was rallying back here for the first part of July. Gold was getting hit hard. And then all of a sudden oil makes its big move the past 2 or 3 sessions, and gold says, no, we already got the memo. That's why we're down here. We don't need to go any further. If oil comes off again, man, gold looks like it could be ready to turn the corner. So I'm actually feeling less confident in holding short gold. I'm looking to add in more below like 39.55 if we can get a push to a new low and bring down that cost basis further. But we have not seen any fish on that line just yet. But if gold's able to bounce, probably good news for yields, probably good news for the dollar. Dollar's probably coming off, right? Yields are probably going lower. Lower yields and weaker dollar in the month of July have tended to be good things for the stock market, which I know seasonality has been bunk this month of July so far, which really hurts my tender heart. But I would point out that it's also behaving in a very seasonal manner, so to speak. One of the particularities about how the market unfolds in July, even though it's been a very good month for the past 10 years, past 11 years, since 1928, it's been the best month of the year for the S&P 500. The first half of July is typically characterized by the winners in the first half of the year being sold down. So what's been hit hardest here? It's been all of the big momentum names from the first half, and we just got through the first 2 weeks of July. So let's see how we shape up the next day or two. Earnings, as we know, are getting much better here, folks. It's not quite the floor that we were starting at from Q1 when we were looking around 12% earnings growth, and we obviously hurdled that more than double over the course of the quarter. But we started this quarter looking for about 23.2% earnings growth, and the blended earnings growth rate, now that we're 10% of the way through earnings season, is 24.7%. So it's already starting to go back to the upside right now, guys. And now we're going into the teeth of it. So the banks did their job. The few things that we had early on did their job. Now let's see if we can get that momentum going here. And we saw that story provide a big catalyst in March, April, right? The strength of the earnings were so good, they subsumed all of the other concerns. Can they be that good again? That's really the question ahead of us.
Yeah, it's going to be very interesting to see. And yeah, to your point of the headline, I think the headlines that we see and the headlines and how they are permeating through the crude oil markets, not much is going on. I mean, I think this backwardation is coming out of this market. So regardless of the headline,
over the past hour, yeah.
Yeah, it's we're back down to 81.5, 80, 78. So like we're kind of flattening out across the curve, and these back months are starting to drift lower. But we shall see. We shall see. But yeah, big week for the Nasdaq. Next week is even bigger with a ton of those Mag 7 names reporting. But we'll get some this week, and there's a lot of companies that are reporting this week that have had very interesting moves, like IBM. They'll be reporting in a couple days after selling off 100 points in just a couple of trading sessions. So, yeah, fireworks ahead. Fireworks ahead, people. But Chris, thanks for your time. We'll catch you a little bit later.
See you later.
Adios. Yeah, E-minis up 30, Nasdaq up 260. Down the Russell, still chopping around here. Again, SPX 0-day or 1-day or 3-day positions here. I mean, I guess in theory, you could just throw on something for the week if you didn't want to put something on in the near term with the markets already up 30 points. But we have the Super Bowl set up, 7,400, 7,390 to finance a 75.70, 75.85 long call spread. So this market, SPX, will open up probably at closer to 7,500. We'll see what these are trading for, but I would imagine this is trading for more than 20 cents.
Potentially, yeah. Yeah, it should be.
Yeah, we'll see. But yeah, I think these types of scenarios where you've got crude kind of chopping around, but the backwardation falling out, and then you've got the precious metals sliding and chopping around a little bit at lows. I feel like we're at this precipice of turning around, maybe a little capitulation here.
Yeah. It's I mean, it's the beginning of the week, right? This is the best part of the week. Who knows how things are going to unfold? Are semis going to finally turn the corner and be back up? We've seen that weakness. Is consumer staples going to become the new thing? These earnings for Tesla and I don't remember the other Mag 7 that's reporting this week, but is that going to be kind of, are they going to be able to meet expectations and beat? Right? There's a lot of expectations on these names, AI build-outs and all that discussion. And is that going to be like the thing? So it's the beginning of the week. We'll find all the answers out over the next several days.
Indeed. Join us in the YouTube chat if you haven't already. Throw in your trade ideas and questions along the right-hand side chat. I mean, I know we have a ton of earnings trades to go through this week. But yeah, this portfolio, I don't think I'll need to really do anything on the open. We'll see if there's some pre-market movers here, but everything's kind of just chopping around, and I'll wait and see what the market gives me in terms of things to do.
We'll also wait and see and figure out what our trade idea of the day is. I don't know. As of right now, I have no idea, but trust me, one will come easily.
Yeah,
I think
a lot of them, if I were to guess, a lot of them are going to be wrapped around these earnings reports that are coming out. Unless there's price extremes, of course. That's kind of the name of the game anyways, looking for binary events or price extremes or situations where you like the implied volatility structure of some of these products and you want to get long or short. But yeah, I have a couple of ideas, and those will be revealed in just 4 hours.
Yeah.
But yeah, E-minis chopping around here. They haven't really moved at all. If you look at a 1-minute chart, we've been chatting for 25 minutes, and this thing has had a 3-point range. Yeah. Ever since 7, we've had 75-20, 75-30. So 10-point range over the last hour, which is not great for trading opportunities if you're looking for them. Unless you're selling premium, like just straight up iron condor, that can work out, of course, with such a narrow range. But
it was at 6:30 our time, right? That big move up. Yeah. Isn't it funny how these news things hit at like these specific times, 6:30, 7:30?
Mm-hmm.
Like that news could have come out anytime this weekend. Came out at 6:30.
They got to start.
I know it's a family show, but that's bullshit. Like seriously, I'm just going to tell you.
They got to start the week off, bright and early.
That's why that got sold off, because nobody believed it.
Yeah, and now we're just continuing to sell off here. E-minis up only 26, Nasdaq up 240. Down the Russell chopping around. But yeah, I think right now, nothing to see here in terms of the vol markets. We've got the vol futures at the 18 handle, about a half point between each of these. Sometimes you see the steepening here between the Q and the U, a little steeper. But the VIX is at 18. And when we see a VIX in the teens, I mean, we should just expect kind of this chop, but nothing too crazy. That can change, of course. But until that happens, I think we'll just continue to see a compressed VIX and a steeper vol curve.
Mm-hmm.
But yeah, lots to talk about, lots to do. We're going to take a quick 90-second break here. We'll see you on the other side of it. You're watching Tastylive.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Get live trade ideas,
technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, Tasty Nation? We are back, and surprise, surprise, the markets have not moved much at all since we just last left. E-mini is up 29, Nasdaq up 250, Dow and the Russell are up as well, but I think we're going to see this chop until some kind of move happens. We've got Micron catching a bid here, up 30 points. We've got SanDisk up 40 points. So I think this could be yet another day that is a little strong for some of these semis, these chippies. NVIDIA up 3 points. And then you've got the other side of the coin, Microsoft down 3-4 points. And we did allude to some of these staples catching a big downside move intraday on Friday. And they are not continuing right now, but seems to be something to watch here at the very least.
Yeah, it was definitely something to pay attention to. It was a quick rollover in those names. They were positive, and then they just turned. I remember looking at my portfolio, I'm like, wait a minute, Costco's down now? Like, what? Oh no, it's gonna be a really bad day. It was not that great, but that's Friday. We move on. Here to Monday.
Appreciate your submissions in the YouTube chat. We have a couple of questions we're gonna cover right now. First one is a little loaded, just a little bit. When selling options, do you guys recommend selling just outside of the expected move or the one standard deviation? From 20839 Pat, number 1. Pat, it depends on the scenario. This is one of those where it's like I don't really overthink it. I make sure that I'm collecting enough to make it worthwhile in terms of the credit received relative to the buying power requirement. I don't like to sell options. If I'm selling something, I don't like to sell it for less than 20% return on capital or potential return on capital, which means if I have $1,000 in buying power requirement, I want to collect at least $200. It's easier to do in equities because they have higher implied volatility. Some ETFs, you can still get that sort of ratio. But if you're just selling a put or just selling a call and just taking one side of the market, sometimes it can be tough to get that. But if you're doing both sides, it's a lot easier. I like to go to closer to the expected move because, and we covered this last week with Dr. Jim.
Yep.
The further out of the money you go, the higher your probability is, but the losses can really grow teeth. So I would rather have a higher max profit, have an ability to make more. And that's really why we've started doing these Super Bowls and Super Bears like literally every day, because you ask yourself this question, you're picking up a little bit in SPX with a short put spread or an iron condor or whatever, specifically a short put spread we can focus on. But like, let's say I'm picking up $1 and I'm risking $4 and I'm closing at 50% profit. It can yield a positive return, don't get me wrong. But what if you give up some of that profit and you take on a little bit more risk and you multiply your max profit? Like that's the way I look at it. If I'm collecting $1 out of the money and I'm risking $4, if I only collect 50 cents and I'm risking $4.50, my max loss increases a little bit. But if I can take advantage of that move, if the move is really aggressive, and sometimes just like your max losses are going to be aggressive, sometimes you're going to have aggressive moves to the upside, and you can literally multiply your profit potential. You can turn one trade into the same equivalent monetary value as 10 winning trades, 5 winning trades, whatever. And I think it really helps answer the question of, or solve the problem of, I have a bunch of winners, but some of them are really big losers. Well, if you have a bunch of winners and some of those winners are big winners, you're going to be in a better spot. So as long as you're like, that's why I've gravitated towards these Super Bowls, honestly.
I do like to do around the expected move, but kind of what Mike alluded to was we did discuss some of this a little bit on Friday with Dr. Jim. It's actually on the videos tab here in YouTube. Short premium works until your win rate gets too high. Take a little bit of look at that. But I think for me, I like to get to the expected move. I also like to collect. I think that's where you collect a decent amount. Obviously, there's risk whether you're doing it there or whether you're doing it on the one standard deviation. One standard deviation was just pretty far of the money. It's most times, and it's just not enough for me. So I think that's why I like doing around the expected move, and that usually it tends to work for me pretty well.
Yeah. But it's really, it's a matter of choice. And I think
it does depend, depends on duration too, right?
Yeah. I think if you're doing defined risk, I'm going to lean closer to getting closer to the at the money price, just because my risk is defined and I want to make sure I'm making enough money and I'm collecting enough to make it worthwhile. So like in this situation, 7,500, 7,490, this is actually within the expected move, but I don't really like the setups where I am, collecting 80 cents, risking $500. Like this market could turn on a dime. And like I would do something like this in the one day where I'm selling this put spread for 80 cents and then I'm going up here and buying this call spread and just giving up a little bit of premium to give myself a much higher max profit if the market rips higher. Where instead of only being able to make 80 cents or whatever the premium is, I'm able to, pick up a lot more of a max profit or a lot higher max profit. And I think that's been exemplified in these sort of Super Bowl setups where on a 10-point rally, we've been able to close them for $200. Where if you just had the put spread, you're not getting that much max profit. You have to wait a little bit longer. So you give up your neutral premium though. So it's just it's a give and take. But I think in the long run, if this market is a bullish market, we keep ripping higher, the Super Bowls that are routed for a credit are going to far outpace just selling a put spread.
Mm-hmm. That's a good one. We got another one?
We do. Another question from the YouTube chat. And I think, with these markets ripping around, keep the questions flowing. We'll keep asking them, or we'll keep answering them. But E-mini is up 32 right now. Nasdaq up 270, closer to 280. The Dow and the Russell are chopping around. But yeah,
I know we do have one in the poll in the chat. What's the next big number in gold? 5,000 or 3,000? First of all, whoa. That's but it's interesting because we're dancing around 4,000 right now. That's a good question. I don't know how I feel about that. I mean, I do have feelings since I have trades on, but let's take a look at a gold chart here. Let me just see this in real time. Let me just see. Well, you can do the options math too. I'm just curious. Man, I gotta say, I don't think we touched 3,000 before 5. I think we do fade more probably. That's why I'm trying to get this trade to work and get out of here because this chart does not give me confidence that it's heading back to 5,000. I think we do go a little bit lower before we get to 5,000, but I don't know if we could go to 3,000. That seems a little extreme.
Yeah. It's an interesting question for sure. 3,000 would bring us to January 2025 levels where this market was a totally different beast. I mean, this rally from 3,000 to 5,000 it brought light to the gold markets. So I don't know. I have a hard time thinking it's just going to fade all the way back down there and just be the forgotten precious metal in that case. But I agree with you. I think we'll chop around here. But let's take a look at the math of it all, as we always do with these option cycles. But 3,000, these are basically zero bid in the 8-day cycle, which you might imagine. So nothing there. Is there a bid on the upside? That'd be interesting. It's just in a short period of time. No.
Yes. No.
So we got to go to another contract. We got to go to the 40-40, which is close enough, but let's just go as far out as possible. 66 days. And let's go up to the 5,000. These have a little bit of a bid. 3 delta, 3% probability of the money. So this is a big move here. Massive move considering the expected move in this cycle is only 300 points. So you'd need a 4 standard deviation move, 3 standard deviation move to get up there. To the downside, I would imagine this premium is lower. Maybe not. Wow. So many strikes. What are
I
they
know,
doing
right?
here?
Oh my God.
Just condense these. Man. Okay, that's kind of interesting. There's no
480
skew.
bid.
Yeah. I mean, there's a little bit of call skew.
It's pretty flat though.
Yeah, pretty flat.
For gold.
Yeah. Can we get them both on the screen? Nope. But yeah, I think in the near term, kind of a question mark still.
Yeah.
But I think if you go to the longer term, let's go to the end of the year. December of this year, 41.05. So we're looking at a different price here just to keep apples to apples, but 3,000, or we could go to 3,100. Let's go to 3,100 and go 1,000 points out of the money.
I mean, I think both. I don't think we see either one of them in the next 6 months, honestly. 3,000 or 5,000.
But it's interesting. You can see the implied volatility skew into the near term cycles because this only has a 480 point expected move. We just looked at September and we had a 300 point expected move. So either way, 3,700 premium on the upside, 2,300 premium on the downside. So you're seeing call skew in these later dated markets. Could be for a number of reasons outside of just the skew in itself. But yeah, I think if the markets become turbulent again, maybe you see a bid in gold. But if the semis just go nuts to the upside.
Or if the rate situation changes meaningfully. Right now, it's still a little murky.
Yeah. But yeah, good question. And it looks like the market is kind of iffy as well.
Yeah.
But yeah, hopefully those analyses helped and keep those questions flowing. We'll keep answering them. But we're going to take a quick 90-second break. You're watching Tastylive. We'll see you on the other side of it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to Nasdaq, all CME one click.
What's up, everyone? Welcome back to the show. We got the E-minis and Nasdaq chopping around from previous levels. My name is Mike. I'm here with Jermal, and we got Liz Dierking on the line. And Liz, we don't need to put an SPX zero-day trade in pre-market global trading hours session because we already have one that we both forgot about.
Yes, you did, Mike. I was very proud of you, and it should come out for a win this morning, right?
I think so.
Yeah.
It'll at least
Good
be
job.
the credit received.
Exactly.
But I think we'll be able to sell out of it for another 20, 30 cents at a minimum.
Yeah, for sure.
But we'll see.
Wait a minute. So does it reflect a win right now? No. Does it?
It does, just because we were still out of the money when the market closed on Friday.
But it should be more of a win when you open.
Yeah.
And I listened to you guys, and I gotta say 5,000. I'm just gonna put my 2 cents in. I'm going 5,000, not 3,000. Absolutely 5,000 next.
Yeah, why is that?
I'm a gold bug, Jermal.
I knew that was going to be your answer. It's like a layup for you.
There's no reason I say 5,000 over 3,000. That's where it's going. Gold's going straight back up. And are you guys excited about Bitcoin this week?
Why? What about Bitcoin?
So there's some, and once again, you can talk to somebody who's smarter than me, but there is some, there's going to be some clarity on the Clarity Act, which should actually help some of our crypto positions.
Oh, okay.
Supposedly. Yeah.
Yeah.
So IBIT, ETHA, XRP to the moon.
I love it. Yeah, they're pricing in a little vol bump here in the 11-day cycle for the Bitcoin futures, 49% relative to 43.9 in the next cycle. So you can see that there's kind of a mini binary event priced in there. And then same with IBIT. You got $1.14 implied move for this week, $1.73 for next week. So yeah, I would love to see that. Please.
They're pricing in something this week.
Yeah.
And once again, it's not a binary event. It's not like an earnings announcement at X time. This is going to happen. At some point, they're planning to have it come out this week. So it could be any time.
Yep. It's not a sanctioned event, just a random when they feel like it. They'll
I love non-sanctioned events.
Yeah. What do you got your eyes on this morning?
Okay, this is this morning, but this is, I was thinking about my new intro where they have the bird chirping as it goes overnight. So I don't know. Jermal, did you watch SNL as a kid or as a young adult?
Yeah, for sure. Yeah.
I
still kind of watch it a lot because it's like my wife's favorite thing. So there's certain things that she's just always going to watch. It's going to be SNL. It's going to be award shows. You know what I'm saying?
Yeah.
Like she watches every single award show. Those are the things that make her feel good. So even when the times when SNL is bad and it's a bad cast, she still watches. Like no matter when. I'm just like, I don't want to watch. But long story, yes, I do. I feel like I'm a hostage.
I do. I like her. I didn't quite know why. I like her even more now. Okay, but so the overnight moves. Did you ever watch the show? And Mike, you probably have seen this. Deep Thoughts by Jack Handey.
Yes.
Okay, yes. So I'm kind of going down that route with my overnight moves because I've got a question for you guys, and you don't have to answer it now. I want you to think on it, and we can answer it tomorrow. Deal?
Perfect.
Speaking of overnight moves,
If a tree
given
falls in
that
the
we've
forest.
got global trading hours, so this is going to be a deep thought SPX global trading hour, and on deck this week we've got some big earnings, right? So we've got Tesla and Google and Apple. I don't know Tesla, but I might be making up Tesla.
No, Tesla's
but some
there.
Tesla is the one,
big components in the S&P 500. When we're all in agreement there, right?
Mm-hmm.
Indeed.
So let's put our thinking caps on. And how are we going to use global trading hours in SPX when these earnings come out? Because you're going to get an earnings announcement that will move an index that is still tradable. Food for thought.
You can go to the 1 day, right? Like say something happens after market, you can go to the 1 day in SPX and how are you going to use
Super Bowl.
them? I mean,
hypothetically, you think it's going up. Say you've got something that's 7% of the SPX. What is 7%? Let me look right now. The biggest one is going to be NVIDIA. NVIDIA is 7.29%. Okay, I looked that up. I don't know that off the top of my head. NVIDIA is 7.2%. Apple is 7%. So Apple doesn't count because Apple releases at 4:30. So don't think about Apple, but NVIDIA releases right after the close. So you can, if you have an option position in NVIDIA, you can't trade it, but you have an option position in SPX one day, you can trade it. So you might be able to benefit a little bit by these global trading hours after the fact.
Yeah. And I think that's a great call out, especially if you're trading the S&Ps and there's a strong component, because there's so many times we've seen it. We'll see it again. We've seen it before where, let's say you're bullish and NVIDIA rips higher right on the open, and then they have their conference call. They say something the market doesn't like, and it completely reverses. And if you're just in NVIDIA, you're just watching this thing and you're like, how did this happen? I've asked that before many times. How could this happen to me? Who's watching me trade this thing? But yeah, now you have the ability to close it, get out, and just make it a true binary event where you're just playing the number. Maybe you're playing the number and you're not playing the conference call. Now you have the accessibility to get to do just that.
And so that's why, once again, random thoughts that I'm just going to throw in there to you guys now. The global trading hours for single stocks wouldn't necessarily work, or are they going to push back their earnings announcements? Do you know what I mean? So if NVIDIA had their earnings and I could trade options after the fact, that would be crazy. Are they going to push it back if all of a sudden global trading hours for single stocks, you can trade until 4:30?
I don't know.
That's a good question. I think they would still report whenever. I think it's just like a scheduling thing.
They don't think about us, do they? They don't even think about us at all.
No.
It's like the NFL schedule. Like, that you have your teams that get their flex times. You have the teams that have their the showdowns on Monday night football, Thursday night football, but you can only have so many. So I think it's at the end of the day, maybe they'll isolate some. Like, I feel like NVIDIA is like the Chiefs in this regard, where like they isolate it, they put it at the end, and they make sure that nothing else is reporting when NVIDIA is reporting earnings. But yeah, I think I think they would still have tradable earnings report like hours. I think that is for sure going to happen.
Going to be a thing, which is also a game changer in my opinion.
Totally.
Yeah, I mean, there's, you bring up a good point. You can do this now all of a sudden with SPX options. Obviously, a lot of people at times have used the micros for whatever different reason for those direct exposures. So, I mean, in that regard, we are being thought about. There's all these other new ways to do things. We are being thought about,
Jermal.
Once upon a time, you couldn't do these, you really couldn't. So it is kind of nice.
Yeah.
I'm ready for it.
That's kind of crazy.
Yeah, SPX is trading around, the implied open is around 74.85, 74.95, somewhere in this range.
Where's your call strike?
All the way up here.
Ooh, you're up there.
But this will be, this 20-cent market in this call spread will be maybe $1, I want to say.
Yes.
Something like that. So yeah, I think this will be probably $100 winner, if I were to guess, right in the open, if the market stays here. But if it keeps ripping higher, if we go from up 30 to up 45 or up 50, it will be gaining teeth pretty quickly here, because we're going to open, again, probably right around this 7,500 mark. So the closer we get to 7,570, the better.
Yes. I am glancing at the chat. I kind of agree with Grumpy Mike. Everybody should be required to report at the exact same time, middle of the trading day.
Oh, God. I remember that used to happen sometimes. There would be a name that would randomly report during the middle of the day. This is, back in the day where just things could randomly happen like that. It's like, oh, so-and-so just came out with earnings. Oh, my God. What?
Yes.
That used to be kind of fun.
It's super fun when you're doing the live show and somebody comes out with earnings and you're just like, what the heck was that? What just happened? Yeah. And you have to rely on somebody else to tell you what happened. Yes, Netflix has released earnings in the middle of the day.
Have they? Yeah. I feel like that has happened once before. I can't remember.
Yes.
But
yes.
Speaking of, let's talk about that. Last week, not good at all, their earnings. And we did talk about it a little bit, you and I, on Friday, Liz, but that did not go well. And it's interesting. Oh, that's the other thing I wanted to do. By the way, what was the box office mojo as we're sitting here talking about movies? And
Odyssey.
Yeah, what was the number? $124 million, huh?
No, more than that.
Really? That's what
I think it was 250. I don't know, but they cleared their budget already this weekend.
Perfect.
I see 124
Is that why
million.
AMC is up?
Yeah.
So AMC is up too.
Yeah.
That's
AMC
why
is
they're up, huh?
Those popcorn sales.
But it wasn't even, it was more my IMAX thing than anything, right? Whatever.
I have no idea.
I'm going to see it tomorrow, I believe. Yeah.
Yeah.
Do you already have your tickets?
I was about to say, how'd you get tickets?
don't know. Can I not buy them?
It's hard.
We
Oh
looked
yeah, you might not be going tomorrow, Mike, unless you've got
It's hard.
tickets.
this weekend. It was like a 6 p.m. show in IMAX is like it was available. 6
Okay.
p.m.
Yeah, it's hard.
Really?
It's hard.
Maybe I'm just lying, but I'm pretty sure we had the ability to get them. I'm not gonna have a very happy girlfriend here if we.
No, you're not.
able to get these tickets. I'm gonna have to- I'm
Oh,
gonna
you
check
don't
that
get
out.
the tickets?
Yeah, I'm
'Cause
gonna check
you
that
already
out.
told her you're going?
I'm gonna check it out right after I get off the show here, or maybe in between
Isn't
breaks.
Isn't it about a 4-hour movie though?
Yeah, it's long. It's like almost 3 hours, but that's what you want for an Odyssey movie like this. Like I want
True.
3 hours.
True.
You know?
Okay, then 6 o'clock's acceptable. So my son wanted to go at like 8:30. I was like, "Are you crazy?
Yeah.
You'll be with midnight." No.
Be falling asleep in the chair. Yeah. Those movies are a marathon, but I've heard only good things. I've seen some reviews and people are like, "This is the best movie that's come out in many years." So
Well,
very exciting
yeah,
stuff.
But yeah, I mean, well, either way, I guess there is an AMC earnings. For those who care about AMC, I completely hate this stock. I really do.
Did they come out with earnings?
Yeah, they had earnings this morning, I believe. It was this morning.
Okay.
It's up to $2.20.
Reports up beat Q2 earnings. Stock jumps. It's up 16%, at least at one point in time.
But this is a meme stock, right? Wasn't this one of the old memes that?
Yeah. But this is one of the memes that they split off. They went from they had AMC and then they split off into Ape, I believe, and that really killed their momentum because then like they split the liquidity instead of just keeping it AMC where you had the ability to have rips and dips. Like GME, I think still has the ability to chop around and get those violent moves, but I think AMC is kind of done for in that regard ever since they had that split. So. Still volatile, but I mean, you can't really do anything with the option space here.
Mr. Chris Vecchio just sent out a message about it's the first year that Hollywood's going to cross $10 billion at the box office since 2019. That's
since pre-COVID.
Since pre-COVID, yeah. People are going back to the movies, and you
Well,
said you guys weren't going back to the movies. You guys went back to the movies. Look at you, you guys. People were like, "I'm never going to the movies again. I'm going to only watch stuff in my house. I'm never going to the movies again." Yeah, right.
And so, Mike, to make your girlfriend happy, you should probably pre-order Spider-Man tickets too.
I think you're fine there.
Because those are selling out. I can't get those tickets either. And that comes out, I think that comes out in like 10 days.
That dude's a baller, man. That dude's in Spider-Man and in The Odyssey.
Yeah.
Two of the summer's
Wait,
biggest
he's
movies.
in The Odyssey too?
Yeah. Isn't he? Aren't him and Zendaya both in that movie, right? Am I tripping on that?
Really?
Pretty sure Tom Holland's in The Odyssey.
Take
How
that
about
to the
that?
tape. Is it
Power
he's
couple?
in both of those?
Power couple?
Wow.
How about that?
So you know you're at the height of your career.
Bro. It's pretty
Although,
amazing.
did you hear the thing with Holland in Holland?
No.
He messaged, I think Tom Holland's messaged Holland.
Oh,
to be
really?
like, you want to get a drink sometime? And he didn't respond. He's like, I have no idea who this guy is. and then he got a bunch of flack and he's like, oh, it's because I just don't watch movies. I'm just a Norwegian soccer player and I just,
I feel like that's the hookup we all need. Holland and Holland.
Yeah. But Holland addressed it and he was like, this is like the humbling thing you need as an actor. Like someone you're talking to has no idea who you are. And in his deep down, he's probably like, I can't believe this guy doesn't know.
I know, right? Yeah, exactly. I'm Spider-Man.
Yeah.
Damn it. Spider-Man. I'm Gumby, damn it.
So good.
All right, what are you guys setting yourself up for the open? We've got about 5 minutes, if I'm looking at this correctly.
Yeah. I would say I'm expecting this market to just drift higher, but it's been a really slow morning here. Like this thing has not moved at all. The 1 minute chart is kind of impressive. From 7 a.m., this initial sell-off, we've had a 5-point range. Up and down, up and down, up and down. So nothing really is going on. And the ticks are even slow. Like you look on the left side here, and it's just slow as molasses here. Seeing a little bit of a speed pickup here, but yeah, I think we'll just drift higher or stay in this range until something happens here.
What's your fancy volatility watch list telling you about it?
It's telling me exactly that. Markets are down 18, 18.6, 19.5, 20, 20, 21. I mean, it's the volatility is low, but the spread between the near term and the furthest contract isn't that crazy. It's only like
It's not that
2.8
crazy.
points.
I agree.
So it's a little bit flat, but still 18 VIX futures handle. Nothing to go crazy about.
And the VIX is in 18. It isn't anything to go crazy about, but it's not, we were kind of talking about this last week. It's not moving in one direction or the other, in my opinion. If you're staying between, 15 and 18, you're not getting the wild pops, you're not getting the wild or the kind of coming down. If the market's going to stay up, I would assume that the VIX would be in the 17 handle.
Yeah.
Not the 18 handle.
Literally.
Yeah. For me, it's I guess the one decision I really got to make this week is on this oil trade. So last week, when the hell did I put this thing on? I put on crude oil trade. Yeah, last week I bought the 78.80 call spread. It's in the 4-day cycle right now. And then I did a ratio spread in MCL where I bought one of the 80s and sold two of the 88s in MCL. And so, given we saw a big move to the upside this week in oil. We just heard a little while ago about almost 2 hours ago, potential ceasefire. And so oil faded a little bit below 90. It actually bounced back up. Below 80, I think it did. And then it bounced back up. And so it's a decision. Do I keep this trade on? Yeah, look at that. That was a big fade. It faded right below 80 and then it bounced right back. Do I keep this trade on? Do I roll the call spread out or do I just completely take it all off? I was actually up. I usually don't think about trading at nights. Trust me, I don't, like a Sunday night, but sometimes I do. And I was looking at the trade last night and I was like, I could take this whole thing off for like an $800 profit right now. Should I? And I didn't. And I just kept it. And of course, then this morning hits. So I got to make a decision over the next couple of days what I'm going to do.
But that's why in products like MCL, and so I've been trying to keep my theta numbers up. I've been channeling my inner TP lately, and I'm trying to keep my theta numbers up. Meaning, I just want to get paid each day for things that don't have to move. And I do find these overnight, the MCLs and the things of that nature can close overnight. Jermal, to your point, I got butterflied off on one of my natural gas positions in the middle of the night, and nothing makes me happier than when I get take risk off the table and lock in something. So for those MCLs, you could have an order in overnight and not even have to think about it. Your Sunday night Jermal doesn't have to worry about a thing if he's got a closing order in for it.
Oh, definitely. Yeah. No, I definitely could have. But you know me. I like to look and see where the thing is trading. I don't
like to live on the wild side.
I also like to live dangerously.
Yeah, you know what I mean? Ha ha. So that's probably the one thing that has my attention as this week is getting kicked off. The other thing is, I guess, again, we got a lot of earnings coming this week, but we also got a lot of tech earnings coming up the week after. And so it's a question of whether to take off some risk and then redeploy that as the earnings come, how that's going to play. That's the other thing I've been thinking about as well. Toss around in my head.
Don't you have this MCL versus something else too, or was that your gold position? You had two.
I have a gold position as well. I have a long MGC contract against a short GC call spread, short the 4,200, 4,225.
Okay.
Which is the call spread's actually up money right now. Actually, I'm probably making money on both of them. That's so many things in here. I got to find it. Yeah, I'm actually winning on both trades right now. So right now I'm up $160 in MGC, and on that short call spread, I'm up $330.
So this is when you know you're a trade junkie, Jermal, because you're like, wait, where is it? Where is it? You're scrolling positions until you find it.
Yeah, I got a lot.
That's how you know you're a junkie.
Yep.
Yeah.
Not a bad thing.
If you've got a scroller, you got to scroll. Yep. You got a lot of positions on.
Yep.
But yeah, I think crude just chopping around here is good for the premium coming out of this thing. We saw crude implied volatility jump a substantial percentage point last week, and now we're kind of coming back down into the
20 seconds
acceptable levels here. But yeah, 20 seconds to go before the bell. Looks like the E-minis are trying to catch a bid here. I just saw a 36 handle on the E-minis.
But they're really, to your point, they're not moving much.
No.
We're just kind of sitting here right now.
Yeah. It's almost as if the traders forgot that Monday is here.
But it was wild. It was wild on Friday.
Wait,
Friday was wild. We kind of thought we were going to catch a bid at about 9:30, and then they whacked them.
Yeah.
So it could be another day like that. With VIX not moving too much or VIX staying above 18, we could whack them in how.
Yeah.
I don't know. I think the semis are going to be back with a little bit of a vengeance, it seems, at the beginning of the day here.
Yeah, you got Intel up $3, Iron up $3. That's interesting. SPX up 40, UNH up $1, and AVGO up $8. These are all just positions that I have. Let's take a look at this SPX position. Yeah, so it's not really coming in all that much. Up 50 cents, trading around 7,500. I think I'll just leave this one on.
It didn't come in as much as you thought it would, right?
Yeah, did not. But if we get another 10, 20 points, like all the values in this long call, if we can get this 40-cent long call to go up to $1, then maybe you can get a little bit extra. But as of right now, this is I would need a 100-point sell-off from here for take on risk here. So yeah, I think I'll just leave it and see if I can get another 25 cents, 30 cents out of this thing. I'll throw in a GTC. How about that?
There you go. Good job, Mike.
There we go. Let's just try it. Let's go nuts. Let's try and get $100 out of this thing. I doubt that will happen unless we get a quick rip to the upside.
So yesterday, what I liked about this is, and I've been, like I said, I'm all over the place. We're now up $43. But on Friday, Jermal had a super bear in, and you had a super bull in, and I bet both came off for a win.
No.
Yours did not. Jermal, yours did not?
No, it did not.
It didn't?
No.
Even though we were down 80 points on the close.
I know. It's crazy. Yeah.
That's insane.
I know. Well, yeah, it didn't. Well, I mean, I put it on a little further out of the money while we were in the morning, I think. Yeah, it didn't work out. It didn't work out.
Okay. I'm sorry. Sorry I brought it up.
No, it's fine. It's fine. Just bringing up old wounds, but that's okay. It's fine.
It'll be fine. It'll be fine.
It's fine. It's fine. It's going to be fine.
I know it was that kind of day. I mean, again, weird expirations, right? Like that's the other thing we haven't touched on. But again, it was obviously an expiration Friday. I think that's another thing that we're seeing here. Ugly move to the downside a little bit on Friday, but then we got the bounce back today. We'll see if this holds up.
Yeah.
Yeah. These minis are trying to figure out where to go from here. The Nasdaq is catching a little bit of a bid, but. Yeah, I mean, this has been a couple of weeks of catching a rally and then selling off to lower levels. Catching a rally, selling off to lower levels. So I think we need some spectacular earnings from some of these products if we're going to get back to all-time highs.
Guess what?
But I mean, even the spectacular earnings, we saw those earnings the last cycle. Which one was it where it saved us all? And then the next day it fell right back out of bed.
Yeah.
So you might get one gleaming day of glory. So, but I don't know. IBM is this week, isn't it? And so they've already pre-announced. So I actually think they're going to go up.
Semis and storage are up. Take a guess at what's down.
Yeah. Oh, your consumer staples, Jermal.
Yep. And what else?
Software.
Exactly. It's the same old playbook. Every day we come in, it's the same old playbook. Obviously, Friday was different, but it's the playbook. It's still in hand. I love this, by the way. I love when these things are happening because then you kind of have an idea of what to rely on and what to trade and what's going to work on that given day and what's not.
Okay, but you know what, though, too? This totally reminds me of the fact, trade small, trade often, everything moves, and take your profits. So to your point, Jermal, you're watching these things up. Some are up, some are down. So it's not yours. There's no profit until you close the trade. Mm-hmm. Active trading actually locks in your profit instead of leaving it where, I'm going to watch these. Maybe I'm long some semis, maybe I'm long some, software names. Keep trading, keep getting in and out, and then they can't take it away from you.
You know what's interesting to me, too, within this software space? Microsoft positive. I'm sorry, Microsoft down. Palantir down, pretty sure. But like Snow, for whatever reason, because I'm short a call in here on purpose, like against those names, for whatever reason, that's not working now. Snow has been up for the better part of the last, I'm pretty sure if you put Snow and Microsoft and those guys on the chart, Snow has been been higher, though these have still faded. I'm not sure what's going on in Snow.
You tried to say you sold a call spread in Snow and you were long everything else.
I got short a call. Yep, I'm short a call in Snow, which is starting to beat me up some. Yep, it's fine. Not that. I used to be so worried about stuff like that. There you go. See what I'm saying?
Yeah, so this is a fun.
I'm not crazy, folks. I notice things.
If you're on the web-based platform or the downloadable web, if you go to tastytrade.com, you can actually download the web-based platform now, the web 2.0 or desktop 2.0, which is basically the web. You have a lot of new charting features, so definitely check that out. But the compare feature, you can throw on a bunch of underlying. So we could look at Snow, we can look at Microsoft. What else do we want to throw on here?
Palantir, CRM, IGV.
I'm not gonna lie to you. This is my takeaway, Mike. This is my takeaway from this segment. I'm gonna do this immediately.
Yeah. It was funny. I asked Kai on the research team, I'm like, can you put together a chart for me, a year-to-date chart of all these things? And he's like, yeah, give me like 10 minutes. I was like, wait a minute, I can just do this in the platform. Like, what am I
There you
doing?
go.
Yes.
So,
And
yes.
one more, Adobe.
Excellent.
Put Adobe on there. I think Adobe's been going up too, actually.
yeah, I think you could do a maximum of 5, but we can look at Adobe. Yeah, Adobe is down here with CRM.
Oh, okay.
So I just changed it to a
Would
line
you-
chart, so it looks all similar.
Mm-hmm.
So you know what I mean, like I said, I can't see the color, so I don't know which is which. But would this enable a pairs trade? Because that's what it looks like to me. I'm gonna go. I would be short the blue and long the purple. What are those stocks?
The blue is IGV, and the purple
Okay.
is CRM.
Okay, there you go. There's a pairs trade for me. I'm
Wait,
gonna
so
go.
when you added
short-
Adobe, did it remove? It
short blue, long
removed
purple.
snow, didn't it? Did it remove snow?
I just went to Adobe because you can only have 5 total.
Okay. Yeah,
On
keep
here.
snow on there. Yeah, 'cause
Yeah.
that's the best. This is the honestly this
Short snow.
yeah. So
long
this is
end.
what
Yeah, there you
basically
go.
I'm doing
Yeah, I
here,
think-
Liz.
changing
I'm
my
long.
colors.
I'm long CRM and Palantir and Microsoft, and I'm short snow, and it's not working right now.
You know what though? Maybe you're just early.
It's fine. That's why I
There you
said
go.
it's fine. Honestly, we'll see what happens.
Jermal, you're funny. You keep being like, it's fine. It's fine.
Everything's fine.
It's fine.
That's the word of the day. It's fine. Everything's fine.
Iron's moving pretty big today, by the way. I think there was some news in the stock, but
IBIT, right? Yeah.
Iran.
Oh, Iran.
but,
Sorry.
IBIT, I think as well, right? Is that up too? I would imagine.
Should be. Come on. It's on deck. Some clarity in the clarity.
Give us some clarity in the Clarity Act. Yeah, I think we're seeing a little bit here as we predicted. We are correct for now. E-minis up 50, Nasdaq up 370, down the Russell steaming higher as well. But yeah, I think crude down just a touch doesn't really reflect the strength we're seeing in the E-minis and Nasdaq right now. But I think we'll get some clarity on that.
Oh, last thing I forgot, the other complexity I added to the oil trade that I got going on, I sold a put in UAL after earnings last week.
Mm-hmm.
So long
There you
deltas
go.
all around. Something has to work, right?
Yeah, something's got to work. Liz, appreciate your time. We'll catch you
All
a
right.
little bit
Good
later
luck
today.
trading, boys.
Thank you.
We'll see you later.
Likewise.
Goodbye.
Yeah, E-minis up 51, Nasdaq up 380. We got TP on the line coming up next, and I think this is one of those markets where I'm sure he'll have a lot of trading ideas, whether it's the 0-day stuff with the put spreads, maybe some longer term stuff. But TP, how you doing?
Hey guys.
What's up?
What's happening? How's the weekend?
Oh, good. Thanks, Jermal. It's getting hot this week. So, I may have to do the show from the pool
Yeah.
because, we got to save some money on the electricity bills and the air conditioning is just crazy. So, you know how it is, guys. So,
Yeah.
I'll see. I'll talk to the tech team. They did a bang-up job setting me up. Now I can actually see the platform while I do the show. And if it seems kind of jumpy, guys, just say, hey, TP, shut something down. But no, I think if I can transfer this outside, I could be floating on a raft or something.
Yeah.
Say, Jermal, Mike, hi. Cheers. I said, it's 8:30 in the morning. So anyway,
5 o'clock somewhere.
Yeah, right.
Thank you, Mike. Mike gets it. So I'm not that surprised by the bounce in the market today. I'm really not. It's anybody who said that they, called it on Friday they were going to crash. Awesome. I hope you made some money on some shorts, but really it was not outside necessarily of its statistical distribution. What's surprising what surprises I think people with the Nasdaq and the S&Ps is there's such big products. $7,000 in the Nasdaq. So, a 200-point drop, 400-point drop, whatever, it seems really big. And it is a big point value, but on a percentage basis, on a statistical basis, it really isn't. And so I just want to remind folks that, yeah, it's not panic time yet. Get in there and trade. That's what I talked about in this morning's Cherry Bomb. We've seen it's been fairly volatile. It's certainly been more volatile than we've seen previous early summers, because right now, I guess, what are we, in the middle of the summer? Maybe not officially, but whatever. We're kind of past the first phase of it, and normally that's a pretty calm time, normally. And it's been more volatile recently, but that should not scare you from trading. Hey, you know what I'm looking at? And I don't know if we talked about this before. I talked about this with Ilya on Friday afternoon, is lean live cattle, LE. /LE that has been.
Yeah, I saw something about this on Friday. I was like, wait, what? I had to pull up the chart.
So it's, I'm not going to guess as to why it's happening. I don't really care. When I say that I don't care why it's happening,
no, it's happening because the lettuce thing, and people aren't eating burgers. I'm just making that up, but
no. And Jermal, that's as good a reason as any. That's as good as reason as any, because I'm not.
I think it's screw-worm related, right?
Maybe.
I was going to say they must have solved the screwworm epidemic here.
Yeah, they get the AI fly swatters out. Oh no, somebody attached AI to the bug assault. So now they have.
I could run with that story though. I could run with that lettuce story. That's what people do in markets, right? Like they run with these crazy stories all the time. I could write 5 articles about that, and guess what? It'll pop up somewhere all over the place.
You could take. Jermal, maybe you could do that. Maybe you could ask your kids to do it, because it's, they're more up to speed in this stuff. You give ChatGPT a prompt, like lettuce driving cattle prices down, and Jermal, you can get 5 articles on it.
We should get this going. I feel like we should get
it. And it would take you probably about 3 minutes or less.
Yeah.
Your kids could probably do it in 2 minutes. You do it in 3 minutes. But my point is that I don't really care why it's going down. It's possibly a bullish opportunity. Looking at the skew in the 18 days, futures 224, 25. So it's kind of in between 224, 225. Down 2 points, up 2 points. Yeah, the skew is pointed towards the downside a little bit. So the market sees a little bit more of a sell-off, at least in the August options. Going out to those are the August futures. Going out to the, Mike, what's V? October?
Yeah,
the V's are October. The V's are trading at 220, right in between at 220, so a little bit lower. And that skew is pointed a little bit more towards the upside.
Yeah.
So just like, if I want to go out 45 days, give myself a little bit of duration, and I don't want to get caught in any sort of the early delivery stuff. Maybe sell the 212, 214 put spread, get for 55 cents or 50 cents, collect about a $200 credit on that versus a $700 and $800 width of the strikes. Not bad. Maybe something like that. So the other stocks I'm looking at in the S&Ps, these are the ones having some big statistical sell-offs. HPQ down 0.79, Into down 0.77. The bias is towards the upside today, a little bit, because you have Google up 1.24 standard devs, AMD up 0.87. So I'm seeing more of the S&P 500 stocks with larger upside standard deviation moves than downside today. So I think the bias is towards the upside this morning at the very least. So Netflix down 0.76. Kind of a broad sell-off as I'm looking at, but I'm going to go in a few minutes, sell my SPX Iron Condor. I'm not, it's, what's the VIX right now? VIX is 1776, so it's coming a little bit. I don't love selling premium here, but I got to do what I got to do.
Yeah, to your point, looking at the Nasdaq 100, you've got a handful of stocks that are down, maximum of 4%. Everything's kind of 1% or less. Then you go to the upside, 8%, 8%, 8%, 5%, 4%. So the magnitude is there for sure. But yeah, TP.
And Mike, and to finish this up, what's interesting, Mike, is all the upside call skew we've seen recently that is surprising. And you've been doing this long enough to know that most of the time equities have puts priced over calls. But recently, we've seen a lot more stocks with calls trading over puts. And that's just, people, it's just that upward bias people are anticipating.
100%. I'm trying to work an order for LE to do a calendar spread. Both of these settle to the same futures contract, the 235. So this is like a $300 trade, but just trying to play for a reversal after we see 20 red bars in a row. But TP, appreciate your time. We'll catch you a little bit later.
Yeah, man.
All right. Yeah.
Yeah, and, the other thing too with that, there's interesting, and when we come back, we should talk about this, the interesting sort of term structure in the cattle. It's kind of fascinating. We'll talk about that in a little bit.
Yeah. We'll catch that on the other side of this break. We're going to take a quick 90-second break. You're watching Tastylive.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got E-minis up 44, Nasdaq up 360. Everything's chopping around, but we've got the Nasdaq man on the line, Mr. Errol Coleman from the Cboe floor. How you doing?
Good. The Nasdaq man. Yeah, no.
This is just gonna be. It's your new.
It's what it is. Yeah. That's who you are.
It's only fitting. It's only right. No, I hope you guys had a good weekend. Noise levels is about a 6 out of 10 right now over here. I know Spain is coming off a World Cup victory. I just have to mention that. But I do got to say before we get into it, it's so crazy how social media and just PR can shift the perception of a team, a company, an entity, whatever that might be, because I've never seen this much negative PR in Messi before. But I think that just shows the power of social media and perception and all those kind of things. But just getting into things, a lot of volatility over the market. Spain won. It's looking like it's a little bit bullish for the market so far. But I feel like a lot of people were leaning Spain. I think they were kind of over Messi in Argentina. So with that being said, what's going on, guys? Good morning. Hope we're doing well.
What an open. Yeah. It does seem like everybody hated Argentina. I mean, I was in a very pro-Spain bar yesterday, which was, I don't know, it threw me off, but I was like, well, I guess everybody in here is going for Spain. Okay. Wow.
Yeah, that's exactly I was. So I was in enemy territory for a little bit there.
They were probably rooting for Spain, and then they had a little side bet on Argentina just to hedge their happiness. But, it was a wild match for sure. But the Nasdaq. I had this line drawn on the Nasdaq chart in the 1 day, and 28.5. We brought this up last week, but we had this rally from that point. We dropped to it, caught a bid, dropped to it, caught a bid, dropped to it, caught a bid, and then Friday we finally dropped below it, but it was seeming to be a head fake as we ended higher, and now we're erasing the entire Friday sell-off, which is just wild. What do you make of this Nasdaq market?
No, I mean, it's wild. To the point that you just made, we kind of cleared that very significant low. I know we were kind of funneling within that consolidated range that we've been getting over the last month. So now it's going to be interesting. Do we get a continuation to the downside? It seems like there's room to run, or do we get a reversal now that we've kind of poked through that range a little bit? So far, I mean, the market looks pretty bullish. I'm going to wait to see the market give a little bit more of a clear, decisive decision. I know that's not always the best time to put on a trade, but in terms of what the market might want to do next, I might even look at getting on a little bit of neutral delta over here. You know what I mean? I know I'm usually very directional on both sides of the market, but I don't know. I know the sell-off helps volatility creep up a little bit more, so that's nice. Might take advantage, maybe get something neutral on, until we officially get out of this range. But it's nice to see a break outside of that little consolidated period that we've been getting at least. So, I mean, with that being said, excited for the opportunity, but I'm going to let the picture paint a little bit more as we get into the week. I guess I'll put it that way.
Yeah, I think it's interesting if you look at if you assume that the Nasdaq is going to chop around with earnings reports coming out this week, a ton of earnings next week. Maybe you see good numbers, but the markets don't reflect the rally that is in line with those numbers. Maybe you do something like a 2-week iron condor in the Qs or in the Nasdaq futures, where you're just looking for some chop around this 50-point range here between 680 and 730, and you pick up $200, risking $300. I think it's a pretty viable assessment or assumption.
Yeah, a little neutral, and then maybe we get a little bit more directional given the extra information that the market gives us throughout the week. But I mean, with that being said, it's nice to see a poke outside of that range. I know we've been keeping an eye on it for a while. But how are you guys feeling about it? I know, again, we were kind of stuck in that consolidated range. How do you guys feel about the overall market right now?
I feel like we just sort of, as a result of expiration, by the way, it wasn't just like something that happened on a given day. I feel like expiration showed us what things can look like when semis, which have been a crowded trades, fade, and when the consumer staples that have been down or on the days that they're up, right? That's been trading opposite. When they eventually fade too, and you get a day where all of them are not necessarily doing well, and obviously we saw what happened on the market. And to TP's point a second ago, like it wasn't a big move percentage-wise. It looked big numbers-wise, right? Like 80-something points, but really, I mean, that was only 1% and change. But that's what it can look like on a day where things get ugly. So let's hope things don't get ugly, and we'll be all right.
Yeah. No.
Yeah, Intel leading the way here. I have a short put. I think it might be time to consider adding a short call, especially because it's the leader in the S&P 100 to the upside right now. But this Intel short put, it's 30 points in the money, which is kind of wild because there's still $300 of extrinsic value. But the only way that that's possible is if there's earnings coming up, which there is. So I think into this rally, and we look at this position, like the 130 strike, and just look at the net change today. This option was trading for, $3, maybe a little bit under $3, but into this 3-point rally, I can pick up another 50 cents and sell this option against it and kind of neutralize these deltas if I want. I think it's also interesting to check out the weekly cycle here. We're going to have earnings July 23rd. So maybe instead of selling that same cycle, does it make sense to just sell this option in the weekly for 50 cents? Where I know I'm going to get all this value. Even if there's a big rally in Intel, I'm still going to keep the 60 cents. It's not going to go too crazy against me. Maybe that's the move, and just keep that longer dated short put, really isolate the implied volatility environment for the 4-day cycle, and get up here in this range. Maybe even go inverted a little bit, because I have $1,400 in premium. So I could technically go down to like the 120 or even the 115 and pick up a lot more premium in the near term cycle, with the intention of, if we get that move to the upside, I can buy back the weekly cycle and roll it out to August and still pick up a credit on that move. I think that's what I'm going to do. I'm going to go, instead of going to the 130 where my straddle is, I think I'm going to go down to like the 120 and just pick up an inside or outside expected move strike here. 4 days to go, $140. And if we do get tested up here, we get anywhere close, I can always just buy this back and roll it to August and still pick up a credit.
I like that. The premium's still really elevated in a lot of those memory names too.
Yeah.
I mean, you're going to have a lot of flexibility there. That's nice.
For sure. I was just filled for $1.35. So if we look at this position as a whole, We now have $1,600 in premium on a 10-point wide inversion, but the 4-day short call is going to lose all this extrinsic value this week after earnings, and I can just roll it up and reduce that inversion or remove it entirely into an upside move, but still reducing basis nonetheless.
No, I love it. I love it. I know SanDisk, Micron, INTC, all those other names that were extremely overextended have finally been pulling back for the last couple of weeks. So might be thinking of doing something similar-ish in there, at least getting involved, because I know it seems that we could be topping out. We're not too sure, but the volatility is definitely there. The premiums are definitely juiced. And it'll be nice to have some other things in the portfolio outside of SpaceX that I have right now. Not to mention SpaceX just completely selling off to the downside. So I want to get a little bit more of a mixed bag this week in there. I don't want to just stare at SpaceX.
Apparently, there's been a lot of money poured into SpaceX more recently.
Oh, yeah?
Yeah. About $320 million has been poured into SpaceX, by far
wow.
more than any other stock this month. Intel second. ONDAS. Is that ONDS? I think. I don't even know what that stock is, but clearly a lot of people trade that. A lot of retail traders like that stock. I don't even know what it is.
Yeah.
Oracle's fourth on the list. Iron's fifth. Microsoft, Alphabet, Amazon, Tesla round out the list.
Okay. Yeah, no, the way that this IPO is playing out right now, I would just never understand the hype that comes along with a lot of these IPOs and just like that scarcity kind of mindset behind some of these IPOs, considering the fact that, we tend to get pullbacks in the market, whether that's a month from now, 3 months from now, and then it's got to reprice to its fair value, those kind of things. So I'll never, I guess, understand the IPO hype. I see the anticipation of volatility that can come, whether that's on the upside or downside, that's attractive for an active trader, volatility, no matter what direction that's in. But in terms of just snagging shares for the IPO, I'll never understand the, I don't know if it's just marketing, if it's just hype. I'm still getting experience around these IPOs in the market, the longer that I get more experience, but I won't understand the hype. And maybe it's easy to say in hindsight. That's kind of my 2 cents there on SpaceX.
Yeah, we'll see where it goes, but still plenty of implied volatility in there. So lots of opportunity, but appreciate your time. Have a good rest of your day at the Cboe. We'll see you a little bit later.
Later, man.
Awesome. Thanks, guys.
You got it. E-mini sliding right now, down to only up 24. Nasdaq up to 225. So the Dow has ticked red, but we're going to take a quick 90-second break. Dr. Jim's going to be on the line. He's going to take us through a little 20-minute analysis of the markets, and then we'll join you right back, take you up to 10 o'clock. But you're watching Tastylive. We'll see you soon.
When the market moves, traders need to move faster. Tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tastytrade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Get live trade ideas,
Technical analysis,
earnings setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
I'm Jim Schultz, and here we are for the brand new show Inside the Trade, man. They got your boy in the morning slot, got your boy in the afternoon slot, got your boy in the evening slot. Pretty soon we will also be in the infomercial slot. So welcome to the show, man. Let me know in the chat, in the YouTube chat right now, what are you guys trading? I want to know what you're looking at today. Let me know down there. Give me the ticker, give me the strategy. Let me know what you guys are doing, because I'm going to show you guys one strategy and one ticker today that is kind of interesting to me. So Roberto, go ahead and bring us into the market here. It's a tricky market right now, right? Because we are right on the precipice of earnings season. So all the heavy hitters are going to come out over the course of the next week or so. If we go to, the Tasty default watch list here, the tried and true, if we sort by earnings, I mean, you can see, man, like later on this week, we've got all the heavy hitters. We got Google coming out. We got IBM coming out. We got Tesla coming out. And then the following week, we got Chipotle, we got Starbucks, we got Meta, we got Microsoft, we got all these guys coming out. So I don't generally like to do strategies in stocks that have earnings coming up that are too far before earnings. I much prefer to, hey, let's wait for earnings. Let's wait for the actual earnings day and then do something. So this week on Wednesday, we've got Google and IBM and Tesla. Man, you're not going to want to miss the Inside the Trade that morning, or even from Theory to Practice later on that day at 2:30 Eastern. Shout out to my From Theory to Practice fan that I'll be watching in the morning. But I don't typically like to do individual stocks going into earnings too far before earnings. So what are we going to do on a day like today? Well, here's what we're going to do. So we are going to delete the circles on the screen. Let's go. We've got our Tasty default watch list popped up. Let's go ahead and let's sort by IV rank. So if we sort by IV rank, then you can see going top down, right? I'm looking for volatility to sell. I'm looking to get short premium. I want to take advantage of all the things we take advantage of with short premium. I mean, high probability, selling volatility contraction, volatility mean reversion, all those kinds of things. Obviously down the road, we'll get into long volatility plays, playing lower volatility instruments. But right now, man, let's stick with the try to. Let's stick with the Betty Crocker recipe. We know from Theory to Practice that the Betty Crocker recipe is the default setting for a reason. So if I take a look at implied volatility rank, you can see that by sorting by this, you got your Cisco's, you got your Microsofts, right? You got your Metas, your Chipotles, got your Apples, got your Snapchats, right? They're still out there doing it, man. Still kicking. I mean, it should only be a couple more days with earnings on August 3rd, but right now, they're out there getting it done. So if you look at the implied volatility rank, there's just not that many opportunities available that aren't associated with earnings, but there are a couple, and that's what I want to look at here today. So if we go down the list, you can actually even see, because I've been doing a little bit of research before the show today, XLE. So we could go into some XLE, and I see you guys in the chat, by the way. Look at Adam Armfield is here, Ranch is here, Clown Baby is here, Night Moves is here, CA Paris is here. Man, I appreciate you guys so much. Let me know what you guys are trading. And I want to know they're in the YouTube chat, and the algorithm we know is dying to know. But if I go to XLE, this is an index, right? So I don't have to worry about earnings. I don't have to worry about, Meta, Microsoft, whatever. This is an energy index, which you see right up here. And so this can be a really nice play when you want to do something. You want to stay active. You want to sell volatility or buy volatility, whatever you want to do, but you don't want to mix it up with individual stocks. You don't want to mix it up with, these individual names that have earnings that are going to be reported very, very soon. Again, if I'm going to trade earnings, I'm doing it on the day. So Google is this Wednesday. We're going to do Google this Wednesday, right? IBM is this Wednesday. We're going to do IBM this Wednesday. Snapchat is August 3rd, provided they make it to August 3rd, which again, I checked Polymarket this morning. It's only about a 35 to 40% chance, but let's say they do. For the purposes of this illustration, we're going to trade Snapchat on August 3rd. So right now, let's go into XLE. Now, here's the great thing about XLE. It's a $58 stock. So if you're out there and you're trading, I mean, everybody's across the spectrum. Everybody's running the gamut in terms of account sizes, right? Some of you are running, your tasty bite-sized accounts. You've got 10,000, you've got 15,000, maybe even less than that. Some of you are like 30, 40, 50, 60, which is typically the average account size for a retail trader. And some of you, my shooter McGavins that are out there watching the show, you've got, 100,000, 200,000, a million plus in your account. It's obviously going to be a very different experience depending on where you are on the account spectrum. But here's what's great about something like XLE. It's only a $58 stock. So if I go in here and I want to do something undefined risk, which is what we are going to do here today, we're going to do a short strangle in XLE. You're going to see that the buying power in here is very, very reasonable. The buying power in here is very manageable. So it allows me to fit this into account sizes at any point on the spectrum. If I'm small, I can probably fit this guy in. If I'm bigger, I can fit it in and maybe do multiple contracts to make sure that I'm keeping my position sizing roughly equal from one position to the next. That's actually a very important thing. That sounds like it would be more appropriate for a calculated risk. So don't miss the next calculated risk that might be coming on down the chutes here pretty soon. But if I go into a strangle, and I'm looking at XLE or really any stock for that matter, where I typically like to begin my analysis is always right at the expected move. So if I go to the expected move, I go down to 54, I go up to 62.5. That is just a really good objective reference point for strike selection when it comes to a strategy like a short strangle specifically, because this is not based on my opinion. This is not based on my subjective analysis about what I think about the market or don't think about the market. This is based on the actual real-time pricing and the real-time statistics that are in the marketplace right now. And so it allows us to kind of remove our own colored biases that we have about the market. And everybody has them. Like, don't pretend you don't have them. You've got them. Right? We've all got our own personal perception or perspective of the marketplace. Like, I think it's going higher. I think it's going lower. And that's what makes it fun. I mean, I would never say somebody should just totally remove that. Like, that's what makes it fun. Do you think it's going higher? Do you think it's going lower? Whatever. Like, I think that that's what makes trading really fun. Like, I actually want to know, man, let me know in the chat. Nasdaq at 29,000. Are we going 30,000 or are we going 28,000? Like, what comes next? 30,000 or 28,000? Let me know in the chat. I would absolutely love to know. But starting with the expected move, this can be a really, really nice reference point for strike selection. Now, with something like a short strangle, which, remember, with the short strangle, all I'm doing is I'm selling a put below and I'm selling a call above. It's a fairly straightforward, undefined risk strategy. It's not as straightforward as something like a short put, but it is still fairly straightforward. And it's nice because you can play the market from a neutral standpoint. So I'm playing the market from a neutral standpoint. I don't have a directional bias. I give myself a nice range to essentially be right when it comes to stock price movements. And using the expected move as that reference point, it really makes a ton of sense. So if I start at the expected move, like, let me start by going outside the expected move and just see where we're at. So if I sell a 52.5 put and a 62.5 call, this is a pretty nice looking strategy. You can see the probability of profit is 70%. My probability of collecting 50% at any point over the life of the trade is 84 to 85%. It's obviously moving around as the market moves around. My delta is slightly bearish. I'm slightly negative. Maybe we'll do something about that here in the next couple of seconds. I've got $3 in daily theta. My maximum profit is $160, which is obviously going to be linked to my credit collected of $1.60. The credit collected is on a per share basis. The maximum profit is on a per contract basis. And the contract, of course, is always for 100 shares. I think at one point, they were doing like those, I don't even know what they were calling them. Like, were they calling them, they weren't calling them minis. I don't even think they were calling them micros. I think they were calling them, were they calling them amuse-bouches? Like, I'm not sure what they were calling them, but they had these contracts, and they're gone now. Like, you can't do them because nobody wanted to do them. But they had these 10-share contracts. Like, these little 10-share guys, just a tiny little taste. I think they did call them the ABs out there, but they're gone now. So now we can kind of rest assured that everything is standardized. It's 100 shares per contract. And that makes our job a little bit easier. The maximum loss is going to be negative infinity, which if you are brand new to the show, that twisted up your knickers at least a little bit. So we'll put it in a different color there. So what would have to happen for us to lose an infinite amount of money? Again, just to be clear, just to make sure we all understand what's happening here. This is telling me that theoretically, there is a chance that I will reach a state of being where I am never not losing money. I'm not losing money. My family's not losing money. My lineage, my heritage, my heirs are not losing money. That's what that's telling me. Okay, is that theoretically possible? It is. Right? I am officially and legally obligated to let you know that is theoretically possible. Is that a practical thing that we're going to reach? I don't think so. Again, you have to draw your own conclusions, but XLE would have to print positive infinity in order for us to lose an infinite amount of money. I'm going to say that's only maybe a single digit probability that actually happens. Buying power effect, it's only $700. And this is kind of what I alluded to earlier in terms of position sizing. This is really nice because, it's a fairly small position. You've got, man, I'm going to say $10,000. If you've got $10,000 in your account or more, you can fit this trade in no problem. Like, this is sized correctly. You're not too big. You're not too large. Like, you can do everything the way it's intended to be done. And obviously, if you're larger than that, then in terms of account size, then you're going to have no problem fitting this trade in at all. If you're smaller than that, it might be a little bit trickier just because you start getting around 5,000, 7,000. Now it's 10% of your account or more. That's a little bit too large, in my opinion. Now, from time to time, I will venture up to those parts myself, but I try to make it a little bit more fewer and further between. The only thing I want to do with the strategy, just to collect a little bit more, is let's go. And I want to see where you guys are at in the chat, man. Look at you guys. I appreciate you guys putting in some work early, man. Early work, man. Today, I appreciate you guys so very much. Let's move the 52 and I put up to the 54. And now you can see everything about the trade essentially remains the same. I have to give up a little bit of probability, of course. I'm only 66% pop and 83% P50 now. And my buying power effect has gone up a little bit, but I picked up a little bit more credit. And again, remember, we're managing at 50% of max profit or some early target. And what you collect on entry is actually really, really important. So, collecting $1.93 instead of $1.60, I've neutralized my delta a little bit more. So if you want to be a bit more neutral, this will kind of help get you there. But yeah, let's go ahead and let's push this guy out. And then I want to see what you guys think about my trade. Let me know what you guys think about this trade. Again, it's no different than from theory to practice, right? You should be fading everything I do. Well, actually, it might be a little bit different. Because again, you got to watch from theory to practice later today, 1:30 Central, 2:30 Eastern. For earnings trades, it's sight unseen. Like earnings trades, you fade, you make money, you rinse and repeat. Like it's easy peasy, lemon squeezy. When it comes to regular trades, we might be doing okay. And so I guess we'll have to wait and see. So let me see where you guys are at. Let me go in here. I see Ranch asks, hey, it's a Doc J takeover. It's something, man. It's absolutely something. Let's see. CA Paris Tastylive will soon be Dr. Jim Live. No, it will definitely not be. Trust me, you do not want that. I promise you, you do not want that. But exciting things coming on down the chutes for sure. Night Moves is in the house. Man, let's see. Ranch, CA Paris selling weekly short puts in RGTI at the 13.5 strike. That's rigatoni, right? We've done that before. I remember rigatoni. $14 stock. I think it was $14 when we traded it last. And so 13.5 put, that looks pretty good there, CA Paris. I want to get to a few more comments, so I'm not going to analyze that right now because this show is much faster than from theory to practice. From theory to practice, I mean, it takes us 18 minutes to just get through the intro. Right, so they're pushing us hard in the morning, man. They want to get things done and get it out the door. So I got to move a little bit faster. But Jackie W, now we have 2 opportunities in the day to fade Dr. Jim. Jackie W knows. Jackie W, so let me tell you all a little something about Jackie W. Jackie W's been making some money. Jackie W's built a nice little system of consistency. And Jackie W, she knows what she's doing. Like, she knows where the golden goose is, right? It's Dr. Jim in the afternoon. It's also now Dr. Jim in the morning. And never forget, man, I'm here for you guys. You guys never forget. No matter what happens, I am always here for you guys forever and always the end. And so Ranch is in the house. Morning, Dr. Jim. Good morning there, Ranch. I appreciate you. The man from many places is looking at Walmart. Let's see, Walmart. 113, okay. Earnings on August 20th. So this is kind of exactly what I'm saying, right? Like, I'm not going to do anything in Walmart right now because I feel like you're making it a little harder on yourself. I feel like you're making an already pretty difficult endeavor that much harder on yourself because the implied volatility is going to expand going into earnings. So I would say let's wait until August 20th. The man from many places, just me personally. But again, do with that information what you will. And so let's see. Big Deal Donuts is here. CA Paris knows about rigatoni. Ash Finn is in the house in the morning slot. Man, I appreciate you, my friend, very, very much. Christopher Springer is here. And let's see. Life in Life in Motion. I got it. I see what you're doing there. How about options on futures on stocks with an expiration past earnings report? Seems like most of the movement is at night pre-market. Okay, so this is a great question. These will probably be my final thoughts, and I'll get you guys back to Mike and Jermal, and I think Tim Knight is going to join the show. So the reason you're correct, the majority of the movement is going to be right around that earnings release. And so that is 100% right. The problem is their life in motion. When we sell premium, right, we want to take advantage of volatility going down. Volatility going up is going to work against us. And so because of that, it can be difficult if you sell premium 2-3 weeks before earnings. That implied volatility is going to slowly expand as you get closer to earnings. Traders are buying options. They're positioning for an explosive move. They want to be ready when the earnings report drops so that if there is a big move in one direction or the other, they're going to be able to take advantage of it. Well, if I'm sitting there with really any short premium strategy, a short put, a short strangle, an iron condor, even a short vert, whatever it is, I could find myself in a situation where, that implied volatility expansion, it's slow, it's methodical, it's gradual. It's slowly working against my positive beta efforts, right? It's slowly kind of eating into that time decay that I want to collect as I get, further and further along in the position's life. And so I don't necessarily like doing that simply because I think you're kind of adding an obstacle on the course to making money. And so I would rather wait for earnings, but you are correct that the lion's share of the move is going to be right there around the earnings release itself. But it looks like I'm out of time. I think I'm pretty much out of time. Man, I got to run. I got to go. That was Inside the Trade. I will see you guys later for From Theater Practice. But coming up next is Mike, Jermal, and Tim, and I'll see you guys later today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
it's just me. Hi. Okay. I didn't know it was my little show. How do you do? We are going to look at some charts, it seems. And I've had an interesting morning so far. Let me explain, because this is I don't do these because of personal anecdotes, because there's any relevance to my platform with yours or my positions. It's just a way to kind of set the stage. I came into the day exceptionally short, as I often do. I bought a couple of items that were long. And I was debating with myself about, like, how am I going to handle this? What does the week look like? Because I felt there was going to be a bounce. And my game plan was, all right, the two little positions you got long, you're going to sell those when you think the bounce is over, and just cross your fingers for the rest of it. So this morning, and if we may, let's just jump into the symbols here. Or wait, is there laughter? Am I talking to myself? Okay, no. If we can jump into the symbols, are we in the symbols? The two positions I sold out already, didn't take long, did it? There's just no bullish blood in me, was IONQ, IONQ, and I got out of that at a small profit, and PACS got out of that also at a small profit. Why? Well, it's not because they're bad symbols, it's not because they're bad charts. Here's my problem, especially with the PACS. PACS is a good long position in the beginning of a bull market. Nice as the chart may be, I keep thinking about context, and I cannot hold onto a long position in a market like this where everything is so richly valued. These were very opportunistic. These were a dead cat bounce plays, I suppose, although it's a very tiny cat. I only waited for like 10 minutes after the day before getting out of them. Suffice it to say, got a profit out of both. I'm out. I'm a pure bear again. And let me explain why, and this is important. Things have really changed. I know Mr. Perma Bear and all that, but listen, I think things have very fundamentally changed, especially for tech stocks. Here's the ES. We're range bound. That's fine. We are approaching the halfway point within that range. And so things are still kind of blowing into the bearish sales at this point. Not dramatically, but it helps because we're kind of in the upper portion of that range. What's really potent to me, and I think was a radical change that took place over Thursday and Friday, is this chart right here. This is the NQ. We've been charting this for a while. I've been watching that support. I've talked about it every day. And we broke it finally on Thursday. We stayed below it all day on Friday. And here's the cool part. We rallied this morning, up, 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 kissed the bottom of it, and then, now, we're still green. We're still up 70 points. That is so okay. Because when we were way up high, I shorted the cubes, and the 5 positions I got popped out of this morning because they were stopped out, I got right back into them again at better prices. So I'm net, my change from like Friday close to right this second is the 2 longs I had are gone. There was some dust in the air when I was getting stopped out and went back into them again, but the prices were better. But this chart here kind of encapsulates why I'm excited about the days and the weeks ahead from the bearish perspective. I would also say SMH, which I was short by way of September puts, I expanded that position this morning based on the strength. And this is a honey of a head and shoulders top on this. It's not an A, if I were to give it a grade, at least a B plus, maybe even if I'm in a good mood, an A minus. It's a nice chart. I'd especially give it an A minus, given the fact that we've got the NQ at our side there. But it's a there's other voices now. Okay, this is a whole new format. Go ahead, please. See? Okay, people are going to think I'm psychotic because either I'm talking to myself or I'm talking to voices out there. But you knew I had troubles anyway, so that's fine. I'm just going to press on. We'll discuss this later. Let me just press on here, just a few individual symbols. So the situation here is that I am so short I could jump off a dime at this point. And we're getting into earnings season now. And the broad setups with the NQ, with the SMH, I think set the stage for a nice tumble in prices because people thought, well, that's that on Friday. We've reached the bottom. I don't think so. What I was ready for was a bounce of some kind, which we might already be done with, what we saw last night and into this morning. So some individual positions in that light are, these are just individual shorts, Chicago Mercantile, CME. Floor and Decor, FND. This is down nicely. I don't want to make it seem like I'm hung up on exchanges, but here's another one, ICE. This is Intercontinental Exchange. So ICE is looking good for a long-term short. Carvana, you know of my fondness for this one. This is down today, about 2.5%. Beautiful diamond pattern. I've got January puts on this in size. And Lennar, this is also home builder related, LEN. This is down a little more than 1%. And from a long-term perspective there, I've always been really fond of this pattern. It sounds crazy, but January 2027 might be too impatient. It may take even longer than that to really fully unfold the depths that I think this is going to go through. Just a couple of last charts. I'm going to find out if I've got some compatriots with me here or not. FXI, I've got September puts on this. Not a good morning, obviously. We're up 2.74%. But you know what? I added even more because we are into the pattern, yes. But whereas this portion here, I think was very easy to slice through, easy down, easy up. Now we're getting into like the peanut butter part of the chart. It's thick, it's chunky, it's hard to get through. It's lovely that you're up FXI. That's good for you. I don't think it's going to last. It's going to exhaust itself. And the last one is the small caps IWM. I came into the day short this. I didn't get stopped out. It stayed below its trend line, remained short. And so this, I think, this failure too, although it's unrelated specifically to the cubes or the SMH, this is, I think, another feather in the cap of the bearish argument that we had an important change last week. Now I'm going to shut up and see if there's any other voices to join me. Hello. Right there?
Yes, I can confirm, Tim, that there were voices.
I don't know what happened.
People out there, there were voices.
We went into like a black hole. I don't know. Me and Mike were in there. We couldn't hear or see or talk to anybody, but we just came. I don't know what happened.
I was in a bookshelf like Interstellar. It was crazy.
Yeah, exactly. That's exactly what it was.
Well, no, I was struggling because on the one hand, I don't want to be rude. My mother raised me right. But on the other hand, I don't want our viewers to be subjected to me staring at the camera silently for 10 minutes. I'm not Buster Keaton here. So
you're the Buster Keaton of finance.
You did great.
So in any case, I'm glad you're there. We're here for each other. I hope I didn't step over anybody's lines, but all I saw is my pretty little face. And it's like, well, I guess I'll talk about charts just like I do in the afternoon. So I beg your pardon if I messed up, but that's the lay of the land.
No, it was great. I think we're right on board with you. I just threw on a downside hedge in NDX because I think, this market's having a really hard time staying afloat, as you mentioned. But SpaceX, I know you've been talking about this for many days, and you are basically saying we should expect to see SpaceX below 100. And it feels like that with just red day after red day after red day. What do you make of it?
It's a funny thing because I tell my readers on Slope, the best stories in my life I can't share. And SpaceX is a great story, and I would love to talk about it, but I really can't share it. I've just kind of I've dropped broad hints about, gosh, I hope it goes up. But the poor thing, every day, I didn't include it in today's charts because what's the point? It's just a new low every single day. Because last week when it took a tumble on Thursday, it was because, they had to scrub the rocket launch. Well, Friday night, the rocket went smashingly well. It did great. Well, it didn't help, did it? So I don't think they've deigned to give us an earnings date yet. They're taking their sweet time. But those first two Rock'em Sock'em events are the earnings and the first release on August 11 of the 20% shareholders. That's going to be really interesting. We could see double digits by then, I think. But it's just, wow, it's really nasty. And this is a lot like Facebook was. Facebook's turned out to be a fantastic stock over the long term. Its first, 6-8 months, something like that, it stunk. It was a terrible stock.
Yeah. Yeah, I think we should expect to see more volatility. That's what comes with the territory with IPOs at the end of the day. So even if SpaceX is at 300 by before the expiration of my long call that I own, we'll still see some. We'll still see some.
There'll be some time.
But Tim, appreciate your time. And we'll catch you a little bit later.
I'll see everybody this afternoon. Bye bye.
Sounds good. E-mini sliding a little bit, trying to catch a bid though, up 22, Nasdaq up 250. The Dow is down 118 points. The Russell is up. So this is just a repeat of last week. The Dow down, E-minis and Nasdaq up, selling from the highs, lots of single name volatility, but we have tons of earnings reports coming out this week and next week. So keep your eyes peeled, but we're going to take a quick 90-second break. We got Kevin Davitt from the Nasdaq on the other side of it. You're watching Tastylive.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to Nasdaq, all CME one click.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Get live trade ideas,
Technical analysis,
earnings setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to Nasdaq, all CME one click.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got the E-minis up 20-ish, Nasdaq up 200-ish. The Dow is red, and the Russell just turned red, interestingly enough. We got a choppy market, two-sided action, red and green across the board. I'm here with Jermal, and of course, the one and only Kevin Davitt from the Nasdaq. Kevin, how you doing today?
Doing great. Great to be back.
Well,
how are you doing?
Doing great.
Good.
Did you watch that game yesterday?
Which one?
The match?
The match.
Soccer match. The football.
Oh,
match.
I did. I mean, not a huge soccer fan or football fan. Watched it with my nephews who are, and like Spain dominated. It was a matter of time before they scored. It was entertaining. I think it was American in the sense that like it was commercialized, and I think we came off well. What's your overall?
Yeah, it was fun watching it with I watched it with a couple of friends at a bar. That was really fun. Just hearing the noises, during the big game was crazy. 1.5 billion people in the world watching that thing. How about it? 1.8, excuse me.
But it was few more than this show.
Yeah, right.
Just a few.
But it was interesting watching with the guy who played college soccer. That was really good. Even in a game that was mostly defensive, it was kind of fun watching it with him. So that was cool.
Where'd he play?
I forget. I don't remember.
Yeah, it's fun to watch something like that with
Lehigh?
people that get the strategy, which I most certainly don't. But I understand some option strategy.
Hey,
so
apparently we do too, because we are 2 for 2 with the Nasdaq downside butterflies, thanks to the liquidation event on Friday. It was literally, I'm not even kidding you, it was a
he was
1
singing the
day to
praises.
go, 0 day expiration.
Yes.
The 28.1, 27.9, 27.7.
Oh.
And we had that 2% sell off pre-market. And I was like, this is going to be a nice winner on the open. And it went from basically being worthless to a $1,500 cost. I made 850
positions like that where you can sit on them and say it wasn't, your loss is small. I love things where I could lose a relatively small amount, be right once in a while like that, and pay for the next 10.
Yeah,
exactly.
That makes me happy.
Yeah,
good.
So I got in just before the show started, so I'm back in to the downside butterfly. But it's been a great hedge, and that's how we've been using NDX ultimately, is just hedging against these other individual positions that we've got, especially with earnings coming around the corner over the next 2 weeks. So I put on a 11-day end of July cycle downside hedge. So this will ultimately cover me if we do have another liquidation, if we get some bad earnings reports. This will hedge a lot of that.
Well, that leads nicely into some of the things I was hoping to talk about. And this first one is the fact that liquidation was led last week by the semis, and they are more substantially exposed in NDX. And at one point, Apple surpassed, which has been outperforming, surpassed market cap of NVIDIA. They ended the week essentially even. So my question to you, to the audience, is kind of like, what little thought experiment looking forward, who would you rather ride? But really, option players know that you don't have to look at it that way. Like, how would you fashion a position using options to express a view looking forward? And I think it's an interesting one. I mean, these are the two biggest names in the index, whether it's the NDX or other large caps. What's your outlook?
So I would say as an options trader, my first thought is to look at the implied volatility differences, and they're pretty substantial. So NVIDIA has much more implied volatility than Apple. It's also a lower price point. So if I were to choose between like an undefined risk, like I'm selling a put or selling a strangle in NVIDIA, I would lean towards that sort of strategy with NVIDIA, with higher IV, lower price point. And then Apple, higher price point, lower implied volatility, I would lean more towards debit strategies or defined risk strategies, because the less implied volatility there is, the less premium there is to collect, which is always going to just push me closer and closer to debit trades like a diagonal spread or a calendar spread.
Well,
completely agree. Yeah.
Yeah. Moving on visually, and the last point I made was about the semis. The story last week was the semis. And the swings that the Philly Semiconductor Index, the SOX, have been making, which is arguably kind of leading the market. We have a different visual if you have it. It's the SOX moves. Anyway, if we can't get that up, here's the story. SOX, absolute, all positive numbers, close over close, 50-day moving average, up to, here we go.
Oh, this one?
More than 3.25. Okay. Now, look back, comps are scary. And I think this is going to lead the market, if those ranges sort of abate, come in, I would expect the market to heal. I think it's very much going to be an earnings-led story. Does this give you pause? Does this make you want to potentially sell some downside in the semis? What way do you look at this?
Hold on. So this is the one day percent change on average over the last. But what is this?
Over the last 50 days.
Okay.
On average, the stocks have moved more than 3% a day.
Basically
it is unusual to see that sort of volatility over any lengthy time period. You're talking about COVID. You're talking about, like 2008 and the dot-com sort of run up and implosion. So we're seeing unusual vol. And to your point, right, looking at the implied vol on those names, NVIDIA is sort of in the middle of names like Micron and AMD, which are very much well represented in NDX. How do you think this plays out, which will certainly have ripple effect on the implied vol for those options and at the index level?
I think it kind of plays out at some point similar to what we saw a little bit on Friday, where there's going to be some I mean, look, it's been a crowded trade. It's part of the thing, right? There's nothing wrong with these companies. They're great companies and they're making money. And I know a lot of people want to talk about the debt and things that are going on, but they're actually great companies right now. It's just a crowded trade for the most part in the market. And so I think we're going to see, some days like we saw on Friday, but then we're going to see bounce backs like we're seeing today. And I'm just, the one thing I am interested in is earnings. How is it going to play out for earnings? I think, they're all making money, but is the expectations too high? And are we going to see sort of these pullbacks as a result? But I also wonder about vol. I mean, I'm short vol in many of these names, but I'm also looking to get out prior to earnings. That's the other thing. I'm not writing these through earnings. So I think that's ultimately how it all plays out.
I tend to agree. And you sort of hinted at this started when you're looking back a couple of months with upside volatility. And option traders understand that, but generally the term is associated with downside or moves like we saw Friday. But the pops have been with similar velocity on a lot of days, and that really lends itself, I think, to options exposure. Moving on, we know that in NDX and kind of across index option markets generally, people look to potentially benefit from implied vol being priced at a premium to what's subsequently realized. And over long time frames, that tends to work. But as this group and a lot of the Tasty audience knows, it's all about like, how do you manage when you see those weeks like we had in early June, a little bit last week, when spreads get threatened or you blow through them. So I have this look at 5-day implied vol and realized to match up, which like the subsequently realized. And it shows how NDX has performed year to date. And it is like what you would expect. Early in the year and in the midpoint, like selling volatility kind of in a vanilla wrapper worked fairly well. Since June, it's been challenged. Like arguably options have been cheap and those premium sellers would probably have been challenged. It looks like vol is normalizing now. If you look at 30-day vol in NDX, it's above 30 for the first time since the tariff timeframe. But we're going to see that big move from early June fall out of that window this week. But I do think this does come back to earnings. So this week we got Tesla, Alphabet, a couple other big ones. And then next week is like the mega cap. What thoughts do you have? There we go. A nice earnings calendar. Yeah. What, if anything, I think you, Mike, arguably spoke to it already as you put on these downside plays that if you're able to monetize it and the timing works out, are you looking to play ahead of single name earnings or are you more of a like react to them?
I'll definitely play ahead. So I'll place trades for the day of, like if they're announcing at 3 o'clock after the close, I'll place a trade at sometime between like 2 o'clock and 3 o'clock if I'm trying to really pinpoint my strikes. There's also a scenario where like if the market sells off and you're bullish on a product that's announcing next week, maybe you throw on something for like a pre-earnings move and then you take it off before the earnings announcement to just get out of there. But I think I'll be doing both. I'll be placing earnings trades. We like to do really near-term calendar spreads and diagonal spreads. So those are nice where you can have a really high reward relative to risk, to your point. And then let's say there's a massive move to the downside. Like I'm just going to be taking my shots at some bullish plays there because most people trading these markets want these things to go higher and they're looking for those opportunities where you can get in at a much lower price. So it'll be a little bit of both. But the Nasdaq implied volatility, to your point, for the next 4 days, which encompasses this week, 700-point implied move. And then you look out to the 14-day cycle, 1,100-point implied move. So you're still seeing a little bit of a near-term implied volatility skew here, maybe just because nobody really knows how this is going to go. And we're getting a little teaser this week with some of these names that are coming out.
That's well put. So to your range point, past 2 weeks, we've seen ranges well in excess of 1,000 points. And to your thought on diagonal, I have a look at NDX at the money implied vol term structure. And here you see that kink that you're talking about. It is next week where you have that mega cap and then vol normalizes. So that's the one. Yep. Okay. So I think this tells a story and it might line up for some interesting diagonals. You see the market pricing next week's potential vol around these big name earnings. And then the triangles denote the forward volatility that the market would need to realize to justify roughly 27% at the money vol for the following week, that 1,100 point range. The market's pricing in potential fireworks next week. What thoughts? Like, would you be inclined to potentially sell a little bit of that and own a couple weeks later? That's where my mind goes, but I'm not necessarily saying that's the play.
Yeah.
Well, first of all, this is an amazing visual because this is earnings implied volatility, regardless of what you're looking at. Like, this is what it looks like. And then after earnings, you see the crush and everything gets to a lower level. Like, all of these will drop to 24%, let's just say. So that's how you visualize this, where you're selling a weekly cycle, you're buying a 3-month, 4-month cycle at that low implied volatility exposure, and then everything gets crushed down, which is how you can make money on both legs. So this visual, take a snapshot of this in your mind. Like, this is how earnings implied volatility is structured, period.
Yep, absolutely.
But yeah, I think looking out to a week or 2 weeks, like if you wanted to use NDX, I think you could, especially with the 4-day cycle being a 700 point implied move and the 14-day cycle being an 1,100 point move, selling the 4-day and buying the 14-day, I think is the way that I would do it. Just like selling that really high implied volatility premium and then inventorying some of that delta for next week, because you know that the 14-day cycle is going to hold on to value because there's just there's so many unknowns with how many names are reporting next week that I think it could be a really interesting trade. If you're short the 4-day, long the 14-day, you know you're getting all that extrinsic value out of the 4-day cycle.
You got the Fed next week too, I believe.
Yeah, I kind of forgot about that.
It's Warsh's second meeting, and like that CPI, that inflation data last week sort of quelled some of the rates fall, but you never know. And your point about that 2-week cycle likely holding its premium relative to the near dated stuff, I think is interesting. And really, I'm here, like I say, planting seeds. And I love the way you guys explain things like diagonal opportunities and having on those, what I typically refer to as slow cooker trades, where you kind of don't babysit them. And if you get a move like we did on Friday, you get to monetize that. Great opportunity. Thank you guys for having me in.
I just put that trade on too. Actually, I followed your lead into that Nasdaq trade.
Nice.
To the downside. So it works for me. I mean, again, I'm short vol and, and again, this is short vol in names that are prior to, they don't have earnings yet. So like Dell is one of them. I'm short in the August cycle, has earnings after that. I'm doing a couple of those, trying to take advantage of how high some volatility is in a lot of these names. But to have something on like that is nice.
Yeah. Little offset.
Yeah. And I think really the question is, for a lot of these earnings reports coming out for the NASDAQ component specifically, is like, how big is this demand and how long is it going to last relative to the cash flow that they need to absorb for all the expenditures? And that was like, we had a guest on that was like, this is why this thing could unravel. And I think it's spot on. Like, because at the same time, when you look at NVIDIA's projections and what they talk about, they don't say like, oh, we are doing our own thing. They're like, we have deals with Microsoft, we have deals with X, Y, and Z. They're all intertwined together. So if one of these things falls, like all of these things are going to fall. It feels
and
like.
You saw that Friday with the Chinese model, performing exceptionally well, apparently at a fraction of the cost. Like what does the end user ultimately default to? That's a big question mark. And those margins are going to reflect it down the road. So
for me too, earnings depends. How I play some of these earnings depends on these first couple of names. So, for example, ServiceNow, like that's going to be the one of the first service names to have earnings. And we see a lot of the times, like if one of these things sneezes, the others catch a cold, and you can kind of have an idea of how to play them on earnings. So a lot of times we've done this last cycle, I should say, we did a lot of upside calendar spreads. maybe this time it might end up being downside calendar spreads. Who knows? Put calendar spreads just because maybe that's what's going to be the trend. Or maybe they don't really move a whole lot. And just because they beat but don't really beat expectations, then it's like, oh, they don't really move a whole lot. And so the big moves don't happen. So I will see.
Yeah, by the time NVIDIA reports like in late August, the story has largely been told and it's by all their customers. And if history is any guide there, it tends to perform well into the numbers and then walk it back a little bit. Again, who knows here, the sentiment has shifted as evident by like, watch the semis. It's your leading indicator day after day. And I don't think that's going to change anytime soon.
No, it is. Just seeing the moves in the rotation. We talk about it every single day. Today, it's the semis day. And so those have been up, at least to this point. Market seems to be kind of figuring out what it wants to do here, but it's a semis day, and the semis are up, and the consumer staples names are down, and so software names are down. That's been the most fascinating thing over the last
relationship
since July. It's been very prominent.
Yep.
And I think just looking at these levels here, so I have this drawn in the Nasdaq futures, this 28.5 level, and you can see it's just been a bounce setting here. We just dropped below it on Friday, but looking at NDX. I think something interesting is that same level, 28.5. You can see we've bounced a handful of times from there. And on Friday, we dropped below it, but closed above it. So I think if you were to do something and structure something for this week, and you can see this here, like if you were to buy the 4-day and just set up a calendar spread, buy the 4-day for a 700-point implied move and sell the 3-day, like this is an interesting setup. And I'm curious to see how this is priced if we go all the way up to the expected move and down to the expected move. I just want to see the difference in the call side. So like 29.5, if we buy the 4-day, $6,500, that's the wrong cycle, 3-day, and then do the same thing, 29.5. So you can collect just over half of the value there. And it's a $2,500 trade. So it's still not, it's an expensive trade for sure, but you can really reduce basis on this trade. And if you get any kind of rally, this is going to be a home run type setup. Especially after Thursday. But I want to see the 28.5, which is that level we drew in the sand here.
So you're talking kind of the skew look?
Yeah, just to see what is available here, if anything. Yeah, look at that. That's
steep
crazy.
Last week.
That is nuts. The 28.5 is of course, we're much closer to the price here. 24K, and then you look at the 3-day, and the 28.5 is, drum roll please, 20K. Okay, so you are. So the put side is insane. The ratio that you can collect here, like you're buying $6,400 on the upside, collecting $3,700. So you're about 50%. But to the downside, you're picking up 21 to against 25. So the ratio's there. And I think if you went further out, you would probably see a similar thing if you just go to like the 28 flat, right at the expected move, coincidentally. The 3-day short and then the 4-day long at 28, you're looking at the same thing. So that's kind of wild. 13K for the long and 10K for the short with a 1-day difference. Like the put skew is there.
Yep.
Mm-hmm.
Yep.
Mm-hmm.
Very, very crazy. But I think the nice thing about this butterfly that I put on, so we can show this here, the 11-day butterfly. So again, 2 for 2, trying to go for 3 for 3. The first one was a very similar one, 27.7, 27.4, 27.1. That was a $200 winner. I'm just trying to keep these like at $1,000 or less, these butterflies. So the last one was a $7 debit exactly. Got so lucky with the downside move on Friday for that $850 gain. And then this one I got filled was exactly $7 as well. So that's the 28.2, 28, and then 27.8. So it's a 200 point wide. But this is still a substantial max profit relative to max loss here. And it's an effective hedge. Like putting up $700 to make 19K if you just time it perfectly. Of course, I'm not trying to do that or playing for that, but to your point, it's that downside hedge that just encompasses the whole portfolio. Like if I just held this to expiration and we ended up at 28,000, anything that would happen in the portfolio would be offset by this butterfly.
So I got a question on the execution side. When you're getting into these things, are you working it mid-market, and what has the experience been there?
It's been good. I was filled in like 10 seconds.
Yeah.
5 seconds. So yeah, it'll chop around just because these are super liquid markets, but the pricing is high. So you should expect to see a little bit of a wider bid-ask spread. But all else equal, if you're talking about a $28,000 product and you see these options that are 30K, like the fact that you can get filled instantly speaks to the liquidity factor. So I was filled. I just put it at 7 exactly.
We hadn't talked about that prior, but just anecdotally, when we're talking to bigger kind of institutional like end users, and we're doing execution quality metrics, we're comparing that to the Qs. And it's difficult for people to think in terms of like that magnitude, that 40X, when you see that Qs market that's a couple pennies wide.
Yeah.
But quantitatively, we are seeing NDX execution quality on par, and in many of these relatively shorter dated terms, better. Plus, you have that sort of cash settlement, European certainty, and potential tax benefits. Again, asterisk there. I'm not a tax guy, but the stuff that your audience knows, particularly cash settlement, not having to worry or necessarily babysit a position if it's right at strike at expiration. So, good. I'm glad it might take a second or two, but that you're getting filled mid market on an index with some oomph.
Yeah.
So that thing is centered around 28K. That's a price we last saw on May 5th. This trade encompasses, like you said, Tesla's earnings, Google's earnings this week. It also will capture Apple's earnings, which are on the 30th after the close, meaning that this will be within that.
Meta, Amazon next week.
Microsoft, Meta, and Amazon as well.
And the Fed.
Exactly.
Yeah.
All of those
Got
things.
Got it all. But yeah, this is, so the analysis tab is a super useful tool. If you haven't checked it out already, definitely do that. But I just have this pulled up. I'm already filled on this trade, but just looking at this butterfly and without changing implied volatility, I just pushed this to the end of this week. So the theoretical P&L, if we drop down to 28,000, is about $600 on the $7 debit. But the further I push this out, so we go to Monday, Tuesday, Wednesday, Thursday, now we're looking at, if I do nothing and I just hold it and we get a sell-off towards 28,000, now you're looking at a $2,500 theoretical winner. Just by the passage of time, implied volatility will ebb and flow here, but really like the passage of time means more to this type of near-term trade because it doesn't matter what happens on IV if we're at Friday and we're at expiration. Like the IV means nothing.
Yep.
So I think this is, I love these trades in NDX. We've been doing them in SPX too, but NDX is really nice because you have a huge max profit relative to the debit paid. And if you get that move, like we showed, like you don't have to hold it to expiration. Like you can have this theoretical P&L. And this is, we've realized this a couple times already. So you hold it for a couple days, you get the downside move. It's a nice hedge against debit paid. And we're talking like closer to 100% of the debit paid here with a $7 debit on entry. And again, the markets will chop around if you look at the mid price, but I just picked the number of $7 and I was filled in like 5 seconds.
Yeah.
So, love it.
Thank you guys so much for having me on again.
Absolutely.
See you, man.
Yeah.
Talking about it.
Absolutely. Lots of insights and we'll keep an eye on these markets. I mean, you can see by the NDX implied volatility, you've got huge implied volatility in this next couple of days here relative to next week, but we've got a myriad of earnings this week and then a ton next week. So I like that this butterfly encompasses all of that. But yeah, we're going to take a quick 90-second break. Join us on the YouTube chat if you haven't already. We're streaming live on the Tastylive channel, but we'll see you on the other side of this break. You're watching Tastylive.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control From microgold to Nasdaq, all CME one click.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From microgold to Nasdaq, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. You're watching Tastylive. She's Liz Deerking. I'm Chris Vecchio. Liz, hope you had a nice weekend.
I did. I was in plays. I wasn't in plays. I watched plays all weekend. My daughter had her last, she runs a production company, and her last performance of her production company before she goes to college was this weekend. It was fun.
Good on her.
Yeah.
I'm assuming it was a well-run performance.
Yeah, she runs like a well-oiled machine. I mean, this girl is going to be, she got voted, and this is not me, she got voted most likely to become president of the United States because she runs everything in the high school.
Apple doesn't fall that far, as they say.
No, I was a little wild in high school. She's hey, I like the
Maybe
glasses.
she learned.
New?
No, I found them. I have the old ones here too, so we're good.
So how was the birthday weekend?
Filled with wildfire smoke and tornado watch. So
You should have just burned your lawn at the same time the fires were going, and nobody would have seen the difference.
no, I need to spray these chemicals on when it's not going to rain. They need like 5 days of no rain for them to stick. So now I'm hoping for a window here. In fact, yeah, I'm not going to get one tomorrow. Rain, Wednesday rain. I think I can do it Thursday morning. No rain until next Monday. This is very uninteresting.
No, this is interesting to me because Thursday morning you're going to blow your yard up before you come on air with me, or is this going to be after?
Maybe I'll have like my hair singed back. I'll have no eyebrows. Characters.
Perfect.
All gone. S&P 500 here today was what an interesting weekend for the headlines, given what we were seeing coming out of the Middle East. We got that gap open higher in oil prices, but they haven't really stuck around. Oil's actually flat now on the session, back to that Friday close of 81.76 or so. So off the highs near 84, but the stock market slouched as well alongside it. I'm looking at the S&P here, only up by 0.1% now, 75.04.
Yep.
7 points higher. That's a bit of a departure from the 75.50 where we started this morning when U.S. markets opened. You're seeing a little bit of a rise in vol here too. 42 IVR here, Liz. What say you?
A little bit of a rise in vol, but I mean, the VIX was telling the story this morning. You were looking, when we were supposedly going to open up 50 points, you looked at the VIX, and the VIX was only down a little bit. So I was like, if the VIX were down a little bit more, I think we were going to hold that rally. So I think volatility is telling.
Where is VIX right now? Sitting in at 1847? Still off by 30 cents, but...
Yes, it's down by 30 cents, but usually when you see the disconnect, so I would have thought it would have been down a little bit more, under 18, at least under 18 if we were going to really keep a 50-point rally, and we didn't.
No, we haven't. And volatility is climbing back here as the day goes on. It's not necessarily tied to oil. We certainly have a wide berth in terms of earnings this week. There's so many different things to talk about. On the low end, things like American Express and Verizon. On the high end, Alphabet and Tesla. Where do you want to start before we go into confirm and send? Because I feel like those are some of the things that we should be discussing here the next few days.
Okay, but those are Wednesday and Thursday, I believe, respectively. Nothing is today after the close or before the open.
Not that folks like that you would care about unless you're into Ryanair.
I love Ryanair.
No, sorry, that was before ours. Steel Dynamics, my mistake. Steel Dynamics, which I know is one of your top tickers.
So I have a tendency, Chris, and I know this is probably bad, but I know everybody wants to talk about the earnings before they do, but I'm a premium seller through earnings typically. I will pick a direction, but I will still be selling premium. So I usually, I like that new calendar. So I usually like to do it the eve of. So taking a look at this, if we're going to talk about your Alphabets, your Googles, we're talking about that Tuesday and Wednesday.
So let's talk about Novartis, because that's a position I put on this morning here, Liz, thinking that it's one of these earnings plays, right? We have something coming up tomorrow morning before the bell. It's the largest market cap company in the first 2 days of the week, so probably draws some attention. Unfortunately, when we go to the trade tab, there aren't any weekly strikes. So I'm kind of relegated to 32. I'm in at the 145, 150 short put spread here. I know it's pretty tight. We're only about $2 away from the short strike right now, but it was collecting a third of the width of the strike. It was giving me risking 3 to make 1, around a 60% probability of profit. So fits the criteria. There's a little bit of a catalyst here ahead. Why not take a little bit of a roll? 91 IVR.
You hit the gold star with all the tasty mechanics there. You're a third of the width. You're right on there. My only caveat is, have you traded this before?
Novartis, no, but it's thin, and yes, you can see from the open interest, it's not exactly like people are swimming in these options right now.
They're not swimming, and I see a K in the on the top volume bar for just the stock, and so that's one of my red flags. No, that's okay though, because what do you have here? You're in the 32-day. I'm going to assume that you're going to try to get out pretty quickly. Those option markets are decently wide as well. I have no problem with the defined risk trade in an illiquid product if it's something that you wanted to get. I like it. Ooh, I can hear them all.
Oh, and we get to hear Jermal in the back room. That's nice. Producers, if we could kill Jermal's mic, that'd be very helpful.
I think he misses us, Chris. You were on vacation, not on vacation. It was your birthday, well-deserved day off. But I had Jermal doing confirm and send with me yesterday. I think he wants back in.
We're entitled. We are allowed to take a day off on our birthday per company policy.
I know. That's my favorite company policy.
It's a good one. It's a good one. All right. So, Novartis here, maybe it's turning a corner. It seems to be rounding out a little bit. We have the earnings tomorrow. I look at the IVR. One thing that, you mentioned the volume here in the market. Yes, 1, 2. Also, raw volatility itself, 30%. It's not super duper high. And it's also 32 days out because there's no weeklies around the earnings report itself. You mentioned, though, getting out sooner rather than later because maybe there's some lessons learned here for some things that maybe I didn't do in the past. Last week, we had ASML earnings that had come out. I'm still sitting in at 32 days right now, and this position is still kind of working. We're above the short strike, but it's underwater. I'm not thrilled with how it's performing here. I might just take this off at a small loss, but some things to consider. If Novartis gives me a pop the point and it goes reasonably into the money, which is going to be difficult because it's so long in duration, then I'll probably take it off maybe like 30% max profit instead of the usual 50.
Of Novartis. Now, this one causes me heart palpitations, your ASML, because you are still so far away from the at the monies and it's not working. It's so hard for you to say, take it off for a small loss. But it was a small win, Chris.
Teeny tiny one. Teeny tiny.
Teeny
but yeah,
tiny.
So that's kind of how I'm thinking about it. Like what mistake did I make last time there was an earnings? But ASML, should have taken it off right away. It's kind of stuck in it now. It's still doing the things that I wanted to do, but it's not performing as crazy as it should have been. Earlier today, it was been doing better.
Well, and I like how on this network, everybody trades very differently. Everybody does. And I like that you're looking at your earnings trades, kind of going 32 days out. Now, granted, Novartis, you had to because there weren't any nearer term ones. But even when you looked at ASML, you're a little farther out, right? So what that means is you're not going to be able to get out. Even if you get the move you're looking for, you get that slight vol collapse. But in the 32-day out, it's not as prevalent as the nearer term vol collapse.
Yeah, I thought we'd have a little bit more of a bounce off our 50 by now.
Yeah.
All things considered. And it hasn't materialized. So maybe the thesis for why the trade should be held is no longer valid. But one of the things to consider today, it's really an earnings week here, though, Liz. For the macro calendar, I just want to point out this is a Fed communications blackout week. So we're not going to hear from all of our favorite Fed officials. I know you love them all.
I love that.
Liz.
I love that.
I love them all so much. But the next few days, in terms of like the next most important thing for the U.S. economy, we're reft to say that I can't find anything durable goods, maybe, but that's a week away. So this week, it's all about earnings, right? It's not about the Fed. It's not about the calendar, GDP, CPI, none of that jazz. It's all about the earnings here. So, Liz, you and I are going to have to stay focused tomorrow. We're going to spend a little bit more time on the tech giants because you say you like to do that the night before. That's tomorrow afternoon.
Yep.
Until then, though, I hear that we have some questions for Confirm and Send. Is that true?
These are all facts. Facts.
Those are all facts. That's what they say. All right. As always, you can send your questions into us right here in the chat on YouTube. If you're on the platform watching, come over to YouTube, join the conversation, like and subscribe, because besides from the live content here, we have a lot of pre-produced videos that we do on very specific topics. Today's signal versus noise. People have been clamoring for something on Rocket Labs, and indeed, there's some unusual options activity, so we'll go there. But send your questions as well.
Is that today? Oh, did you already? Is it already done? Is it in the clearing firm?
It is my next task.
Oh,
next task. As soon as we're off air, I'm back into the lab to get that video done.
You can't give it. Well, I'm going to try to get a prequel, ladies and gentlemen, if we can get that here. But we'll focus on this. We'll focus on this question first. Okay.
Maybe, but also send your questions in research@tastylive.com. And we'll put them up here in the show. Oh, okay, Liz, big earnings here. This is the first question. Big earnings are landing all week. When signal names that can move an entire index report midweek, does that give you pause about holding index positions like SPX or triple Qs through it? Or do the individual moves wash out at the index level?
Yes and yes. So I was talking this morning to Jermal and Mike about this. So I think this is a new era we're entering into right now, Chris. So and it'll only affect, like when you think about this, it'll only affect the really big names. Like Nvidia is 7%, Apple is 7% of these massive indexes, right? So there's a handful of names, maybe, you can count them on two hands, that can actually move an index after the fact. And what is happening right now is global trading hours, which I find fascinating. So this will be the first time that I'm watching. So NVIDIA is going to release at, I'm making this up, at 3:15 my time, 4:15 your time. Markets are closed in NVIDIA options. But guess what will be open until 4:30? SPX options. So if you wanted to make a play in something that you can close out, how many times have we seen Nvidia? I'm just putting poor Nvidia under the bus right now. Nvidia, the earnings come out, stock rises like a phoenix from the ashes, and then as soon as somebody starts talking, it comes right back down to earth. Where now we have the ability to trade these global trading hours in SPX. If you had a position on, say you took a moonshot in SPX and it moved to the upside, it could move that needle a little bit in these indexes, and that's a way to play it this earnings season.
Yeah, the level of pause it gives me is contingent upon what else I'm holding. So I'm thinking right now I have long deltas on in triple Qs, in MNQ, in Goog, in ASML. So I have a lot of big tech exposure.
Yes, you do.
Am I in 5 different trades there, Liz, or am I in one trade?
You're in 5
different. Well, but if you think about Google earnings, or Alphabet earnings, I should say, and then Tesla this week, right? If I'm in a Tesla position, I'm in an Alphabet position, Google, and then all of a sudden it's like, do I want to do something in the triple Qs as well? Well, if I'm already long deltas in those other 2 names, do I want to do a third long delta in the triple Qs, which given those earnings and their size, probably going to move the Nasdaq. So, I mean, that's really the consideration here. The pause that I have about putting on something in the index level is, do I already have exposure, for the earnings that are coming out in a significant enough direction? Otherwise, I may not want to put more long deltas on in triple Qs this week, even if it's something like short put spread at the 50-day, which has been working in the Nasdaq. I may want to do something different.
You're right. So old school, and I hope this is okay that I said this, used to call that a Texas hedge if you're hedging it with the same thing, right? So that's not something you want to do. You'd be doubling up your position if you were going to be going bullish, or putting something in the Nasdaq that can move it. So,
exactly.
Yeah.
Not necessarily. That's beta weighted deltas is the consideration, as Jermal always says here. Hey, we can go to the next question here though.
Okay, this is for you, my guess. The stock just went into a bear market and bounced right back out in a matter of days. When sector is swinging 20% in both directions this fast, what does that kind of whipsaw do to the strikes you would normally pick on a chip name?
So, given the chip names that we have in front of us, like a Micron, a SanDisk, these are names that are not like $100 stocks anymore, Liz.
Nope.
So typically, you're going to have to go out. You're not going out $5 wide strikes, or maybe even 10. You may be going $50 wide. And that's exactly what we did with ASML. I think we're out like $40 wide on that. But when you face this kind of volatility, the 2 things that I usually do are I try to push my strikes further out and I tighten them up. Because if you're getting those kind of whips in the span of 2 weeks, then you have to assume that another 5%, 6% move could just be around the corner. And that may then put you in a position where the risk to reward isn't fantastic. All of a sudden, you're not getting a third of the width. You're getting like, we were looking at a trade today in Coca-Cola I was trying to size up. A nice trade, but 22 cents of credit for $5 wide strikes. Just move on. It's not there. So that's really how I see this. You got to take smaller positions. You got to push out your strikes when you see that kind of volatility.
Yeah, the common sense slide. But the options are smarter than me. Options are smarter. The options pricing is smarter than all of us together, right? So when you're getting those swings in both directions, you'll notice that the IVR for itself will be higher, which in turn gives you more premium for selling. So to Chris's point, you can go out a little farther with your strikes. You should be able to go out a little farther with your strikes than you normally would, but that doesn't necessarily mean it's kind of deceiving, because you can get farther, but the expected move is also farther. So right. you don't realize that when you're getting those swings, you'll see the expected move kind of widen out, and so you can get farther than you would have normally, but you don't see that the expected move would have been less if the volatility was lower. So get farther out. But common sense slide, make sure your risk reward scenario is there. I mean,
I'm just going out to the. One standard deviation move this week for the 4 days in SanDisk, for example, right now is sitting right around 1140, 1145. Is there a great risk to reward there? No. I mean, to go $5 wide, you're getting $1.10 in credit. Maybe it could be a little bit better. You could almost justify it if you went up a little bit more, Liz.
So you can justify it. So when you look at that brown bar, the expected move for the cycle starts at that brown bar. So the 2216.101, which is in the parentheses right there, is the expected move for the cycle. The brown bar does all the math for you. That's where the options are pricing, saying this is where we think the expected move for this cycle is. You have to bring it up. You have got to bring it up to right around the expected move.
And do you want to risk more than 4 to make one? $1.75 of credit for $10 wide strike? That's kind of what I'm saying. Like, if you go fishing down here, it's not exactly the mechanics that we're keen on.
No, 100%. I kind of agree with you there. But typically, you got to start around where the brown bar is. And if you made it $5 wide, those markets are a little wide, aren't they? Oh, Chris, take a look at the 1220s. 35 at 39. No, thank you.
Bid-ask is not great.
No.
Not great. Mm-mm. Let's move on to the next question here. Oil IV. It feels like this is another one in my direction, Liz.
Oh, yeah. Well, you love oil, Chris. Hold on. Oil touched 90 over the weekend on the Iran strikes and pulled back this morning. Energy IV keeps spiking and collapsing on headlines. Is there a structure that lets you sell that inflated premium without getting blown out the next time a headline hits over the weekend?
I mean,
if Chris can answer this question, he wouldn't be working anymore.
You get, I mean, come on. I mean, that's actually the honest truth. You can't, I don't know. I haven't figured out how to mitigate weekend gap risk. Certainly I just re-upped my CFA charter. So I don't think they put anything out in the education about how to do that either. But that's really where you have to go into the risk structure, right? You're not going to be selling premium naked through a weekend. You got to do things that are risk defined. You probably want to avoid things that are short dated. So oil has a lot of strikes now, as does USO. I wouldn't be looking for something that has like a Monday expiration, if you will. Lots of gamma risk there, but you just got to kick out time. You can't really mitigate it except for giving yourself a little bit more duration if you're going to be trading oil around these headlines.
So can we take? You can tell me no because you're in charge. But do you want to go to the USO option chain? Because I do think, I'm glad you said that. So one thing that you can do with USO, and we were talking a little bit about this as well, USO does benefit from the forwardation and backwardization of the forward curve of oil. Mm-hmm. So something like a diagonal here. So to get yourself out of the way with all of these, to your point, if you think it's going to go down, you can do the 32.60. So you would sell either the puts or the calls at the expected move in the 32 or 60, depending on your assumption in oil, and then buy something a little bit further out. Now, I am in USO. Like I said, I'm spending too much time with you, Chris. I'm a little bit bullish oil. So I have that on, and it's been working pretty well. So you do a 30-day, 60-day diagonal, and that will get you out of the way of those weekend moves, the weekend kind of angling, whatever they're going to do.
But you're not doing like, see, I'm just thinking about the strikes here going through next weekend. So I suppose next week is the 25th, 26th. Sure. Like we're not going to be doing something that's necessarily like, the 4 or like the 9/18, for example, because that puts us through the weekend risk, and all of a sudden we're less than 5 days to expiration. So you really can't avoid the weekend gap risk. And Liz, like, I really appreciated the pithy comment. If you and I knew how to get around that, we would be not doing this here on air. We would be
you
sitting
and I would be on a beach somewhere in the Caribbean.
Yeah, we'd have machines doing this in a bunker for us, and we'd be sipping by, at like the end of Trading Places. Looking good, Miss Deer King.
Feeling good, Mr. Vecchio.
Right? So
exactly.
And if someone figures this out, please let us know. Research at tastylive.com. We'd be more than happy to help you monetize that view.
No, but what we're doing, but you and I can place like low cost trades. So take a look at this. So avoiding that weekend risk, if you wanted to, you can put $223 in with potential to make, I don't know how wide that is. You're in a calendar, but with potential to make money, you can use options to make little bits. Now, this isn't going to send your kids to college, Chris. This one trade where you're spending $200 is not sending your kids to college, but you could turn that $200 into $300.
Right, and you do that enough over time for years, and it compounds. That's the goal. Consistency, consistency. All right, we have one more question left here. Liz, let me send this your way.
Okay.
Tesla reports Wednesday after the close at 380 with options pricing a 7.6% move, well above the 4.4% average. Deliveries already beat, so it comes down to margins. When the price move is that much bigger than usual, is that a sell, or is it wide for a reason?
I'm assuming that they're saying sell premium, not just short Tesla. And it is wide for a reason. I mentioned this in 2 questions ago. The options are smarter than I am. So if they're saying that this move is bigger, sometimes it's just smoke, but sometimes there's a reason that it is pricing in such a good move. And I think Tesla is a unique stock, because I think they might announce SpaceX merger.
Who buys
There's a possibility. I do think it's on deck. At some point, I think Tesla and SpaceX are going to be combined. I don't know when. And this volatility is very weird. If it's usually 4% and they're pricing in a 7, I think 4 is low. I think 7 is normal for Tesla. It can move.
Would this happen before or after the lockup period ends?
August 11th is. I have Tim Knight in my head. August 11th.
Next July is when the lockup period fully, like 100, we can get to the full float.
Okay. So so next July, full float.
Yeah.
So 1 year.
1 year.
I think it could be before. I mean, and like I said, I have Tim Knight in my head because I remember him saying August 11th, and the insiders can't sell unless SpaceX is over 175.
Yeah, there's a few conditions there for them to go into actually to offload, and if it's more than 30% above the IPO price, then an additional tranche gets allocated for or opened up to be sold. But it's only trading at 122 right now. I mean, Liz, when you see that there's like 20% of the flow coming into a stock like this with a defined date ahead, you're like, okay, do I want to be exit liquidity for those people?
Mm-hmm. Exactly.
I don't have any long. I have no exposure on this right now.
I have long exposure. I've been, since options came out, I waited a couple days, which thank the Lord. But I have been selling premium, and it's not that bad right now, right? So I sold puts, and they're slightly in the money, but I'm okay with the premium because it's just very juicy, and I'm going to kind of keep going with it. I do think SpaceX, in my opinion, this is nothing more than my opinion, is going to be a longer term bull. But to your point, there's lots of caveats. The Nasdaq bent the rules to let SpaceX in. They bent the rules for it, which to me shows I don't know what's happening in here. There should be some forced buying by letting them in, and that's not happening either.
Yeah, I mean, I'm going back to the Tesla question itself here, Liz. I don't know if the options pricing is automatically something to look at and say we should just look to blindly sell this. You mentioned Tesla being such a unique case. I don't think I've seen a stock like this in my lifetime. The Elon cinematic universe just marches to its own beat.
It does.
Yes, maybe it's a little bit wider than it's been usually, but you mentioned these external catalysts. You know, the market is giving us wide pricing for a reason. Now, is that consistent with the volatility increase that we've seen elsewhere in the market? Sure. Maybe this week, Liz, you know, all the earnings that we're seeing come out are going to get a little bit more juice to them because volatility, broadly speaking, is going up. But I don't know if that explains the full difference, though.
No, and it is really anything goes. It could go either way. Can we check to see where the skew is in this? And I know we're probably running out of time because I know Errol's on.
We got about 2 minutes now. We'll go to the 4 days. 374.
Yeah.
Let's just go. So we'll go to this 365 and the 385. I mean, you know, pretty flat, slight maybe to the upside.
That is pretty flat. I mean, that's pretty much give and take. You're so close that that's not even I wouldn't call that call skew. That's an even wrapped around skew.
And
that's interesting. And you and I both know that the earnings announcements are kind of like the wild, wild west. Whether or not they say something amazing, the stock is going to do what the stock wants to do.
I wish we could say this was even high enough volatility here. I mean, maybe the 83% volatility, you could do something like a broken wing butterfly or just like a put butterfly, a call butterfly, depending upon your directional bias. But it's only a 45 IVR. Yep. So, You know, speaking of butterflies, the Netflix one that we did at the end of last week, guess what? Did not work out. However, what's interesting is that was like a coin flip. Because if I had done it the other way, if we had done, you know, instead of looking long, we went short to the $6 out expected move, that's exactly where Netflix landed to the downside. And that would have been a money trade. And I could have actually done that on both ends, Liz. Maybe that's what I do for some of these high volatility earnings reports. Just place the out of the money butterflies. One of them might hit.
One of them might hit. And as long as they're wide enough, because what you don't want to do is pay too much for both of them, that if you make money in one, you lose that money in the other. So you got to make sure you get the prices right.
Oh, no, this one was like risking 1 to make 15. So I would have cleared like 7.5 times the down capital given both positions. So just tinkering in the lab. You're teaching me things, Miss Deer King. We're done here on Confirm and Send. By the way, if you want to send those questions in, research@tastylive.com, or put them in the chat here in the YouTube channel. Like and subscribe for more videos. And again, come back later. We have a Rocket Lab video coming up next. Yes, there is unusual earnings activity on the tape right now, so be sure to check in for that. Liz, I will see you tomorrow.
Goodbye. Thanks, Chris. Happy trading, everybody.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
What is going on, everybody, and welcome back to Risk and Reward. Today's been a pretty volatile day. I know we just got done talking about the Spain win over Argentina. I know I mentioned it this morning, but I got to mention it because the World Cup is only every 4 years. And I know everybody's ready to get back to some real football is what I'm seeing online. So let me know what you're looking at. Let me know what you're trading. We've seen a little bit of volatility getting into the market open this morning. Oh, by the way, Gus is going to be with us soon this week, which we still have to ask him about the trip because I'm really curious to know about the functions with some of the MLG gaming that was going down in Vegas too. So I know he's having a good time over there. So we got to welcome him back with a lot of questions when he gets back. So let's be sure we do that later on this week. But with that being said, a lot of volatility into the market. We got TradingView pulled up right here. And as you can see, we have it on dark mode. I could imagine from your perspective, it might be a little bit difficult to see what's on the charts whenever it's a white background, and then sometimes I'll have those hollow candles on. Sir, go ahead. Let me know if you guys like this. I know we got yellow and white candles this time. It's a little bit different from the blue and white candles that we had sometimes, but I'm kind of rocking with it. I think it's a vibe. I think it looks good. But if you guys don't like it, I might go back to the default blue and white. Not that it matters too much. I'm a little bit colorblind. But with that being said, the market opened up at about 8:30, and we're going to just take a horizontal line, put it at 8:30 Central Time, just so we can see how the price action has been playing out so far today. And we've had a couple opportunities, which we'll talk about here in a little bit. But what I want to do at the beginning of this week is just lay out the levels of value. If you're somebody that trades auction market theory, if you're somebody that views the market through auction market theory, we're going to lay out these levels of value that we're going to be looking at each day this week. And these are typically the levels that we trade off of on a daily basis. So we'll come back Sunday nights, plot our levels again, readjust them for the new week, but these higher time frame levels of value are the same levels of value we trade off of all week. So we're not moving them during the week. So it's none of that hindsight, kind of trade ideas we're building off of. The levels that you see us trade on Monday are going to be the same exact levels that we trade on Friday, and then it's going to switch again from a week-to-week basis. So with that being said, let's first find this vertical line so we can at least frame up what we're looking at. But what's going on, big deal? What's going on, guys? What have you guys been looking at so far today? What have you guys been trading? I know we've seen some more volatility into Nasdaq right now. We're trying to recover right now off the lows of 28,876. From there, we've rallied a little bit over 100 points, about 130 points off the low so far. Looking like it could be a potential reversal. If we put in a new low, we could probably see a little bit more downside. But with that being said, let's do a little bit of analysis on the day. And I'm going to find this vertical line. We're going to find 830. Which is about right here, and we're going to label that one as market open. So we're going to take all caps, market open, 8:30 o'clock Central Time. And you know what? We're going to actually make this white to make it a little bit easier to read. There we go. I think that looks a little bit better. Yeah, I like that. So as you can see, the market opened up. We ripped about, 50 to 100 points to the upside, and then we seen a reversal from there. So what we were looking at this morning was this level of value that we have down here sitting at 28,880. Now what this level represents is a bulk of the trading activity that occurred from last week. So in the eyes of auction market theory, the market is always seeking fair value. So what we like to do is we like to find higher time frames levels of value to just watch how the market responds off of those levels into the following week. And the reason why I like to use the previous week's data is because I believe that there's some of the most, it's some of the most relevant data for an active trader, right? Other levels are always going to be important, but the trading activity, the trading volume that took place last week is some of the most relevant data for the active traders into the following week. So with that being said, our value area high for that one was 28,880. And if we zoom out a little bit here, I think we already had these marked off. So let's scoot over here to the right side a little bit. And you can see we have these levels marked off as fair value. But maybe I don't have this bottom one marked off. So let's just mark that off together. We're going to take our text 880 for our value area high. And then we're going to take our value area low. That's going to be 28,719. 719 for the value area low. And just again, just from today, this morning, you can kind of see the acknowledgement or the response that we're getting off of that value area high so far. So it's going to be a key level for us directional scalper active traders to continue to watch, because if we continue to make lower lows, we could definitely dip into last week's levels inside this level of value, and then what we would be paying attention to is our value area low. But first things first is our value area high. We're getting a response off of that. So now that we're seeing a little bit of a reversal, we want to see if it's going to go ahead and take out the day high as the day goes on. But that's our next level of value. And then this next one is going to be our main level of value. So this level right here that we're marking off encompasses roughly 70% of the trading activity that occurred last week. So that's why, again, we just want to pay attention to see how the market, or if the market will at least acknowledge these levels. Again, for us directional traders out there. Let's see. With that being said, I see Jared, you're waiting for some earnings. What earnings are you waiting for this week? We'll get into that here in a little bit, after we can plot some of these levels down. If I can scoot over here to the right, go on a larger time frame, get a little bit better of a perspective for what we're looking at. So this value area high is going to be 29,867. Don't want to move that. 28,384 is going to be the value area low. So if this continuation or this trend to the upside continues, that would be a potential target. But let me make sure this is lined up really well. We're accidentally moving some things around over here. 384, pull that up just a little bit. There we go. We're just going to lock this so we don't accidentally move this throughout the week. Oops. Go ahead, lock that. There you go. We're good to go. And we'll come back throughout the week and watch how the market responds off these levels. And then whenever we take more trades throughout the week, these are going to be the levels we'll take a look at. But with that being said, Nasdaq's been pretty volatile, selling off towards its lows, getting a little bit of a reversal on the day. In the oil market, I mean, the oil market has been extremely volatile. And I'm not going to lie, a little bit long term, I'm bullish on oil. I think we're going to see a little bit more of an energy crisis. Could I be wrong? 100%. But I think we're just in the beginning phases of a potential energy crisis, which I could see oil then rip back to 80, 90, whichever levels it wants to go to. But if anybody's that's been following, I've been a little bit of an oil bull lately just because of that aggressive downside action that we've been seeing with pretty much no resolution. So it's extremely sensitive to these headlines, so I'm going to be paying attention to those. But for the most part, with the time being, I'm going to be leaning a little bit more bullish. And again, especially because of that downside we've seen put on some of these oil markets. And if I zoom out to the daily chart here, you can see most of the trading activity was occurring in this range at around 100. And again, this is a little bit more of a fundamental play that I'm trading. I don't typically trade fundamentals. Most of us as traders don't even acknowledge fundamentals. But again, oil can be so, headline driven, and moving off of these geopolitical events that are still going on right now. So I think oil's in play. For now, we're going to take our fixed range volume profile just to get a visual on where most of that trading activity is taking place. So regardless, if you're somebody that uses fundamentals to trade, maybe you only look at the technicals, maybe you only look at volume, whatever it might be, still having an idea for where most market participants are interested in this asset, I find to be really useful to still use at least. So we're going to go ahead and take this daily chart, take this fixed range volume profile from that initial breakout to the upside, all the way to the swing high, just so we can get an idea for where that bulk of trading activity occurred, inside these levels. So I'm going to mark this off right here while we're live together. We have this value area high. Let's take that back off if it wants to go off. There we go. I don't think it wants to. That I heard people don't like the Tesla AI Center. Yeah, I think anything that has the label AI in the name, you're gonna have a difficult time getting people to buy into. Because what's kind of funny and it's kind of interesting, right? We had a lot of these valedictorian speeches, or a lot of these speeches at graduations that occurred in May, and whenever they had mentioned AI, right, they were getting booed by the crowd, by most of the students. which is kind of funny and interesting because most of the students probably wrote their papers and did a lot of their homework utilizing AI. You know what I'm saying? So I think we're kind of seeing the same reaction from a human nature standpoint, how people typically react to new tech being in the market. But with that being said, I think whenever you mention AI or new technology in some fashion, you're not going to be able to get people to buy into that. I don't think that's going to come off very well. But now that this is unfreezing on us a little bit more here, we're going to mark off this level over here on oil. And again, from that initial breakout on oil through the consolidation that we'd seen, now through the pullback and then the reversal that we're seeing right now, most of the trading activity occurred within $105 and $85, $86, give or take on oil. So again, these are going to be the levels to watch out for. That's what I'm going to be paying attention to. And then again, one of the ways why I think using levels of value can be so effective is because if we understand there's large money that's able to actually influence the direction of the market, they need a ton of liquidity to actually fill those orders. So whenever there's massive orders wanting to be filled in the market, they're going to need the necessary liquidity for that. And finding the previous areas where most of the trading activity took place gives us an idea of where big money at least has the opportunity to fill massive orders if they want to. It doesn't mean that's going to happen. It doesn't mean there's going to be a rejection off that level. It doesn't mean there's going to be a continuation. It doesn't mean any of that. It just lets us know from a liquidity standpoint if these big institutions and anybody that can influence the market wants to fill those massive orders, that's where they have the highest chance to do so, and that's why we at least keep an eye on those areas. There's a lot of research coming out of AI stressing users out, free users train the models, endless talk loops. Yeah, I can see that. I can also see a lot of large language models just really capturing as much data as possible. So I can see it can kind of just be like a continuous feedback loop for a lot of AI users at the same time. It's a good point, big deal. Someone was telling me something about data centers and sterile cows the other day. Very concerning to say the least. Yeah, I don't know too much about that. Shout out to the cows. I love the cows out there. But I know there's been a lot of talk about, data centers taking over a lot of land and, the conflict that comes with that. So I don't know if that's what you're referencing, Range, but I know that's been a pretty hot topic of conversation. But as we move on from oil, let's take a quick look at Bitcoin, another market we've kind of ignored a little bit. We can't neglect Bitcoin. I think because it's been trading below 70,000, it hasn't been as attractive. But let's go ahead and at least frame up some of these levels that are going to be interesting over here on Bitcoin. But I mean, trading at 65,000 right now. We were trading at a low of 58,000. Like I said before, it does feel like there's a little bit of a sentiment shift when it comes down to crypto and just how we're kind of perceiving things like Bitcoin, Ethereum. And I mean, Bitcoin, Bitcoin, we know it's a store of value. That's the way that it's come off. I know Ethereum seems to have a little bit more utility considering the blockchain. I think NFTs was a great example of the utility of the blockchain. And you might find that funny. You might be like, yo, how are NFTs a great show of how you could utilize the blockchain? I think being able to have a public ledger, being able to show how you can own something from a digital standpoint, I think we're going to run into a ton of IP issues into the futures, and the only solution I can see to that is the blockchain. Yes, I think 99% of NFTs was a gimmick, but I think it did prove to show you could show ownership of a digital item or product or asset, whatever you want to call it. And that's something that I think we're going to need it more of moving forward, especially with AI, a lot of these deep fakes. I think we're going to need a way to legitimize or authenticate digital assets or digital products or digital ownership to anything. And I think the blockchain is the way to do that. Ethereum is the most popular blockchain that has shown it has the utility to do something like that. So whenever a huge issue arises, I'm really hoping that, Ethereum could come through. I know Bitcoin and the overall market follows the same sentiment, but in terms of what we've seen utility from, it seems like Ethereum is ahead in the race, and that's still in my opinion. So I'm going to keep an eye on it. And I'm curious just to frame up Ethereum while we're here before we move on to silver and gold. But it's looking like we put in a high on Ethereum around 48.50 and then a low at around 1900. We're kind of trading around that low right now. And so we're just going to take our fixed range volume profile and get an idea for where that might be before we shift gears here. There we go. There we go. And it's kind of funny. After we've been selling off to the lows, you can kind of see we've had a little bit more market interest, around 2100 on Ethereum. It seems like those seem to be more attractive prices for, investors to get involved at. Let's see what we got over here. Awesome. We're just gonna mark these off, and then we're just gonna leave them, and then we'll always circle back around to them. There we go. So yeah, no, we'll keep an eye on Ethereum, and maybe we're gonna start to get a little bit more long delta on some of these crypto products. I think now that like the downside momentum has slowed down, it's become a little bit more attractive to maybe start positioning and maybe not try to catch a falling knife. So that's kind of been the thought process over there. And lastly, before we shift gears here, let's take a quick look at silver. Again, seems like the top is definitely in on silver. At around 122, it seems like the top is in on gold. And it is kind of funny, if anybody has ever seen those pictures in the market where it shows like these very short-term market bubbles where we get that euphoric phase and then we get that cool-off phase, it's just very interesting to see a commodity or commodities like silver and gold perform in that way. And I think it really just shows how human nature never fails. Human nature plays out time and time again, almost in the same fashion. But with that being said, we're going to change these annotations to white just so we have an idea on the markings that we're making on here. So whenever we revisit these products, we have an idea of what we were talking about. But last time we spoke about silver, we were talking about how the point of control was sitting at around 76. Point of control still sitting at 76 on silver. That's a price level where the most trading activity occurred. So we'll keep an eye on some of these things over here. A lot of volatility. I mean, if we get a pop near this point of control on silver or gold, I'm not going to hesitate to put a little bit more short delta in, because even if we go through another crisis, I do still think that silver and gold are still a little bit overvalued in the short term, just because of that massive rally that we had seen earlier in the day. As you can hear, the pits behind is getting a little bit louder, a little bit more volatility in this market. Shout out to the cows. Shout out to the cows. They're some real ones. They're the unspoken heroes. But lastly, now we're looking at gold over here. So we're going to take the fixed range volume profile, take it from our swing high all the way down to our currently traded price level. Appreciate that, Luis. Busy day at the Cboe, 100%. A lot of volatility. Always really loud at market open lately, too. So it kind of makes sense with the volatility we've been seeing in this overall market. But yeah, morning, guys. Morning, Ranch, Jared, Luis. Big deal. D-John, shout out to the cows, man. I don't trade any cattle, but we'll have to look at the cattle markets here soon. But with all that noise, I'm curious to just peek back very quickly at Nasdaq, kind of see what's been going on. Go to this 1 minute chart. Right now, if anybody just joined, some of the levels we're paying attention to for the day is going to be 28,880. We were already paying attention to this level on the day before it put in the low there, but now that it kind of confirmed it, acknowledged that level, we want to even more so pay attention to it if we do trade back at these levels. But with that being said, it's looking like, especially from an order flow standpoint, if anybody else watches the tape, so far it's looking like the order flow is shifting back to the upside, with a lot of large buyers finally pushing the market higher and sellers kind of getting ran over right now. So if anybody's long right now, one of the main targets we're looking at on the day is going to be around these swing highs, where we have one at 29,048, and then we have another one at 29,194. And this was another trade that I'll break down later on Twitter if you want to check out the entries and exits for this trade that we took at the bottom of this trade. But some of the ideas behind at least taking profits is just paying attention to those swing highs, and that's how you can kind of frame up, certain areas of, where you might want to take profit. How long should you let this move? And I think it's also going to come into like, what is reasonable expectations, right? Is it reasonable for the market to trade up another, 100 points, 150 points over the next 4 to 5 hours, given the volatility that we've seen? It's like, yeah, I think so. And I think you can also use the options chain's expected move to acknowledge those levels at the same time. But what else do we got here? Roblox up, however, shorted got out. We'll take a look at some Roblox as well. What other earnings are you guys paying attention to for the week? I know we just went through some of the most popular products. It's looking like Roblox is ripping to the upside. I will say Roblox is one of those games that completely surprised me. I've been exposed a little bit more to that side of the gaming industry, and they're building out a ton, right? They even have their own in-game currency, right? Nothing new. A lot of video games have their own in-game currency, but I think when you have the ability to then attach things like the blockchain, right, to these in-game currencies, and to be able to transfer a lot of these tokens to whatever asset that you want to, I think it's going to be really attractive. But I mean, the community behind Roblox will fascinate you, right? I mean, the way that I was viewing it at first was like, oh, this is just a young kid's game. This is for younger children. These are the type of games they play. But no, I mean, there's a massive community behind Roblox, and it seems like they're just getting started. So Roblox would have a piece of my bet for what might be successful long term. That's not any advice over there, but I will say, just from what I've seen, Roblox seems to be heavily undervalued, and maybe we put on a position to reflect that here soon. But right now, Roblox trading at 54, looks like it's putting in a really nice day. I know we had some lows at around 40 on Roblox, now trading at around 54. But the community aspect just can't be understated. I think that's one of the best ways to view the potential growth of something, is the community behind it. And I mean, I've seen that now play out in many different industries, I guess you could say. But yeah, maybe a little bit more continued growth there. Let's go ahead and check out VIX Volatility Index. I know we had VIX up on the day for the time being. I know we may be pulling back a little bit more here now. If we can get this VIX. It's only right to look at the VIX while you're at the Cboe, right? Why you get the VIX pit, SPX pit behind you? But volatility right now trading at 17.5, 17.66 right now. Volatility trading at a high at 19.31 earlier today, before the reversal that we're seeing here now. But I mean, it's going to be really nice if volatility can start trading back above 20, and I think that's really when we're going to be able to take advantage of selling a little bit more premium at some juiced up prices. So we'll keep an eye on that. I don't know how I'm feeling about this yellow so far. I'm going to let it rock for the day. Maybe it'll grow on me, but I don't know how hot I'm feeling about this color theme that we got going on so far. Let's see what else we got. Boom, energy up. Yeah, we're getting some bounces in them. SpaceX, Oracle long. Yeah, SpaceX has been pretty disappointing on my end. Let me go SpaceX here. Again, just a complete sell-off from that initial hype out of the IPO. Now trading at about 123, so about $20 beneath the IPO price. So we're going to keep an eye on it. There's still a lot of volatility in there, so that's always nice. But with that being said, guys, we're going to take a quick intermission. But these are the levels that we're going to be paying attention to for the rest of the week, and we'll circle back around to that. But again, let us know what you guys are looking at. Let us know what you're trading. We will be back with more trade ideas later today as well. But big deal, Ranch, Luis, everybody else, thanks for taking the time to hang out. Be sure to stay tuned for more amazing content coming on next. We'll catch you guys next time. Peace.
To rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So So close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancelleri. Bam!
Get live trade ideas, technical analysis,
Earning setups,
option strategies,
macro insights
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
We're back. You're watching Tasty Live. It's just past noon Eastern here in New York, 11 a.m. Central Time in Chicago, which means it's a good time for a midday FX check-in with Glen Frybarger. Glen, welcome on to the show.
How are you doing, Chris? Great day to have a great day. Is the
It
smoke
is a great day to
cleared
have a
for
great
you?
day. Yeah, I can see a blue sky today. It's beautiful.
Fantastic. Likewise here, but still got the Monday fuzzies, so we're trying to shake those off, but harder to blame it on
Don't
the weather.
worry. The smoke's coming back. Don't worry. Don't worry. I'll be there. Yeah, no, we have it coming back in tonight, apparently. Where
Oh,
the air
actually?
quality's going to drop again.
What the hell?
Yeah, no. Yeah. Well, the fires are still burning. But, Glenn, before we hop it over to the world of FX, a quick look here at the market. When I got off air about a half an hour ago, we were only up 7 points in ES. We're now up 28 points, a little bit of a midday bounce back, 75.26 here. Glenn, we haven't spent much time on yields today, although Treasury yields are falling. I should say Treasury yields are rising. Treasury bonds prices are falling at the long end of the curve, which probably has a lot to do with what we're seeing in the world of FX here. So 2-year yields, 10-year yields, 30-year yields, those are all higher on the day. ZT 2-year yield is still not in a painful place for the broader market, nowhere near 5%, but you do have your 30s up near 5.1, 5.2% right now. With that backdrop, I want to bring us right into the dollar index here because the dollar itself seems to be playing defense at a really important level right now. This level right above par for the past year, going back to last July. And we broke through it here in June. We since traded off those highs, just short of 102 in Dixie. We came back in, back to that former resistance turn support. And we've had a very clean bounce now for 3 days in a row. I think we should start with the euro dollar, of course, because that is ultimately the largest component of the dollar index. I know that I've been trading this on the short side, basically against 115. What's going on here in this market today? Are we getting ready for the next swing lower, as maybe I hope?
Yeah, I mean, you teed it up beautifully that the waking up today into this week, the two kind of main factors we're watching is the oil market for more of that risk on, risk off, and the treasury market for where these yields and bond prices are going. And when you zoom in, get a little more granular, as I have to try and unpack this morning, you're seeing the continuation on that treasury yield front because we've had, that oil stabilizing down on the day. and you see risk on that little pop coming back into the equity markets. You can see the same thing. When I see movements in the equity markets, I can more or less see what's going on in something like the Australian dollar, the New Zealand dollar, without any of those domestic drivers in play. But when you think about the euro dollar, Canadian dollar, and the continuation into the U.S. session, it's really been on those treasury yields moving higher as opposed to any of this risk on, risk off sentiment. So that's what we're looking at right now. We're seeing a stronger bid in the dollar through this session than I would have expected. And yeah, it tees us up into the main driver, much like how equities are waiting on earning announcements for the week. This euro dollar market, I expect to be a little bit more muted into the ECB decision on Thursday. So good news for you, the price moving in your favor right now, but I wouldn't expect a huge repricing ahead of Thursday. Is that how you're thinking about things?
Yeah, I mean, the ECB coming up, I know their rate path is pretty unclear right now in the short term. I mean, we're looking for additional tightening later this year, but today's weakness for both the euro and the pound is probably being driven by what's happening in the energy markets. And you don't see it here on the screen because we don't have European gas futures available on the platform. But if we did, we'd head over to the Dutch TTF contract, which is up by 2% today. And that's not really something to view in isolation. European natural gas prices, their benchmark is now up 34.85% this year. Nope, just kidding. This month. Just this month alone. This year, it's up 108%, right? But just this month alone, we have this 30-odd% rise, nearly 35% rise, Glenn. And I was here, I think you were too, during the 2022-2023 inflation scare when the Russia-Ukraine war began. And when European energy prices shoot up like that, the currencies tend to take it on the chin, because the central banks are kind of left in a standing spot where they get really low growth and they get high inflation. So what do? Do you raise rates? Well, you're going to kill growth. You keep rates low. You're going to let inflation run away. So needless to say, I'm comfortable staying short the euro here for myriad reasons. Treasury yields breaking down. Treasury prices breaking down. Treasury yields going up, coupled with this natural gas price rise in Europe. Yeah, I understand why dollar's bouncing back with the euro performing the way that it is on this Monday.
Yeah, and it's important to note that, for the very short term in the spot market, 114 hasn't been as big of a, psychological resistance or support level. It's been pretty comfortable trading through it to not much farther, not getting down even to 113.5. But I'm not as, worried about that holding from a historical perspective as much as the Canadian dollar. If you want to shoot over there, that one is one of the big movers of the day. Canada weakening after a pretty strong resurgence last week, but a pretty firm bounce from in the spot market, that psychologically important round number at 1.4. So this one is
right with this 50-day as well.
Yeah, and this is the one where I looked at today and said, hold up, there might be something different from the headline oil risk off. Let's check what's going on here, and U.S. dollar catching a strong bid across the board, except for Australian dollar. Is the
before we get over to that Australian dollar here, Glenn, dollar CAD. Today of days. Funny that we find ourselves looking at this chart right now because something does catch my interest. You and I have different ways of approaching this. I'm more of the future side. You're more of the spot FX guy. But that, regardless of what your product expression is still a candlestick chart, and that is moving below yesterday's low. Check. Now it's above yesterday's high, and I say yesterday, I mean Friday. In pure technician term, that's a bullish engulfing bar. After having come out the side of a downturn, that's a key reversal. It's up against your 50-day moving average here. So a key reversal finding support at the 50-day moving average feels like that's a position maybe we'd want to look long on a swing, if you will. This recent pullback, by the by, never really got through the swing high that we had here at the end of March, beginning of April. So I'm looking at a market here Glen, that looks like it still has. Let's just get rid of you at the former swing high. You've served your support. All right, but so former swing high, breakout, pull back, now against the 50 bullish engulfing bar. Dollar CAD is, it's a really interesting currency because today of the days, what do you see? Do you get a big move higher in the Canadian dollar on the back of this move higher in oil? Did that happen? No. Canadian CPI came in weaker than expected. That was out this morning, 2.8% versus 2.9 on the headline anticipated. Negative 0.4% month over month versus negative 0.2. All of a sudden, the BOC rate hike odds, I should say, are getting evaporated.
And those are ones that were just newly priced in, right? BOC last week, a big driver of this recent Canadian dollar strength. And you're right, how fragile is rhetoric when you have this concrete CPI coming in directly after? Could be all the comings for, right back to where we were last week and prior.
And I can't really think of the last. I mean, I know energy is like 11% of the Canadian economy right now. But Glen, I want to get off a trade here. How do you want to do something in dollar CAD? Can I entice you into looking long against the 1.4 round number?
Yeah, like you said it from a technical perspective, a pretty strong bounce here. You could wait to see if this. We've looked very intraday in terms of what the bounce looks like. You could wait for this to hold. If you think that this is more, you're obviously looking at daily candles and daily candlestick patterns. If you're looking at a longer term horizon, you could see where this settles, make sure you're happy with it, and then put on that long because risk reward, you have a ton of upside historically in recent memory to pin some profit targets potentially and know where you're wrong if this bounce erodes to new lows.
Glen, as you know, my preferred vehicle for doing these kind of things would be over in the futures market for whatever rhyme or reason, just happens to be my preferred vehicle. Particularly what I'm thinking of, I want to do something in a risk-defined manner as opposed to just doing it through spot effects.
Sure.
And so along those lines, if we were to inverse dollar CAD spot, we get to the 6C effectively CAD dollar. 7150, 7200 is bracketing that 50-day moving average. 7150, 72, right? So if we were to think about that, we can head on over to our 7150, 72. What are we looking at here? We are looking at 50 pips wide, 17 pips, which is spot on, right? 51 divided by 3 is 17. So, a third of the width of the strikes, risking 2 to make 1, 51% probability of profit. I mean, it's a thin market. The volume today is really light, but the open interest is sizable. At least there's a little over 2,500, 2,600 contracts traded here. I like this as a trade for the Canadian dollar here. Let's see if it can get filled. Again, same thing that you're seeing in CAD spot. It's just the reversal. You had a rally here, move above, not quite, move above the high, move below the low. You get your key reversal in place right near your 50-day moving average. Glen, dollar CAD is the one that pops out today because it's a sea of dollar strength for the most part. But the Canadian dollar has this soft inflation report, which undercuts the narrative that was driving us down the past few days, which is all the more fascinating, as you mentioned.
Absolutely. Way to get in. And if you don't get filled on that liquidity concern, maybe that's the time to get back into the spot market where fills are less of a problem than futures options. And the other good part, getting as granular, as small as you'd like. You can get into that market for, $20 in margin and layer into it as you see fit. But good call out today. I'm excited to see where these dollar markets move this week ahead of next week's FOMC. Always nice to have that on the horizon.
Well, dollar is turning higher here again today. Yields are moving up. We're going to have to take a quick look at that ZB position we put on with TP because that's directly related to this FX move. But Glen, it was good to have you on here. I think we're going to be doing this little quick FX update with a little trade idea that we're working on here, Euro, Canadian dollar. We have a few in the hopper right now, but I'm sure I'll see you again soon. We're going to take a quick break here on Tastylive. We're taking a 2-minute break. We do have the research team coming up. Julia's out. Kai is in. See you on the other side.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today. It's time to trade smart, post PDT rule elimination. Now, traders of all account sizes have more flexibility than ever before. With rapid order entry and bracket orders that let traders manage entry, profit target, and stop loss, all in one ticket. Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
We are back. You're watching Tasty Live. This is Market Measures. We bring in one of our biggest brains in the office, and we have them break things down in a manner that even someone like I could understand. Today, joining us, the man himself, Kai. How are you?
I'm doing great. How are you?
A year older since the last time I was on air last week. I found my glasses, which I suppose is, there goes my memory. I should start taking Prevagen. Can we get a sponsorship for Prevagen? That'd be nice.
Oh, was your birthday last week?
Yeah, I turned big 37.
Oh, okay.
Youth is slipping away.
Okay, still good.
It's been gone for a while.
Still a good age.
Yeah, well, it's a good age. Talk to me about talk to me about this market here. One overlooked area. We just hopped on FX. Let's go over to a different currency, if you will. I think that you want to talk to us about the big old BTC.
Yeah, it's good to hear you use the currency for talking about Bitcoin. It's actually one of the currency that a lot of people try to play around with the Bitcoin right now, right? As an alternative of a lot of different currencies. So we want to discuss this the Bitcoin piece because in the past 7 or 8 months, Bitcoin has been beaten down from the top at the beginning of the last October. It was down roughly 54% at the mid-July. And the market is quiet. It's been trading at the bottom for months. A lot of speculations going on. Right before Glen walking out of the house, he asked me, are you anti-pro? I'm a little bit pro over the long term, but short term, there are so many people, technical analysts, cyclists, whoever show me those half dome circle for every 6 months or so, which I couldn't understand. A lot of people say it's probably going to drop to 40,000, which is the next support level. But I don't know. But here's a good piece we probably should discuss today.
Kai, can I just point something out? Like technical analysis, I have found works better in something like Bitcoin or in crypto generally, because there really isn't a fundamental thing to lean on. There's no balance sheet, there's no earnings, there's no interest rate differentials. You could do something like on-chain analysis, which I've argued before. I've done presentations on this. But even so, it's still thin. So technical analysis, so much of it is just like enough people believe it, then it happens. a lot of people just lean on this stuff because there's no other real form of fund, analysis to use when you're looking at Bitcoin.
I agree. I completely agree. I don't know how to analyze the Bitcoin unless you're kind of 100% into the cryptocurrency, but it's still all the price is based on a lot of assumptions and the theories, right? Which is most of them hasn't been approved yet. All right, so let's dive into the main slides. So we want to take a look at a lot of charts, tables, numbers to see what is the probability the Bitcoin is either going up or going down, or a very probability we can actually talking about. So let's go to the next slide. So this is what happened to the Bitcoin and Ethereum since the data we have, roughly around 2016-ish. So you can see the volatility of the Bitcoin, which is in the cyan color, is pretty big. It is the average annualized volatility of the Bitcoin is 66%, but compared to Ethereum, which is even larger, the 86%. So as I quoted before, from the last October at the peak, the price of the Bitcoin already dropped 54%. It's actually well within that 66% annualized volatility. We're actually down only 54%. So just based on the historical volatility and the current price range, you think it's this pullback's overdone or what? It's not sure. The cryptocurrency's volatility is not something you normally see in the equity market or even the futures market. It's very different products. What do you think?
I mean, I would expect Bitcoin vol to just be at ridiculous levels, but I've been in the sauce for the past 12 years, 13 years now. It's always been high.
Oh, yeah, for sure. But look at the Ethereum, right? Well, what happened in Ethereum in the past 3 years? The volatility is significantly higher than the Bitcoin.
Makes sense.
Yeah.
Further away from the main source, it's going to get tingly.
Yeah, so one thing I want to take a look at into the next slides is the trading volume. So the trading volume has been increasing in the past 5 years after 2020 and 2021, which is pretty much the beginning and of the COVID. So this is actually one of the big take I actually want to talk about is the benefits of more people pay attention to the Bitcoin, more news and the portals cover the Bitcoin or crypto world is actually the increase of the liquidity. The better liquidity we have in the market, the better for the retail traders.
Sure, tighter bid-ask spreads all day long.
Exactly. Okay, so next slide. So let's take a look at the Bitcoin, the price change in the past a couple of cycles. So right now we have 54% market pullback, roughly, but this is it huge? Is it big compared to the historical? We only have the data all the way around to 2018, 2017-ish. So we already seen one occurrence roughly between the 2021 to 2022, the market actually dropped 53%. And before 2019, we saw a 64 or 65% pullback. It's relatively smaller in this chart because of the skew results, but it was actually bigger before 2020. So 54, 53% of pullback is not something we haven't seen before, even though for traders who put the money into the market, you feel the volatility, but actually this is how the crypto market works. You should be prepared for what happened in this market.
I mean, drawdowns typically last 200 plus days, it seems like on average.
Exactly. So next one is this is a little more details of the previous charts. We have the number of days of the rising market and number of days of the down market. Right now, if we consider at the beginning of October from last year to right now, it's already 9 months. So we already have 270 days, roughly, calendar days of the kind of pullback market. And look at the calendar. The longest dropping days is actually is the 2021, which is 252 days. So we already experienced one of the longest pullback duration for Bitcoin, but volatility-wise, it's still well within the range.
Doesn't feel like it, but yeah, go ahead.
There's a lot of things was going on in the past couple of months, especially June. We have like 2 pullbacks.
So very aggressive pullbacks.
Yeah. So the very last of the kind of a data quantitative slides is I want to see the correlation between the Bitcoin against the SPX. Against the SPX. So there are two lines here. The red line is the correlation, and the kind of a light gray is the Bitcoin price. So we can see before 2020, there's a huge jump at 2020, right at the COVID, like at the top of the COVID. It's March 2020. We saw the correlation jump from negative zone to positive zone. So before 2020, the average of the 6 months correlation is very close to zero, very close to zero. So it's almost, which means the Bitcoin or the crypto has almost zero correlation or have no movement in relationship against SPY or broad market. But after that, the correlation jumped to the positive zone, somewhere between 0 and 0.5. So we should consider this as a low to medium correlation zone. Right now, it's constantly trading above 0.5%, somewhere between 0.5 to 0.6%. So the correlation is getting higher. But if you look at the Bitcoin charts at the background, the gray line, you can see how the price is against this correlation. So basically, when the Bitcoin price drops, the correlation has to become higher. So this is a sign that market treats the Bitcoin or other cryptocurrency, mostly on the crypto coin, one of the assets that we normally traded against the equities. So this is not kind of something weird. We're to talk about the correlation in the market downturn so many times. We're going to see the assets correlation increases when the market pulls back. So this starts to happen more often to the Bitcoin, which means this has actually become more normalized trading vehicles for retail traders.
It certainly feels like that. I mean, recently, those days where you have the stock market up, but Bitcoin's down, stock market really hasn't had a bit of room to run to the upside. You really want both in agreement, which I actually think is perhaps one of the better signs about today's market. Bitcoin's up 2%, Ethereum's up 3%. Volatility is relatively low. I mean, Kai, I suppose as we're backing out of this year and we're going into potentially, a way to take this information from theory to practice, as Dr. J would say.
Yeah.
Does that mean that when you're trading Bitcoin, you treat it more of like a tech stock these days, as opposed to something that's, when I started trading it over 10 years ago, it was an alternative asset that had effectively no correlation with anything else in the world?
That's interesting. I haven't applied the Bitcoin against the high tech. I probably should add that slide too. And one more information I want to add on this slide is the pre-COVID and post-COVID historical volatility annualized. So you can see. So we have 66 and 86 for all the period of time. Now we can see before COVID, both of these volatility is higher than the long-term average. But the post-COVID, the volatility drops from 66 to 61 and from 86 to 81. So you can see it becomes more normalized. There are more liquidity comes in. Definitely the higher liquidity that helps reduce the volatility. So this is one benefit for retail traders. If you're not pure speculators, this is actually a positive news.
All right, so give us the takeaways here, Kai. If there's something that we need to be worried about as retail traders, where's Bitcoin's place in the world now for us?
Yeah, this is pretty much we already covered. I would say whatever we see Bitcoin in the market right now, it's normal. It's actually within the average historical volatility compared to the 54% pullback that we see in the past 9 months. So it is actually. You probably want to play the probability based on the option market, but the IVR is extremely low right now, below 10%. So I personally, as an option traders, I'm probably going to wait to see what the market is going to tell you after either a big rally or a big pullback again.
Kai Zhang from the research team breaking down Bitcoin for us here on Tastylive. It's trading more like a stock these days, and if you've been watching software, that probably doesn't surprise you so much. Kai, we will see you and the research team tomorrow. Here on Tastylive, we are taking a quick 2-minute break. S&P 500 is still up, 75.27 right now, 29, 30 points higher here on the day. We have live trading coming up next. It's a little bit of a rapid rotation. The carousel is going to start kicking up here. Jermal's up next. We're going to have Errol at Cboe, Mike, and then guest trader. You're watching Tastylive.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
It's time to trade smart, post PDT rule elimination. Now, traders of all account sizes have more flexibility than ever before, with rapid order entry and bracket orders that let traders manage entry, profit target, and stop loss, all in one ticket. Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I know we got over here, but can we get over here? Hey, what is going on, everybody? We got a new little segment we got going on here, and we're looking at doing live trades for you guys in the studio. This is kind of nice. It's been a minute since I've talked to you guys on the solo. I'm always doing stuff with other people, so it's cool to be here. You know, I was looking throughout the book, and I think one of the things that you're going to see with this trade of the day is sometimes a lot of us are going to try to find ways to interweave what we have within the book. And yeah, a lot of times we're product agnostic. There's no doubt about it. But for me, I also like to have a story in my portfolio. Right now, that story pertains to a lot of tech names. But I wanted to find something that I really didn't have to pay a whole lot of attention to right now. And it's not along with that broader narrative. And so I found it by accident. Actually, it happened this morning while I was doing the live show. Had no idea what was going on in live cattle. Was on with Mike and TP mentioned the move and the slide in live cattle, and it's been a pretty big one. Now, the last time I was paying attention to live cattle, I think was sometime earlier this year, and we were seeing beef prices go higher because of the screwworm situation, and that was having a major effect on cattle, and you just saw the prices kind of inching up higher and higher. Now, it's been since about I think 26th of June, we've seen this move in cattle. And if we can pull up the platform now and kind of illustrate what I'm talking about here. There's been a big slide in cattle here, and this is a zoomed-in chart to give you the full effect. This is over the past year of cattle, right? And like I said, the last time it caught my attention was here. And now we're seeing cattle at around 226 or so. It's bounced back today. But look, this was like, golly, I mean, how many days is that? About 15, 20 days in a row, moved to the downside. Now, again, if you just saw the chart, not uncommon. We saw a similar type of move last year, and this thing could continue to move lower, right? But for me, when I see something like this in the near term, I know it's related to, I think it's been related to higher prices. As much as I would love to make fun that it's related to lettuce in the current situation, that is not the case. And obviously, that's been a nasty situation, but nobody's dying, at least not right now. I think like 200 years ago, 100 years ago, if there was a diarrhea situation, there might be a lot of people that are dead. But in this situation, there's not. And that's not even related to this cattle situation. This just happens to be a situation where higher prices apparently are not good for cow pastures. So this is one where you kind of dissect everything that's going on. I know that that's the story, right? The situation with cow pastures and the heat. I also know that we've seen earlier this year, we saw a bid in cattle is moving to the upside, and now it's struggling. I also know that this move can continue longer, right? So that all of a sudden starts to get all those things go into my formulation of how I want to trade it and how I'm looking at it. Now, obviously at Tasty here, we sell volatility a lot. You don't see an IV rank here, but in absence of an IV rank, what do we look at? We look at the actual implied volatility. Now, this is in the teens. And again, it's interesting sometimes when you look across the landscape of sort of commodity futures, commodities and commodity futures, you get an idea for where they're all trading. Because obviously they're all different. They're not even interwoven, but like crude oil, obviously sometimes it's in the 70s, in the 80s. We saw it more recently touch 100 when things got crazy overseas. You look at other products and you sort of get an idea for vol. I had no idea where this vol was trading, but 18 vol, that's when you start thinking things on an absolute vol basis. And what I mean by that is, let's just say 0 to 100, right? Biotech somewhere times 100 or higher volatility. A lot of tech names right now, 100 plus volatility. This is very low in the grand scheme of things. And I think another thing, I like to do sometimes is I will go to other places to get an idea for vol. I went to a website that kind of gave me an idea for where volatility is trading historically wise. It's trading in the single digits, almost 9 to 10 in the recent time period. So all of that to be said, I don't necessarily want to sell vol in this, right? Typically when something goes down, we see volatility pick up to the upside. So that's when you start wondering, how does skew work in live cattle? Well, let's take a look. Let's figure a 20 delta option in the put side, sell that. Let's just see what that looks like. And let's find the equivalent on the upside and buy that. And you can see there's a credit here, which means skew is to the downside, right? So just to get an idea and level set what's going on in here, skew does seem to be trading to the downside. I'm not sure if that's a normal thing. I bet there was skew to the upside when cattle prices were going up earlier, and now skew is to the downside, meaning downside's more bid because of the falling price. So then I start to wonder, okay, what do I want? What does a put spread look like in here, right? And so let's just say, well, first of all, let's just say I did sell that put. We just saw what that looked like. That's a little bit more, let's just say $630 profit, $1,800, almost $1,900 in buying power. Am I comfortable with that? No, honestly, I'm not. Because again, we saw the type of move that this has had before, and it could keep sliding. And I'm not that familiar with crude oil that I feel like it could find a buyer soon. This is a commodity at the end of the day. And so commodities can definitely stay a little bit more crazier longer than you can stay solvent. So I don't feel that comfortable going out to sell a put. I could turn it into a put spread, but I'll come back to that in a second. Say I want to take advantage of a calendar. I could look to do that, but here's the thing. Again, this is a commodity future, and I've got to make sure these are aligned up, but they're different. So this August future, you can see this is this August expiration. This is an August future. See, it's a Q contract that's August, and so I don't necessarily know this well enough that I want to buy. The V is October, right? Even though this is September options, this is October future, right? And so I do want to be aware of that. I'm not comfortable trading a sort of vol arb spread in this case that in a future contract that I'm not necessarily that familiar with. And the point being, I don't necessarily want to do a calendar spread because I don't necessarily know if all of a sudden there's going to be backwardation or how that's going to change. Like I really don't know in cattle futures. I'm not exactly sure. So I don't necessarily want to do that. But you could easily almost want to pull that type of trade up and say, oh, cool, I'm going to do a calendar spread. But you'd have to be aware that you're doing it in two separate futures. So there's that, right? So I would just want to keep this in probably the nearer term and the same expiration. I don't want to do calendars, at least that kind of calendar. Now I could go further out and say I want to buy this 235. Now let's look at the last time it was trading there, 235. That would be, somewhere around, about 10 days ago, 11 days ago was the last time it was trading in that price range. So that's possible. We could put one of those on and let's see what that looks like. 235 calendar spread. Buying the October, again, this is also in the V contract when you talk about futures. So buying that October and you can sell this September, but they're both in V, so we're good there. So that's a buying power of about $400, right? So that's one we could put on. Let's try and get that. Oh, immediately filled. Wow, that was fast. So that's one way to look at it. You could also, we come back to this put spread, right? So say I was interested in selling this put, but say I don't, say this is just too much buying power. I don't feel like dealing with that. Again, this is an off-brand trade. It doesn't necessarily fit in the book, which actually works out well, right? Like right now, a lot of my book is tech stuff, long deltas and some tech names, and maybe a few shorts here and there, some short strangles and a couple of other names. And a lot of it, I'm pretty tech heavy right now because, well, that's where the volume is, right? But this is an off trade and this is something that I find interesting. So my point is on days where things happen in the portfolio, like Friday, I don't want to have to be thinking about this crude trade, this cattle trade. I like having the calendar spread. I don't really think vol is that high enough neither just to sell the put. And again, I'm not too familiar with how this goes and as far as how this thing trades, this product per se. And again, I keep reflecting back to this. This move right here could easily turn into this move right here. So I'm not necessarily selling the straight put outright. But what I could do is sell a put spread. So let's see what put spreads look like in here. Now, in this one, selling basically risking 5 to make 1, right? Max buying power here is only $145 for this marginalized product, so that's nice. So it doesn't really take up the whole 670, and the max profit is 130. I would say that's the extent as far as selling a put. That's maybe the extent of what I would do. I'd probably, let's see if I would move this up. And again, for me, it's about deltas, but sometimes it's about the price too. Right now, I think we're clearly at an inflection point, especially seeing this bounce here today. And it's trying to hold this level in this right now. The next breakdown could happen somewhere around 224, basically where we are. I mean, this could be the next breakdown or it's going to bounce from here. It's one of those two. So if I wanted to get a little bit aggressive, instead of using the 20 delta, I could go maybe 25 delta and go 2 points wide. 82% pop here. And again, this is 46 days. So it's well within that window that we see for a lot of different products, options wise, using that 45-day window where we see the decay curve really start to accelerate. So this is one where you could also put on. So I could put, one of these on as well, sell this 45-cent credit. Buying power is only reduced by, let's see how far away I am on that, 450. I'm going to leave that out there. But buying power is only reduced by, was it about $400? So that's also a nice trade. And again, what I'm looking for here is just to see if this is going to bounce or is this going to be a breakdown zone. If it does break down, well, guess what? I have the calendar spread on. I'm only losing what I paid for that, right? And so that's a nice thing about it. I didn't pay a whole lot for that, so I could probably withstand that loss. If in the event I do get filled on this put spread in this 45-day window, which I'm working right now, that is one where, again, max loss could possibly be $600 if it continues to slide. Like if we see that move, like we it's possible that could happen. Again, if it breaks down from this 224 level, who knows if we start to see another move like this. And similar thing is October. You could see like it broke down once it got to 221, it broke down even lower and got ever so more uglier. So for now, we're doing some risk-defined trades because we don't know this product that well, because we're not too comfortable with it. But I think those things will work out. And again, I mean, this is one of those things where it seems like seems like the screw worm situation is over, but the high temperatures that we had more recently, I think were bad for cow pastures. We'll see if it turns around. We'll see how it plays out. But yeah, that's my trade of the day. We'll see how it goes out. Hope you guys like this segment, man. Give us some ideas or chats and stuff in the comments. And please like and subscribe to all content on Tastylive. So that's my trade. I'm going to flip it over to Errol in a little bit, and he's going to go through his trade of the day. And you guys just let us know what you think about this. Hopefully you like it.
What's going on, guys? My trade of the day, we have a few options over here. So I know we spoke about INTC, SNDK, Micron. Those have been some of the most popular underlyings. And we've finally been pulling back a little bit more. So what I want to do is potentially get on a little bit of long delta. Again, hindsight, I wish we would have done this a little bit earlier. We were taking a quick peek at Nasdaq for a quick second, actually, while we were doing this. And it looks like we got a pretty quick sell-off. I think it was like right when Jermal had mentioned something about the cows again, we got a sell-off in the market. So if he could refrain from holding on to the cows and the viruses, whatever's going on with the lettuce, I need to get up to date a little bit. Before I left the Cboe, somebody told me, yo, something about being vegan, so watch out for that. I guess there's that virus going around. So anyways, with that being said, a little bit more volatility in the market here, watching this pullback on micro Nasdaq. And I almost chose that for the trade, but I think we put in a decent range for the day. I think we're gonna get a little bit more, volatility here, but we will, let me see if I can grab this here. See if we can go ahead and check out Micron. There we go. There we go. We're going to pull this to the daily chart. So Micron had gapped up overnight. We'd seen a little bit of a rally above the pre-market highs, and then we've been pulling back and kind of consolidating a little bit more now. But we want to get on a little bit of long delta. I don't know how anybody else feels about this one, but because of the pullbacks that we're getting in the overall market, it's nice to take part of these assets a little bit more now. We had a runaway train, and if you weren't long Micron, it was really difficult to do anything other than that. Maybe you got long on some pullbacks while we were on the front side of the move. But it looks like we're finally on the backside. And before we go further, let's just talk a little bit more about what I mean when I say backside. So I'm going to find the high of this asset, and you can kind of see right here, if we have another drawing tool, we have more of the front side that played out all the way from 350 to around 1256 on Micron. So now whenever it seems like we put in that definite high, or maybe that the top could potentially be in from this perspective in time, this is going to be the front side, and then this is going to be the back side. So now that we have a little bit more of the back side showing, this is a little bit more attractive to maybe buy some pops on the way down, or maybe put on some short delta if we do get a rally towards the highs. But in my personal opinion, and maybe I'll come back on this tape and we're completely wrong, maybe we get another rally in INTC, AMD, Micron, SanDisk, all those names. But for the time being, the trade thesis here is the fact that we put the high in, and that high is at 1255. So we're going to be going off of that. But I would love to get a little bit of long delta on because of this consistent downtrend that we've seen over the last few days or the last few weeks. And I wish I could have gone on a little bit more long delta whenever we were deeply red on a day. That's when it's a little bit more attractive from a risk to reward standpoint, and where I feel a little bit more comfortable to get into some of these positions. But I don't think we've ran away too far from where we want to get involved in this name. So with that being said, Micron seems to be on its backside alongside SanDisk and all the other memory names for now. So we're going to see if we can catch a little bit of a pop to the upside. And if we can catch that pop to the upside, we're going to sell some out-of-the-money calls to try and get on some short delta on Micron. So it'll kind of change it into an iron condor. Hopefully it can work out that way, or we might just take off the out-of-the-money put spread that we're about to sell once we put on that out-of-the-money call spread to add a little bit of short delta, if that makes sense. But with that being said, we're green the last couple of days, but we haven't moved too far. So we're going to still try and take advantage of this. I want to give myself a little bit extra time, nothing too long, but a little bit of extra time. So we're going to go to the 32 days left till expiration. This is the August 21st contracts that we're looking at. And I was just looking at this expected move on the options chain, and good Lord, this thing has some massive ranges that it puts in, and you're going to get a pretty decent amount of premium. If you go too far out, you might get some scraps, right? If I sell the 710, buy the 700, we're still getting, what is that? What is that saying? A little bit over $2 in credit so far. Let's go ahead and clear this out and put it back in. See if that's correct. Because if that's correct, I mean that's a lot of premium for selling this far out of the money. So I mean, if we wanted to get on some long delta on Micron, selling the 690s, buying 680, I guess that makes a little bit of sense because these are $10 wide. We're gonna pull this in a little bit closer. We want to go $5 wide. I really want to pay attention to that risk because I don't want to give up more than I have to on something like Micron, considering how volatile it's been. So I'm going to look at the 795s. That's where we get to the $5 wide strikes. And I want to reduce that risk just because in my case, I want to think about maybe legging into an iron condor on this if we get that bounce to the upside, or maybe we just take off the spread and put the new spread on if we get the bounce. But I'm looking at selling the 795s, buying the 790s. That's going to give us about $1.80 worth of credit, which isn't too bad. It's a little bit more than the third of a width that we usually look for. So we're going to try and send this one through, but let's continue to look. We have a 59% pop, about a 60% pop, 183 of extrinsic value. We got a 67% P50, which is still pretty nice. And then you can see the deltas. We're just under a 1 delta, so it's nothing too aggressive. But if we do continue to stay above the previous swing low that we're just starting to trade out of, which is going to be over here, we'll mark this off. If we continue to stay above this swing low, maybe we dip back under it, but that's going to kind of be the gauge that we're looking at for this momentum to the upside that we're kind of looking for. And if we keep trading below there, maybe we can cut our losses, really manage our risk super tight, because I think this asset will give a little bit more opportunities to get long or short at. But because it's been so beaten down, I want to get a little bit of long delta on $180 worth of max profit. There we go. Max loss 320. I probably won't risk the entire max loss on this trade. But by being able to utilize those vertical spreads, it still gives you a nice defined risk type of trade idea to work off of. So you can at least still sleep at night. So you don't have to worry about managing these insane moves on these assets while you're asleep. So it is defined risk. And just because it has that max loss there, you don't have to realize the entire max loss. Like if this position or if this vertical spread is down, let's say $180, the same amount of what our max profit is, you can decide to cut the position and be like, all right, my timing or my directionality was a little bit off on that trade, and then we can redeploy the capital elsewhere. But by at least having an idea for what that max loss is, it just helps you with that psychology on at least knowing what the potential worst outcomes are. So with that being said, we're getting $1.83 now, so 3 cents more. So I guess it's good to yap sometimes. You get a better fill on the price that you were originally looking at. But we're looking at the 32 days left till expiration. We're looking at selling a vertical put spread, selling the 795s, buying the 790s. Do we want? Nah, I don't think we'll go more aggressive. Before we send it through, let's just check to see what the 810s, 805s are going for. That's what is that? Still giving us about $1.82, about the same range. So we'll go back to the 795, 790s. Give ourselves some breathing room at the same time. We're gonna go ahead and try to send this through. See if we catch a fill on this one here shortly. We can even adjust if we want to. I'm not going to adjust too much. But let's go down to like $1. Let's go to $1. We'll go $1.80. All right, I'm being a little frugal there. I'm being a little frugal. We'll go to $1.77, and I'm not taking anything lower. I'm going to fight for price on this one. There we go. Looks like we got filled $1.79, so a little bit better than what we originally anticipated. But now you can see in the portfolio, we got our Micron position on, a little bit of long delta in there, just looking to catch a brief pop on the downtrend that we've finally seen. But overall, I am a little bit more bearish on these names. I do just want to preface that, but I don't like the risk to reward to the downside right now. I don't know how you guys feel about that, but if we do get a pop in these names, I'm not going to hesitate to get on some short delta and taking off this out of the money put spread where we put on a little bit of long delta. So that's going to be the thought process there. Man, we gotta hedge this SpaceX position somehow. We should have just took SpaceX to the downside, but we'll let that one play out. I mean, if this one, I don't know what more to say about SpaceX here. I mean, if this one can recover to around 150, if we can get a little bit back from these contracts, that's going to be a win in our eyes. If we can just get a little bit back from these contracts, because this position is down about 145, not a big deal, right? It's a defined risk position that we put on, and that's why we like these defined risk trades similarly to what we just put on in Micron. You don't have to worry about it too much. It was only a $5 wide, but with that being said, we'll keep an eye on that. Maybe Micron can hedge the SpaceX a little bit. Micron continues to sell off a little bit more here on the day. So maybe this downside action is not over, but it does seem that we are on the backside of the move. So sometimes it can be difficult to catch these pops on the backside, but we're going to try to do that and then get on some short delta. But with that being said, before we go here, let's go ahead and check out SanDisk at the same time. Seems like SanDisk was kind of the head of the snake sometimes. And I know SanDisk looks to be beaten down just to be beaten down one more time. Tends to be beaten down a little bit more than Micron. And then lastly, let's go ahead and check out, was it WDP? Was it WDP or W? Maybe we can even find it in here. We got Walker Dunlap. We got Workday. You know what? Workday is actually an interesting product. I am just curious real quick to see what Workday's been up to. If I'm not yeah, Workday, okay. Interesting. Consolidating at its lows. It's always interesting to see the tickers that you recognize in the real world and see kind of, how it's performing in the stock market, because the real world in the stock market and the price fluctuations of these assets seem to be like totally disconnected. You know what I mean? Like you'll think of something like Ford, right? If you've never looked at the stock market, you would probably think like, oh, Ford Motors, that stock's got to be what, 100, 200, 300? Nope. $14 and some change on a good day. And that's us getting outside of penny stock territory where we touched down in last year of April. So it is kind of funny to see how disconnected the real world and some of these underlyings are sometimes. But no, again, with that being said, we got on the Micron position, we got on the SpaceX position. And I would just love to see these names, rally just a little bit off its lows. I'm not going to be mad if they don't rally, because I'm not going to be mad if it doesn't rally in the time duration that we want it to for this add to the money put spread that we have on. But it would be nice to see that rally first. But overall, if this top is in, I do think we have a lot of range to the downside. So if we don't continuously put in new highs, it's not like that's normal behavior anyways, but for this year, it might be normal behavior. But if we don't continue to put in these highs, I think the top is kind of in, especially after the change of behavior we're kind of seeing, the rotation of assets that we're kind of seeing in the market right now. Some of these massive divergences that we've seen on even the S&P 500 and the Nasdaq market with tech too. So it does seem to be a little bit of a change of character here. So again, the higher the pop we get, the better, because we're going to get more short delta on it. And it's kind of a similar viewpoint that we have, over here on the gold market, right? If we zoom out over here, you can see gold put in a high. Let's go /GC. And it's kind of the same story on silver and gold. But if we look at the highs that it's put in, you would need something severe to happen, I would say, for us to make a new high. And it also doesn't even seem that, just based off how this looks, it doesn't seem, this wasn't running on fundamentals in the first place. You know what I mean? So again, with that being said, it's kind of a similar thought process that we have on a lot of these memory names right now. Whenever the top is put in or whenever the backside starts to show, if we put in a vertical line from this high, it's looking like we're finally trading on the backside of this type of momentum name. And it's kind of weird even considering gold or silver, as one of those momentum names. So again, with that being said, we get a pop on gold, we get a pop on silver. The higher, the better, because our main risk or our main target that could shift our trade thesis is going to be a new all-time high. So if we get a new all-time high, there's no reason for me to be short gold or silver because it's breaking my trade thesis. So we'll keep an eye on gold. We'll keep an eye on silver. Things are getting a little bit quiet here. Maybe we get a swift crack down, or maybe it's time to get a little bit of long delta on in gold and silver. Maybe we see a pop back to the upside, but we're going to be patient on that one. But again, lastly, INTC. This was another one that I was debating on maybe getting a little bit of long delta on. I could have chose SanDisk, Micron, INTC. We could still look at some of those options as well if you have a similar trade idea. I know we're going to have earnings here, July 23rd on INTC. So we're already going to take that one. We're going to scrap that one, get that one out of the picture. And then we got SanDisk, August 5th. So again, Micron is going to be a little bit more attractive for those names. And again, I know we built this watch list, even Dell, IBM, a lot of underlyings with a lot of volatility in them, trading near their highs. Dell kind of similar story here. Not the same exact story as like INTC, Micron, SanDisk, those kind of names, but with the rip to the upside now kind of consolidating at its highs. Is the backside in? I mean, it's really difficult to tell from a momentum perspective just because, we put in the highs at around 470. We haven't made another high after that, but we are starting to consolidate, kind of seeing a little bit of a change of character from a technical, price point perspective. Obviously, we want to see what the options chains are telling us. That's a lot of good information. But if you are looking at charts, it's looking like we're subtly putting in the backside here. I know we got a massive gap to fill from 324 all the way to 354 on Dell. So we'll keep an eye on it. It's not my favorite one, but it is always nice to watch how these things play out and kind of just watch the human nature play out in front of us. But let's go back to that watch list. We have IBM up there as well. This was one that went on a massive rally to the upside and then completely sold off, or the other way around, completely sold off. And then we had a massive rally to the upside, and then we had a massive gap down back to the downside. So IBM is another interesting one. This one's a little too wild for my liking. But if I had to choose a position because we've gapped down and sold off too far, by this point, you guys know I would probably lean long at this point. It's really difficult for me to get long into the highs and to get short into the hole. Not that doesn't work out. I mean, if you would have, traded that perspective on the Qs or SPY over the last year or two or over the last forever, that would have worked out pretty well. Buy the high and sell higher. That's kind of what type of market we've been in lately, especially considering these memory names. But I am curious, maybe that shifts investor behavior just a little bit from kind of getting conditioned to what we're kind of used to. Buy high, sell higher, buy high, and we rip higher. So again, with that being said, we'll keep an eye on Micron. We'll keep an eye on Nasdaq. If we make a new low, I'm not going to be too worried, but I'm not going to risk the entire 320 on this spread or on this vertical spread right here. We'll probably cut it near what our potential max profit is, which is going to be about 180. So we'll keep an eye on it, guys. Again, as always, appreciate you taking the time. We'll see how this trade idea pans out. We'll definitely be back here managing this trade. But with that being said, guys, that's going to be my trade idea for the day. And if we can check out to see what Mike is going to be looking at, see what he's got on the board for the day. We'll see you guys.
What's up, everyone? We've got a crazy day in the markets today. E-minis are chopping around, but I've got my eye on Texas Instruments. So Texas Instruments reports earnings Wednesday after the close, and this could be one of the biggest read-throughs for the semi space. Wall Street expects roughly 1.91 in EPS or $1.91 in EPS or about $5.2 billion in revenue. But the real focus is going to be guidance, and that is a statement for all these semis. Investors want to know whether demand from industrial and automotive customers is finally accelerating and whether analog chip orders continue to recover after several soft quarters. Texas Instruments' last outlook called for second quarter revenue between $5 and $5.4 billion, signaling improving fundamentals. But with semiconductor stocks coming off a sharp pullback last week, a strong report could help stabilize sentiment across the group, while cautious guidance could reignite concerns that the recovery is losing momentum. So again, we'll have to see what happens with Texas Instruments, but I really like the way that the implied volatility structure is shaping up, and that is why it is my trade of the day. So if we pop over to the platform, we can see Texas Instruments has come a long way since the TA89 calculators that I used to use back in the day. I won't say how long ago, but it was quite some time ago. And now you've got this company that's gone from 150, kind of chopping around a couple of years ago, and then boom, just spiked up to 300. And we've been sitting at these elevated levels, up 100% basically from the beginning of the year, close to it. So Texas Instruments, really interesting setup. Whenever I look at earnings, I always look at the implied volatility structure. If you've ever read any of my earnings previews on the News and Insights tab on tastylive.com, or if you've checked out any of the math checks we do, we're always looking at implied volatility, and we're letting implied volatility be the guiding light for just understanding how big this earnings announcement is or how small this earnings announcement is relative to the notional value of the stock, relative to other expiration cycles. And I like the way that this sets up here. So Texas Instruments chopping around at 287, up 350 today. But the 4-day cycle, if you look at this here, July 22nd, you see the little bell after the market or to the right tells you that it is after the market closes. We've got a 28-point implied move, plus or minus, for the 4-day cycle. That is a pretty big earnings implied volatility. Generally speaking, if you just take all of the earnings announcements that are announced every quarter, from the banks to the end, NVIDIA, and that island game, if you will, if you were to consider NVIDIA is one of those, Monday night, Thursday night football situations. NVIDIA's all the way at the end. It's the final hurrah. But you got Texas Instruments here boasting a 10% implied volatility for the week relative to notional value. So 28 points plus or minus against a $287 stock. That is a high implied volatility reading for the week. Generally, you're going to see this land between 5 and 10%. The banks are usually really low, between 3 and 5% of the notional value of the stock price for the week. But anything at 10% or above 10% tells you that the market is paying attention and there could be some fireworks after the close on Wednesday. So 28-point implied move against the $287 stock point. And then you look at a further dated cycle, the August cycle, only a 44-point implied move. And even September, only a 54-point implied move. So when you've got a 28-point implied move for the next 4 days, and then you go 88 days away and you see basically a doubling of that, 50% of the move is priced into this 4-day cycle if you look at 88 days out. So just keeping that in mind and just making sure that when you have these trades in mind, you want to make sure that if you're selling premium around it, you've got plus or minus 28 points is a big number, and it allows you to reduce cost basis pretty dramatically. So what I did is I went into the 4-day cycle and I sold the expected move up at 320. And I think this is interesting because, again, plenty of premium here. And if you're trying to keep earnings trades small, a good way to do that is kind of, we'll call it the Jermal special, where we're buying an 11-day, selling the 4-day, just a 1-week differential between these trades. And I went and I bought the 320 out in the 11-day cycle. So when you have a trade like this, where if we look at this on the curve mode, I bought this option for, let's say, $6, 11 days out, and I sold the option for $3.50, 4 days out. You're collecting a ton of cost basis reduction against the debit you're paying and the long option. So looking at the analysis tab, if we were to isolate the trade that I have on right now, we can see the 320, long the 11-day, short the 4-day, paying $6 for the long option, collecting $3.50 for the short option. I was filled at a $2 debit. So this trade is ultimately reducing my cost basis so much that I'm paying about a third of the value of the long option for this trade here. So what you need to do if you're using the analysis tab is click on View Analysis, go to Theo, because calendar spreads, in this case or in any case, are pure extrinsic value trades. You have a long option and a short option that are on the same strike. So you don't really need the spread to move in the money or out of the money. You really want the spread to move right at the money. Extrinsic value is always highest on the at the money strikes. So with Texas Instruments trading at 287, the expected move is up to 320 or down to 260-ish. If we get a move to the expected move, we're going to be sitting right around 320. This long option is going to appreciate in value. It's not going to get crushed as much as the short option is in terms of the implied volatility structure here. You can see 120% implied volatility for the 4-day cycle, 85% implied volatility for the next cycle. And this is another thing I like to look at is, what is the baseline implied volatility if we go out further in time, which these cycles are going to largely ignore the implied volatility elevation for the earnings cycle. So let's call it 60%. That tells me that the 11-day is going to drop to 60%, and the 4-day is likely going to drop to around 60% too. So the 11-day, we're going to have about a 25% volatility crush, but the 4-day, we're going to have about a 60% implied volatility crush. So if we go back to the curve mode, we can analyze and kind of estimate where this profit could be if we were to hold this, let's just say, to the 23rd. So the 23rd will allow us to come to the market on the 23rd, and that will be Thursday. We'll have a fresh new market. We'll see where Texas Instrument is. Clearly, you can see there's a huge P&L chart here, but we got to crush this down with a crush in implied volatility. So let's bring this down 20 percentage points. and that will bring us to 65%. I think it's fair to say that even though the back months are trading around 60, the near-term cycles are still going to have a slight elevation because we're going to see some post-earnings movement, and generally speaking, you'll have a slightly higher implied volatility in the near-term cycle relative to the later dated cycle. So looking at the 4-day, we could just go to the 24th, and that will automatically just kill all the extrinsic value in the short option and give you a good idea of, if we were to do that, let's just go to the 24th. We still have the 20% crush here. And if we bring this down to 65%, you can see I can expect, P&L Theo, which is why you really need to have this on P&L Theo, because again, expiration doesn't help you with an option strategy that is just extrinsic value. But from 287 up to 305, let's call it an inside move, you're looking at like $350. But if we do pin that level and we crush implied volatility in the 11-day by 20%, bringing us down to a more normalized level, and we push this all the way out to Friday, assuming we collect all of this $350, we could be looking at a $600 trade, $600 winner on a $2 debit. So these trades can be really nice producers of value, especially with such a low defined risk outlay to begin with. So again, though, if we want to look at Thursday, we need to crush implied volatility here, 20%, and then we'd have to bring this one down. I'm just going to type this because I don't want to click this 50 times, but let's bring this down to 60%. And there you go. We have a similar P&L reading, which makes a lot of sense. If we assume that this is, down to 60%, and even if we were to match this one, bring this down to 60 as well, here you go. So we push this to Thursday. We change the implied volatilities based on what we're seeing here. I think it's fair to say that your back month expirations are a good barometer of where implied volatility could fall in these near-term cycles. And if you missed the segment this morning, we had Kevin Davitt on, and he had a visual that shows you just that. We were looking at NDX, but you always see this for earnings. Huge implied volatility, then it tails off, and then it kind of flattens out. But after earnings, that's where you see all of these expirations kind of show you the same thing. Domino's Pizza had earnings this morning, right? Look at this, 39, 36, 38, 37, 37, 37. So this is what's going to happen. We're going to see a volatility crush in Texas Instruments that will bring all these expirations down in terms of implied volatility. So that's how I do this. I just look at what the implied volatility is, where I think it could go in terms of a crush here down to 60%. And that is how you arrive at this theoretical P&L on this sort of trade. So if we look at this, just the ones we've got loaded, best case scenario, you get a rally up to 320, you got about a $600 winner. And I think that's fair. I've seen these things happen before where you can double or triple your debit paid if you get the move up and you keep all this premium in the 4-day cycle. But if we were to isolate this to the 23rd and just look at this and change these implied volatilities again, let's bring this down even more. Let's see if there's a huge implied volatility crush, not to the upside. Let's do minus 30%. And then let's bring this down to what? What is this? 65%? Negative 65 brings us down to 55%. So if there's a big implied volatility crush and we get a 55% reading across the board, if I crush this 30% in the 11-day and I crush the 65, or if I crush the 4-day down to 65% or 55 overall, now you're looking at a lower P&L if you get the move up, but still your break even here, this Theo break even, given this scenario, is up at 295. So if you get an inside move to the upside, you're still going to be looking okay on this type of trade. Another reason why I like these trades a lot is because at the end of the day, like, you're really reducing cost basis on the opening trade by selling that option in the 4-day cycle. You've got the 11-day cycle that gives you that ability to hold on to premium. So if Texas Instruments sits around here at 287, or if it drops down to 275 or 265, I've already reduced cost basis on the long option. I will not sell another call because if my debit paid now is already $2, and let's just say Texas Instruments sells off 10 points, the 4-day is going to go straight to zero. The 11-day is probably going to go from $6 to $1 or something like that. And in that case, I'll just have a long option on with 11 days to go with unlimited profit potential if you get a reversal to the upside, and I'll have a net debit of $2. One of the important setups here, another thing to consider is the debit paid really matters a lot. So if I've got this $6 option that I would have bought by itself and I'm not selling something against it, or if I'm selling something against it that is only giving me $1 of cost basis reduction or $1.50 or $2, and my debit paid shoots up from $2 to let's say $4, look at that. You can see even with these implied volatility changes that I've got, my break evens are way worse. My max profit is way worse. And if we bring this up to $5, you can see there's basically nothing here. So the cost basis reduction really does play a huge role in these setups. And that's why I like to say, if I'm doing a calendar spread and it's for an earnings announcement, I want to reduce cost basis by at least 50%. So in this case, if I'm paying $6 for this long option, I want to make sure that I am collecting at least $3 for the short option. I think that is a fair way to get yourself to a scenario where you've got $2 in premium and a really wide break even versus a $5 debit paid and a really narrow break even. Like, this is not a trade I would want to have on. But because I'm utilizing that really high implied volatility in the earnings cycle, you've got yourself a nice wide break even here and the ability to have a nice wide range of success, but also a really low debit paid if it does end up going south and Texas Instruments kind of stalls out or has a downside move. At the very least, I'll be able to just hold on to this long call, see if we get a reversal. This has happened to me before where it just goes to zero and nothing happens. You lose $200. It's also happened on the other side where you've got a downside move, you close the short call, and you get a reversal the next week. And now all of a sudden you've got your money back, maybe make a couple $100, something like that. So I like the asymmetric risk reward here on this type of trade. I posted it to the Tasty follow page. You can see it there. So if you go to Tasty Trade and click on the follow feed, you'll see this trade here. You can duplicate it, change it around if you want to, but that's the trade of the day on this fine Monday for this earnings announcement on Wednesday. So let me know what you think. Shoot me a tweet. I'm at Trader Mikey B there, but we've got a very special guest. We're going to bring her on and we're going to see what she's looking at in just a second.
Hi, how are you? I'm doing all right.
Have got drawn up today. What are you looking at?
We've been taking a look at a couple things from a relative performance perspective. So Mondays, and I don't know what most traders do on a Monday, but after I've caffeinated, I'm ready to dominate the relative strength. So one of the things that I've been doing a lot before I even get to the charts on a Monday is I take a look at, it doesn't matter if it's Claude or Perplexity. I've been having AI do a little bit of my heavy lifting, and I run a relative performance dashboard. So I want to see what sectors are ranking, outperforming, and I end up with a view where right now I'm looking at things like cybersecurity, cloud computing, insurance, energy, regional banks, healthcare, and that's where I'll start my day. And I'll start looking at the individual stocks that are weighted within those sectors that might start having setups for me.
Awesome. Yeah, I like that idea. I was talking about this last week too, of just like creating a little bot that feeds you information every morning. So you, right when you wake up, you can look at it and see like, okay, what's moving? What might be looking interesting today? Are there any specific tickers we can pull up that might be drawing your attention this morning?
Absolutely. Let's go through a couple of them. So once I don't know if it's worth putting on the screen, I'll leave it up to you, but once I figure out what the top, say 10 relative outperformers are, I want to make sure they're all at least positive on the month. So I don't want anything month to date that's negative. So yeah, thank you so much. So let's say I take a look at CIBR. I'll just kind of scroll down to the bottom. And most of my attention is going to be on these particular tickers. The main thing for me is as I go through things like BRNS or TENB, QLYS, is making sure that the option chain has at least 750 to 1,000 open interest. I want to have a spread that's no more than 10% the bid. And that way I'm not getting into anything illiquid. I don't have any risk of a wide spread. So PANW and CRWD are definitely on the watch list, as our OKTA. Now, for me, the biggest thing is once I've narrowed it down to those names, and I'll jump on over to my chart and I'll make sure that I don't want to be buying at a surge to the upside. So I'm not a momentum player. I'll wait for something like OKTA to pull back, preferably to some sort of volume profile level. And that's how my morning starts on a Monday, where I just do this scan the first day of the week. I come up with that list. I think I mentioned healthcare. So if I do the same thing, jump on down to, say, XLV or anything that's been outperforming. Healthcare has been good. Financial's been pretty solid. And I'll take a look once again at those names and what those top 10 holdings can be. What's interesting is normally I used to look at, say, the top 10 weighted stocks in the sector, knowing that they're going to move well with that sector. So if there's sector strength, if there's index strength or weakness, whichever way I want to trade above it. But I'm finding that some of the lower weighted stocks have been on the move. So while Abbott or AbbVie would definitely be on my list, usually things like Tech or Veev just usually don't make it. And I don't know what you've been seeing, but for me, the open interest and the volume this summer has been some of the lowest that I've seen in my 38 years. I mean, I have to go back probably better than 10, 12 years before I could see a summer that's as doldrum as this has been. I don't know if you've noticed the same.
Yeah, I mean, it's been really interesting, especially for the healthcare sector. I think you have products like Abbott that have come off the lows, but UNH comes to mind. This has been like the trade of the year from, I guess we'll call it the trade of a year and a half going into 2025, where you saw it drop from 600 all the way down to 240. And at some point you had to think maybe this thing would recover. And now here we are sitting at 423. So lots of interesting stuff going on here. And when you look at some of these upcoming earnings like Abbott and UNH, some of these other ones, when they're going to be announcing earnings coming up here, do you have any lean into trading earnings, or do you kind of wait for the pullback, like you said, in OKTA? Are you waiting for the earnings announcements, hoping for a downside move if you're looking to buy at certain levels?
I love the question. Thank you. Earnings are funny because I go back and I remember when earnings, say in the late 80s, early 90s, was basically an envelope you got in the mail. And inside, if you own the shares, you were told by mail earnings per share and revenue, and that was it. And fast forward all these decades later, it's really become quite the spectacle. So my old school habits are, I love the 6 to 4 week run up into earnings. So I call it 642. 6 weeks out, I want to find the relative outperformers in that sector that are related to that stock. So if you mentioned Abbott or UNH, I'll look at the top 10, maybe top 20 holdings in healthcare. I'll look to see whether that stock is going to have a run. So I love the run 2 to 4 weeks out because I'm just going to buy calls. I don't want to get caught up into that implied volatility increase. And I'm going to run out of time because I'm going to be flat by the time earnings come out. So I love that run up into earnings with the relative outperformers. And it may not even be the stock that has earnings. It could be something that's tagging along. So it could be, many of the stocks in the group. Ultimately, as long as I'm flat before the release, I'm good, because as you and your viewers know, vol crush is a nasty, nasty beast, and I just don't want to get caught up into it. I'll wait about 48 hours before two sessions before I re-engage that stock.
Yeah, I think that's a great call. Even after the intraday vol crush or the morning crush, let's say they have a earnings announcement after the close, and then on the morning they start trading, you'll see a vol crush, but you'll still see a little bit of elevation because you'll have that intraday movement. So 2 days after, you basically get the lay of the land. You know exactly what implied volatility looks like. You know the market's basically digested the whole move. And I think if you're a bullish trader waiting for opportunities, like I feel like this earnings cycle could be really interesting because you have all these tech stocks that are expected to just post insane numbers. And even if they do, the stock price can drop. We saw that happen in IBM just last week. IBM dropped 100 points just like that. And also looking at the way that these sectors have moved, like you look at Target had a really big intraday move on Friday. You look at Costco, big intraday move to the downside on Friday. You name it, Johnson & Johnson, like all these very sector specific names. If you're looking at healthcare, let's say you want to place a bullish trade on healthcare, but you don't want to pay for that heightened implied volatility in the near-term cycle, maybe you look at a product that has a high correlation or is in something like, what's the ticker I'm thinking of, the healthcare ticker? XLV. There you go. There's so many XLs. XLV. Yeah. You look at that and you're like, okay, I think UNH might move in a certain direction and kind of piggyback off of an earnings move. You can get involved in something like that and look for that sympathy move. And we're seeing that this morning too. Like Micron is catching a bid and so is SanDisk. So like maybe Micron has some kind of binary event, but I trade SanDisk instead because I believe that SanDisk will have a similar move as Micron without the implied volatility.
Yeah, I love the, high tides lift most of the boats in terms of the approach. And you mentioned staples, and staples are a neat place to look, as have for me healthcare, because, you look at sort of the toilet paper, power pills groups where you've got these defensive sectors that sometimes move with the indices, sometimes don't. Staples been really good. I've liked Monster. We're putting on a trade right now in MNST because it's been a great outperformer. Apparently, if the stock market's up, we need energy drinks. If the stock market's down, we need energy drinks. I don't drink the stuff. I'm a Red Bull girl myself, but Monster's been a really interesting one on pullbacks, which is trying to do today.
Yeah, I saw a really interesting stat for Monster. Like if you invested in Monster 20 years ago, like I forget the number, like 10K, you'd be a multimillionaire or something like that.
Yahtzee.
Which is it's just so funny because it's Monster. But yeah, I totally hear you. It's just one of those things where everybody needs their caffeine. You mentioned it right at the beginning of the show, right?
Caffeinate and dominate. One of the things that for sure, when I'm looking at staples or healthcare, in contrast to things like IGV, which is another sector, tech expanded software, or even the CLOU, cloud computing, and the cybersecurity I talked about before, right now, I feel pretty comfortable being in these sort of disparate parts of the market where I've got these sort of high beta names that I know could move, but I don't mind being in some boring things. I don't mind sitting in some healthcare stocks knowing that they may not tag along on those up days in the NAS, but when the NAS is having a rough time, all of a sudden Abbott, Monster are doing pretty well. And when I'm looking at, and I think probably one thing that I think about a lot, especially when we're talking about trades, the symbol and the time frame are almost equally important to me. So if we're talking immediately after earnings and someone's got a 5-minute chart, there might be great opportunity on an intraday basis, but I'm looking at holding, say, 2 to 10 days, most definitely overnight. So I'll kind of swing trade the approach. And I think that time frame conversation is probably as important as any when we're talking about trading.
Yeah, I think especially with an earnings announcement and realizing that there is going to be a continued vol crush for a couple of days. Sometimes not though. Like Domino's, I just brought this up a second ago, but Domino's had earnings. They always try and sneak these in like Monday before the open. It feels ominous, like it shouldn't be allowed, but here we are. Domino's up $5, just 2%. But when you look at the implied volatility structure, you still see a little elevation here. This is a pretty clean look because Domino's doesn't have these weekly expirations that a lot of these companies do, but 39%, 36 in the back, and then you see it kind of just like trails off here, 37, 38, 36. So this is kind of a flat line implied volatility example where Texas Instruments which is the trade we just put on here. This has your cookie cutter, just huge implied volatility in the 4-day because we're still ahead of earnings here 2 days out. And then you see it trail off down to 60%. So if you are trading implied volatility, I would expect to see these numbers, these huge numbers, 120, 85, 77. They're probably going to drop closer to 60 and probably below 60 if you look at this furthest dated cycle all the way at 53%. So maybe these 60s drop to 55. Maybe all of these drop to 55. But this will be a good example if you are new to earnings trading or just how these implied volatility structures work. You'll see this change by Thursday and Friday. Like all of these will have the same number or close to it.
For me, with the window being so short, and TXN was absolutely on the radar. So I love that you're in it. For me, I just needed more time. So I had a buy zone around 283.5 to about 281. I just needed more time, and I'd like to see it get back up to close the gap around 301. So in terms of the price levels, I love. That might be, if it's still in play after earnings, that would be fantastic. If not, I like to have about 5 trading days to let the stock do its thing without having to deal with, just for me, just a hard exit in front of the release.
Yeah. it sounds like after chatting with you for about 15 minutes here, it sounds like your MO is patience, waiting for things to come to you versus forcing it, and finding the levels that look interesting to you and going from there.
I didn't get these gray hairs on my head for nothing. You know, I've done the let's do it. My hair's on fire. Let's trade. And then now, patience, slowness, you know, and that's really what's served me at this point. I find that the longer I trade, the longer that I'm willing to give something the time to work. So my time frames end up being, say, daily time frames, even weeklies, if I'm going to hold leaps for 6 months, 12 months or longer.
Yeah, and I think that's something that we talk about too, is like if you're trading short-term stuff with options, just understand like it's a volatile endeavor. If you're selling premium, trade small enough to where you can just withstand any of the variance, because that's going to be your best bet to success in the long run. And to your point on leaps, like I have a leap in Nike, and that for me, it's just I'll buy leaps. And I feel comfortable with buying leaps when I see 10-year lows, 15-year lows. Like when a product hasn't been here since I was, you know, just a kid, really. That's when I want to step in and get into a long-term position where you have a lot of time on your side and you don't really need that much to have a nice, profitable trade.
Time is a superpower. No, I love that. I love that approach.
Love it. Well, Ms. Horner, appreciate your time. And hopefully we'll have you on again looking at these markets and trying to find some trade ideas on this Monday afternoon. But before we let you go, what is your, even if you're not trading the earnings announcements, what's the one earnings announcement you're paying attention to this week or maybe next week with some of these big name tech stocks?
Google, Meta, Intel.
There you go.
Yeah, that's definitely on the radar.
There you have it. Appreciate you. We're going to take a quick break. We're going to have Chris Vecchio on the other side of it. He's going to take a look at some of the futures markets here on Tastylive. We'll be back on the other side of the break.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Get live trade ideas,
technical analysis,
earnings setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
Only at Tastylive.
Only on Tastylive.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
We're back. You're watching Tastylive. It is still this Monday, July 20th, 2026. This is Futures Power Half an Hour, sponsored by CME Group. I'm your host, Chris Vecchio. Ilya Spivak's going to be joining us in a few minutes' time. We have a market that's turning lower again. It feels like I got off air, 7 points up, got back on air, 27 points up. Now we're back on air again, only 7 points up here for the S&P 500. Big week here for stocks with all these earnings reports that are due out. We've been covering them live here on air over the course of the day. And while things don't really pick up until midweek, there are some items of interest tomorrow, mainly Novartis, Schwab, IBKR's after hours. But beyond that, we're paying attention to what's happening with Alphabet and Tesla here on Wednesday. In the run-up until that, though, we're getting actually a little bit of better volume here today. Laura, we can go to those charts. S&P 500 only up 7 points right now on 904,000 contracts traded here in today's session so far. It's a 40.4 IVR because volatility has crept up a little bit following the weekend events. If you were watching the news, you probably saw that the U.S. and Iran have decided to start exchanging missile fire again. 18.03 on the VIX here after what was a little bit of a push to the upside at the start of the week. But we have come back in over the course of the session, although we are off the lows. Primary source of concern for me right now, I'm taking a look at what's going on with the Nasdaq, as it were, because we did get that break below that 50-day moving average at the end of last week, something that we have not seen a close on the other side of since April 7th, back when this market was still trying to find its footing. So something clearly has changed here today. I'm sure when Ilya comes on, he's going to be taking a look at the Nasdaq and tell you, maybe it's my crystal ball, but there was probably an area of support around 29,200 in the NQU6 contract. We try to rally back through there today. Nothing so far. Maybe we turn the corner as we get into the second half or the final third of the trading session here. But it does put into consideration, what do we do now with some positions that have been put on, especially in something like M&Q, which for sizing reasons, there's a reason why it was done in M&Q for this particular reason. Not super high confidence, otherwise would have gone over to the NQ, could build into a position. So just dip the toe in the water. The short strike is sitting at 28,750 here, which for today's rally, it does bring us back through there. But it does mean that this position could very much be in trouble. So I'm going to be watching today's close rather closely here. I will say that if we're going to look for a little bit of a rebound, I want to see it move through the swing low that we had down here. On this bullish engulfing bar. We'll call it actually going to be Morningstar candlestick cluster. That's 28,910. Get through there for today, and maybe we can feel better. But it's an M&Q position. It's small. Need not be too worried about that right now. The MES position that I've been nursing, which was an excellent top tick for those that missed this on July 6th, decided to get in on a break above 7,600. Got filled on a break above 7,600. It's been pain ever since then. Have not crossed the threshold by which I'd want to get out, which is a move below the 50-day moving average, and we're still sitting above there by about 38 points. So given the fact that this is about $5 a tick here in MES, yeah, we're talking about a few more $100 of potential pain along the way before I ultimately tap out. But the market's still holding up right now. Semis are finding their footing again today. Telecom's finding their footing again today. Amidst what it's going to be a very big earnings week here. Laura, we do have that graphic right now. Despite all of the recent selling in semis, which are off since the open, that is a red candlestick here. Flip over to the semis, SMH, the other chart. We can find, there we go. Semis have had an absolute tear in terms of the amount of capital that they brought in as a sectoral space in recent weeks and months. I think the chart speaks for itself. It's got absolutely vertical, so to speak. $46 billion of inflows in the past few months, which eclipses all of the money that were in the semiconductor ETF at the end of last year, and then double that, and then why not add in another? So over 200% surge in positioning. That could be a lot of exit liquidity, of course, along the way for longer standing investors. But if you're trading this, if you're in the option space, that's obviously not your prime source of concern. We do know that there's a lot of interest here, and maybe that's going to be the liquidity and the positioning problem that the markets are facing. Everyone's long this dang thing. Who's trying to buy at every dip? Yes, producing a bounce, but maybe exit liquidity. It does put me in a little bit of a sticky bind because I have an SMH position that's sitting underwater right now and at 11 days to expiration and sitting at max expiry. So I guess that's why you don't take days off in the market here. Liz Deer King pointed out, when you're sitting in a max loss position, and suppose a little bit of education here, if you're in a risk-defined max loss position and you're sitting at a few $100, what's the worst thing that happens? Nothing. You're already bathing in it. So to that point, Thelma and Louise the thing. Go off the cliff. Semi's having a nice bounce back today, but I want to see a little bit more stability above 580 before I start to think that this thing has any hope of giving any good room to the run higher here right now. But this is a future show, so we're going to keep it focused on the futures here, and we're going to go back over to our equity markets and head over to RTY U6, because we are at a very familiar level right now, and it begs the question whether or not it's worth lifting previous exposure that was put on in the space. We had taken a shot closer to 45 days, 46 days when this was put on in the RTY U6 contract, 2850, 2875 short put spread. The basis of which was on that sell-off when we were starting to move down here on July 8th, we had begun to test the uptrend from the low that we had at the end of March. And then again, well, we could call it a re-anchoring, if you will, here in the middle of June. That does look like a break. It's not feeling too hot. So sitting comfortably above the short strike still, but a market that looks like it's starting to tilt over a little bit more and more and more. So 2927.60 right now is that 50-day moving average. We still sit below the short strike, still sits below that 50-day moving average. I'm of the mindset that as long as that continues to hold, this is still worth grinning and bearing it. But the short-term momentum profile is beginning to sour. You can see it here on the daily time frame. That's a long upper wick. That's a rejection of the 1 week. That's a rejection of the 1 month. The 1 week is now below the 1 month moving average, if only to put a underscore on how the momentum profile has started to deteriorate here shorter term. And you go down to a 4-hour chart, price below the 5, below the 20, below the 21, and below the 50. So the shape of this market right now, you've had bounces and rebounds and momentum down here. We can just make these a little bit more legible in terms of the indicators. Momentum has bounced back. The price hasn't moved to the upside. That's usually a telltale sign that something's probably going to be a little bit sicker. So the way that we close today, it matters a great deal. Otherwise, I'm going to take this off. I'm going to lift it. It's going to be nothing. Absolutely nothing in terms of the profit that was turned here. I think it was $6.10 in credit, getting it back for $5.60. So 40 cents made. It's literally nothing. But it's better than nothing, I suppose, because it's a profit and it's not a loss. All right, so I have my game plan here for how I'm operating, at least around the Nasdaq, the S&P, the Russell right now. The Russell, if we continue to hold up, I'm just going to stick with it. If we do get a little bit more of a pullback, take off, see if we can bounce. I did see a question coming earlier about the seasonality moving forward, and the clock's running out if the bulls want to make their time in the sun actually worthwhile. Things start to get a little bit chippier in August, and September, October have just been downright not good. Volatility tends to expand in the window as well. August is a really nice month for volatility expansion. So as we're looking at this market on an upswing right now in terms of vol, heading into the final 10 trading days of the month, or 10 days of the month, it's July 20th, we might as well be a little bit mindful of the fact that this isn't necessarily the best time to start looking on some silly long delta positions. So maybe take it off, maybe see if we can get a pullback. Let's see how that Nasdaq operates today. It's continuing to find weakness, just not doing what it needs to do against that 1 week here. 28,500 becomes like the absolute stopping point. You're below there. I don't see any reason why I would keep any long deltas on, even if it's something like M&Q, which is a pretty small position, and take it off for a loss. But it would warrant cleaning up the book elsewhere. We did have a longer standing trade that was on in the name GOO, which makes sense given that Alphabet earnings are coming up around the corner. Not necessarily a earnings trade per se when it was put on at the time, because it's not sitting right on the immediate side of the expiration window. We have earnings coming up, Wednesday this week, and this is a 4 DTE option. So didn't get in there, but at 32 days, 325, 330 is in here. Small profit so far, effectively saying that this swing low here from the end of June is going to hold. That plus the Nasdaq plus the semiconductors. I mean, this all looks like one trade coming into the middle portion of this week. So I may be lifting off some of the index level exposure that I have on right now, considering that I have the idiosyncratic risk of some of the movers that are going to drive those indexes over the next few days. As Liz called it earlier, the Texas hedge, right? You think that you're putting something on to take off a risk of another position, but in reality, what you're doing is just putting more eggs in the same exact basket. Not usually the best thing to do right now. We can move on off of equities here. I think Ilya is going to join us shortly. With that move higher in oil today, it's been a day where bond yields have started to trek to the upside again, which has kept in play some of the shorter dated treasury exposure that I've had to the downside. Likewise, in ZN, you're seeing a note of 108, 27.5 ticks. We have ZB here 110 and 19 ticks now, which I suppose is a good time to bring in Ilya, because higher yields typically are good news for your US dollar, or good news for perhaps a short gold position. Ilya, what do we make of this move higher in yields today, even though oil prices have not done anything since you and I convened yesterday on First Call?
Well, it seems like there's a whole lot of repositioning, but we're not really taking out any major levels. So, of course, crude is up on the day. It gapped higher. It's gone through periods where it's erased it, come back, erased it, come back. But ultimately, we're sitting relatively higher on the day. And so the attempts to erase this move have basically failed. Yields have been much more convincing, but they haven't really broken any ground. Gold hasn't broken any ground. The dollar hasn't broken any ground. And so I think there seems to be this sense that maybe the war trade influence is actually waning a bit.
It does feel like that a bit. I mean, oil being up 0.4% today, it's a far cry from the 4% gain that you and I were looking at yesterday when the market opened. Funny how those technicals work out sometimes, by the way,
Yeah.
Ilya. We can go back to the charts here for what it's worth. We had outlined on yesterday on First Call the 618 level, in part because from a technician's perspective, it's the inverse of phi. Inverse of phi is where you find a trend change. So downtrend here would be over if you get above 84.75 or so. What did we see happen yesterday? Overnight, 84.60 high. We kind of touched that 618 level, and then we give it up. But we don't get below 50 again, Ilya. You know, we tried it. We bounced off of the 1 week moving average. We've now been sustaining that on a closing basis ever since the turn higher on July 7th. We've been riding the rails of that 1 week to the upside right now. And there's a lot of backwardation coming back into the market, not just for oil, but particular European energy futures.
That's
which
right.
I think is worth noting. So how are you playing this now? I know that you've been leaning long again. I have some long deltas on here still. I'm trying to figure out if today's a day to do something like a short iron condor, or did I miss the opportunity to buy the dip this morning when we had the crash below 80 and get the bounce back to the 1 week? Should I be patient to wait for the next pullback to the 1 week? But this is starting to feel like, you know, oil longs are working again for all the wrong reasons.
Right. I mean, I think at this point, if you're going to do anything beyond what you already have on, you've got to wait a little bit. And it's because you're grinding against the underside of what has been a pretty convincing congestion area before. This is one of those things where technical analysis works because everybody is looking at the same thing. You have this big range. You're right on the bottom of it. You're testing it as resistance where it was a meaningful support that screams at you with the naked eye from the chart. Either we're going to break past it or we're not. And if we are not, but we sustain the uptrend, that'll be a buying opportunity on a pullback. And if we break above it, you just have to be ready because after that, you're open to wartime highs as a run. And so you would just have to get on the boat. But at this point, the risk reward doesn't really look attractive to initiate. I'm sitting, I'm not adding anything right here.
You know, the one thing that I find interesting about this market is if you look at the highs and lows, you're looking at like 67 and change on the low side, 95 and change on the high side. Okay, so if we were to go to 67 and change on the low side, or say 95-ish on the high side, this is actually a pretty decent setup right now for looking for something directionally neutral. Aside from the fact that we're at the halfway point between the initial war high and then the calm down lows.
Right.
Look at the pricing here, Ilya. We're 1 point wide. 37 cents a credit, so more than a third of the width of the strike, better than 2-to-1 risk to reward, almost 60% probability of profit. I mean, check the boxes everywhere, and even the buying power that's used is basically 1-for-1 for the max profit potential. So you really are getting good bang for your buck there. I've seen some of these trades where it's like, yeah, it's a risking 3 to make 1, but like the amount that I could potentially make is a 20th of the buying power required. This is going to tie up so much capital, relatively speaking, for the next few weeks. Like, I don't really want to do that. This, on the other hand, makes a good deal of sense to me to try to get off here. The expected move, by the way, we have the one standard deviation move, which is the dotted line, but the expected move here comes out to the end of that brown bar here you see on the chart. So sure enough, 94.95 on the bottom side, which happens to be the range highs. And then 67 or so, 66, which happens to be the range lows. I mean, the pricing seems perfect, that we're going to ride this out and just grind between these two zones for the foreseeable future. I'm willing to make that bet as opposed to trying to swing another directional trade, which I have a few of right now. on the basis of whatever war headlines are coming out of the Middle East or, Tehran or Washington, D.C.
Well, and it's not an unreasonable thing, just if you look at what we were just talking about with the knock-on effect from this to other markets. The reaction function is waning. It seems like the market is looking at this and going, yeah, okay, they're shooting at each other. Okay, maybe we don't take all the war premium out of this market. That's silly. They're shooting. But neither side really seems to want to go full bore. And as long as we can still convince ourselves that that's really true, you could just kind of grind here for a while.
Yeah, before we hop off of oil here real quick, Laura, do you mind bringing up the oil inventories slide for me? That'd be fantastic. One of the pieces of data that we've had in recent sessions has been the U.S. crude oil supply. Ilya, you've pointed out, as a number of commentators have, that we can't really get down to tank lows or inventory lows, as it were, for two reasons. If you're not thinking about the salt caverns, there's a certain amount of oil that sits in the bottom of the tank above where the valve is. I mean, literally. And so you're going to have a floor underneath there. But the other side of this is, Ilya, the salt caverns themselves, if you take out too much oil, they fail structurally and they collapse.
Oh, and no one knows how much that is, by the way, because nobody has ever tested it.
It's ballpark. It's like 130 million barrels, 160 million barrels. The point is, the data that we just had on the screen here, what are we talking about? We're talking about a market that's now facing 40-odd year lows in oil inventories. Days of supply.
Everywhere, too. Days. Not just in the U.S. The U.S. is just an avatar. I mean, all the countries that had meaningful inventories, you saw exports to those countries collapse. Their imports basically shut down, and they started to draw from domestic stock. Everybody needs to refill, and anybody that has not had a strategic reserve up to now, all of a sudden understands they need to have one.
I'm still with the idea that we can, on these dips, we can look a little bit longer out, which is why at, 59, 20 days to expiration on those pullback in oil that we had in June, I was looking to go out longer term. We have a floor underneath us. We have to refill the SPRs at some point. I'm going to look to do that again. So short iron condor now, maybe we get a little bit of a vol compression. Maybe the war spins more wildly out of control. And, the upside of this, we go up to the mid-90s again. Although sitting at 82, I think that, $13 in one day, Ilya, by the time you and I meet again tomorrow, probably get a heads up between now and then. I do have a phone. I do have a computer. So would be able to get out of the short iron condor. Otherwise, I'm going to still treat the short put spread stuff, the floor under oil, even if there's a pullback. I'm more than happy to hold that kind of stuff. I just don't want to be short calls or call spread in the event that we have another supply disruption, which is, can be painful.
No, I mean, my exposure here is a mix of outright long call verticals and short put verticals to help finance that. And so I'm just sitting and waiting now. If we fail at this congestion area, I'll just call it a day and wait to reload. If we break higher, we're going to see which side of the trade I end up adding to, depending on what vol looks like then.
Let's talk metals here a little bit. You mentioned that there doesn't seem to be a significant catalyst follow through right now in metals. No. And I'm partial to this because I'm taking a look at gold for myself. And I'm thinking, okay, 2-year yields are up, 10-year yields are up, 30-year yields are up. The dollar is bouncing at a place where it should be bouncing if it's breaking out. All this kind of adds together for what should be a more difficult environment for gold prices, particularly if we're talking about another jump in energy or at least disruption in the Strait of Hormuz, which we saw was a really negative catalyst for gold this year. Central banks and sovereigns had to raise capital to pay for, the higher cost of energy. So 4,008 right now. It's only down a 0.25%. Wait a second. And silver's up 1% here. Make sense of this for me. Is this the end of the catalyst, or maybe silver still doesn't look that great, buddy? I know you're not a diagonal guy. I know you're not a diagonal guy, but like for a rally, it's still up 1% on a day where it's more, shrugging things off. It really still can't get out of like this downtrend, it feels like.
We're going to see here, because this is essentially what I've been trying to sniff out for the past week and a half. And it's why I have this silver call vertical on. It's why I've started to buy a little bit of gold here, just the 1 ounce futures, just a little bit, just a little nibble. That these things are not falling in this environment is really interesting. that the bonds are not breaking their range supports in this environment, that's really interesting. And so, to me, I think what's starting to sort of settle onto the markets, especially after last week's negative inflation numbers, there is something that's occurring here that's different suddenly. And maybe we've overcooked the idea that there need to be all these rate hikes, because maybe what's going on is actually the economy is already taking significant damage. And what's coming is an economic downturn.
We saw in Canada today, their inflation data missed expectations badly. It's one of the reasons why the Canadian dollar's down today. And we're going to revisit that real quick here. You mentioned gold and silver. At the end of last week, so the way that you and I have been operating slightly different. Obviously, I've been looking short here and still positioned in the money, building into a bigger 10Z contract here. I was looking for one of two things to occur last week. And obviously, Ilya, I'm going out the door on Thursday for taking a day off on Friday, so adding to a position on Friday, like I'm going out the door. I don't want to do anything different to anything. Right. So the two things that we were considering, at least I was talking about at the end of last week, were there are two types of ads here, right? Below 4,008 or below 39.55. So technically speaking, on Thursday last week, you got the close below 4,008. I didn't add. We have a little bit of a bounce back here, so I want to see what happens again. But sitting short 10Z, the idea here is if this is to continue to momentum to the downside, we've been riding the rails of this 1 month moving average here. Mm-hmm. Maybe this is a bear flag. You get down below 39.55, you add in the next leg. So for me
I'd flip right over. I've been short this thing all year. I'd flip right over.
I don't have anything I know you've been short all year long for sure. I don't have anything to do today at this level, but if we were to get in at 39.55 just as a 4162.25 cost basis, it does bring down the cost of the average position into about 4093.17, in which case it's going to feel a little bit more directional. One reason why that's on my radar, and there's nothing to do or adjust yet, Ilya, that US dollar today, US dollar today is looking really, that's exactly what the dollar index should be doing here. If it's bull flagging, it should be bouncing off of former resistance turn support over the past year. So I bring up the Canadian dollar in that context, and I want to try to get this filled. You don't quite see it here on 6C. Not quite. Half a pip. 71.58.5 versus 71.58. But
it looks more impressive on spot.
And much more impressive on spot because it's also a bounce off of your 50-day moving average right there with your bullish engulfing bar, just above a former swing high. So
that spot chart is very constructive.
The thing that I need to get filled right now at 46 days to expiration, I'm trying to get a 71.5, 72 short put spread filled in here, which again fits the criteria that we talk about in terms of typical tasty mechanics. It's 50 pips wide. The credit's 17 pips. So a third of the width of the strikes. 17 is a third of 51, right? Risking 2 to make 1 at 50% probability of profit. I wish the probability of profit was a little bit more, but if there is a turning point, Ilya, I go back to that dollar CAD. I'm not actually executing it in spot. I'm doing it in 6C. This feels like the place to try to pick up a little bit of dollar exposure, given especially what DXY is doing in today's session.
For now, I'm still on the other side of it, and I'm still on the other side of gold, but I've got my finger on the trigger because this is a turning point and it's going to go this way or that. So either I'm already right or I need to get to the other side fast, and that's what I'll be doing.
I like that. That's a good mindset when you're taking your trade. I'm already in the right position, or I just need to quickly change my mind.
Yeah, or I need to be on the opposite side of it in a hurry.
Were it so easy. Okay, you mentioned the yields going up. The one position that I still have working here from last week, now we're at 4 days to expiration right now, Ilya. I'm going to talk about this with TP in a little bit, but we were looking at the 112, 111 long put spread, as it were, given the breakdown that we had seen in the market, and started to see a little slip below that uptrend here. I think this is something that, because we're now getting into the territory of, I'm at like 80% max profit, I'm just going to take this off, because if this thing bounces a point or so tomorrow, oil collapses $5 and yields go down, the gamma in this position is working very much against me. So might as well take the money and run. If you don't, in fact, let's just take the money and run now. It's a good way to end the show with a little bit of an upswing.
There we go.
Take a little profit off the table. So we'll maybe have to do something more in ZB later on. You and I are back later today, though. We'll be back for overtime, 4 Eastern, 3 Central, so 2-hour break. Until then, though, we're going to bid you adieu and say good luck trading. There's more Tastylive programming coming at you next. Up next, what do we have on the calendar here? It's the one and only TP, live trading with TP. Ask him what he's doing with bonds, because he just made me some ice cream money, as he would say. You're watching Tastylive.
strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Get live trade ideas,
technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
Only at Tastylive.
Only on Tastylive.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Good afternoon, folks. 1 p.m. on Monday, July 20th. I'm Tom Preston, and time to check out a bunch of things to trade for about half an hour now. And let's check the market really quickly. S&P is up 15 bucks. Not really anything. Obviously, I did not call this bounce today after the sell-off on Friday, but I'm not surprised. It's just kind of an inside day. I sold an Iron Condor in SPX, 0 DTEs. Can't remember the strikes exactly. They were way out there, and took that off about 2 hours later for a decent profit. So that was, the market was up, or the S&Ps were up, I don't know, 30 bucks or something. Now they're down up 15. They're just bouncing around. It's a very quiet day, as witnessed by the VIX, which is down 83 cents to just under 18. It was lower. And I took off the 15.5, 16.5 put spread that I sold last week. Sold it for, what did I do, 30 cents or something like that, and bought it back for 6 cents this morning, just because, why take the risk? Why take the risk of a 50-point up move that would drive the VIX down 2 points? Anyway, enough of this chit chat. Let's get into some symbols. So I loaded up some stock symbols that I was looking at today in my cherry bomb list. I just have this cherry bomb list that I created for myself, and just technically what I do is, let's say if this were yesterday's, I'd click on it and right click remove from watch list. So I take the old stuff off and then I add them up here. So let's say I want to watch the VIX. VIX, bang, adds the VIX right there. Okay, so that's a very easy way to create a little daily watch list of things that you might hear us talk about on air, things you might see in the news, et cetera, little trade ideas you might have, and then just kind of edit it as you see, as you go about your day. First thing that I saw was Chipotle CMG. And I am not a CMG eater. The stock... Here's CMG. The stock is down today, fairly sharp. We had popped up just in my scan for big standard deviation moves. It popped up in the downside pretty significantly. And is it a bullish opportunity? Who knows? I mean, I don't think it has the explosive diarrhea issue that Taco Bell had. But living in Central Texas, I don't eat Chipotle food. I mean, I go to actual Mexican restaurants, whatever. The tacos here outside of Austin or in Austin are awesome. There's no need for me to go to Chipotle. Let's check the skew, though. Stocks down, might be a contrarian trade. Earnings are coming up at the end of July. Let's see how much we can get paid for the end of the week. These markets are pretty tight. Lots of open interest in here. Stocks at 33.18. Let's just use 33 as our base. Let's say down a buck, up a buck, down to the 32 puts, trading offered at 23, 34 calls, 36 skews, pointed to the upside pretty substantially. That's impressive. Let's see. What are the 32 half puts, 66% probability of expiring worthless. 75% probability of making half its max profit. Max profit's 34. Half of that's $17. I would put this out at 35. Generates $7.15 of theta versus $595 of buying power effect. So let's just do the math on that. 7.15 divided by 595 is equal to 0.012. So it's 1.2% of theta. Not a surprise the theta is so high on that, just because there are 4 days to go and it's screaming volatility here. But I'm just going to offer this out at 35 and see if it gets filled. Mid price is 34, and I'm not going to get 35. I'm not going to get 30. Let's do 30. Let's do 34. Let's see if somebody bites at 34. Again, not bad metrics for this trade. This is just a contrarian bet on Chipotle. This is not a trade recommendation, nor a recommendation for the restaurant. Whether you choose to trade this or eat there, entirely up to you. Offer this out at 34 cents. Submit, and back to the watch list. Another couple of things. I was looking at the banks, specifically Bank America and Wells Fargo. Wells Fargo, the bank everyone loves to hate. Bank America, only just like the IV ranks, or excuse me, the overall IVs. Where's my IV numbers? Oh, I took that off. They're pretty high in these banks. And the question is, do I want to be bullish or bearish in these things? Here's Bank America. Here's Wells Fargo. They're both off a little bit today after rallying lately. Let's take a look at BAC. Let's take a look at BAC. And the bank stocks like XLF, pretty strong, I believe, on higher interest rates, which should boost bank profits. But it started to slow down a little bit. I'm short in Iron Condor and XLF, but in Bank America, let's take a look at the options. Here I have loaded up a short call vertical. Let's see which way the skew. I bet the skew's pointed to the upside anyway. 60.69, 32 days. Is there anything in 4 days? No. I mean, there's just not enough premium in these 4-day options to make them worth looking at. 11 days, maybe. Sarah bearish on this. What do we get for this spread? No, not enough. Clear this out. Let's go to 32 days. Give ourselves some duration on this stuff. Stocks at 60.69, right in between here. Down 2 points, up 2 points. 58 puts at 68. 63 calls at 70. Yeah, like I said, the skew's pointed to the upside. But you know what? I don't know. I think if there's any sell-off in the market, we could see maybe it'll hit bank stocks. Maybe their run-up is over. Let's try the 63.65. What do I get? 43 cents for that. That's not enough. How about the 62.64? That's what I filled in my CMG, 34 cents. 62.64. If I were bearish on Bank America, yeah, it's just a trade. If I'm bearish on bank stocks in general, Bank America specifically, I can get 64 cents for this spread. 72% probability of making $32 before 32 days generates 70 cents of theta versus $1.36 of max risk and buying power effect. Why not? Let's try 64. Fire away. See if we get filled. And besides, over the past week in these cherry bomb videos of them mostly bullish trades, I'm getting a little sick of the bullish trades. So Bank of America is a bearish strategy. Back to the watch list. Meta. Let's try another bearish one. Meta. Meta is a heartbreaking stock for me. I've tried it from the long side. It hasn't worked. So just call this a vengeance trade. Here's Meta, chart of Meta. Volatility. This, like I said, folks, implied volatility is the only chart that I have, or the only study that I have on the chart. And I'm not downplaying any of the studies. You want to put on moving averages or whatever, go for it. I just look at the volatility. It's been climbing a little bit. When does it have earnings? Earnings are coming out the end of July. But let's look at, it's up. Okay, good for Meta. Good for Meta. Let's see, 2 days. What do we get? Just for the sake of argument. Just for the sake of argument, folks. 2.5 points. Let's see. 2.5 is 25. 25 divided by 3 is about 8. So I like to try and get 80 cents for these 2.5 point verticals. Here's one. 2 days. Clear trade. How much time do I want to give this? How about 0 DTs? Let's see if we can get paid this afternoon. No, I'm not going to get 80 cents for these. IV ranks pretty high with earnings coming up. I don't want to trade through earnings. But yeah, the skew, I know, again, it's going to be to the upside. It's in between 64, 647 and 650, down $5, up $5. It's pointed to the upside a little bit, not strongly. Let's go here, 7 days. Let's see what we get for the 67.5, 70. No, nothing. 62.5, 65. No, we're going to go down here. 60, $1.12. Right here. I just want to be bearish on Meta. I don't know why. I just hate Meta. I'm hating on Meta today. I'll take advantage of this rally. It's, again, like Bank of America. If the market sells off over the next week, Meta could lead the way. Offer this at 93 cents. Not great in numbers. P50 is 54%. $1.84 of theta though versus max risk of $157. Psh, I'll take it for a $650 stock. Let's ship it. See if I get filled at 93 cents. Ship it. Boom. Watch list. And this is how I just bang through symbols. Let's go into Lucid. And, I poo-poo electric cars. I do. I don't drive an electric car. If I were going to buy an electric car, I think it would have to be a Toyota. And the only reason I would do that is I think Toyota would probably have the best support for, future battery replacements and maybe even third-party things like that. So I'm not a big, so I don't have an electric vehicle. Whatever, batteries eventually die. And, GP, they're going to last for 20 years. Okay, maybe. But I like the idea of having a car for years and years and years without having to worry about it. Besides, in Central Texas, the heat just kills batteries. Anyway, here's what's going on with Lucid. Lucid earnings coming up on August 4th. There was a story I saw that California is offering its own rebates for electric vehicles. I don't know, some deal where they give you $3,500 or something for if you buy an electric vehicle under $50,000, but there was a special carve out for Rivian and Lucid. No matter what, because I think the cheapest Lucid car is maybe $70,000-$80,000, something like that. I don't know, but they removed the $50,000 cap for Lucid and I think Rivian. So could that push Rivian higher? Maybe. I don't know. Let's take a look at the options. As you can see, I don't overthink this stuff. I really don't overthink this stuff. What do I like about Lucid? The options are relatively tight. 3 cents wide here, 6 cents wide here, kind of wide. 5 cents here, 2 cents here, pretty tight. 4 days to go. How about these 7 puts? Let's go to the 11 days. See what we get. So the skew right in between 7.5. Okay, fine. It's closer to 7.5. Go down to the 650, 6.5 puts. and 8.5 calls. The skews, let's go down to the 6s. These are too wide. Go down to the 6 strike, $1.30, $1.50 down, 6 up to the 9s. Yeah, skews kind of towards the downside. But let's see. How much would this cost me? $1,967. I don't know. I don't love that. Let's go into, see, earnings are coming out. If I want to take risk through earnings, would I take risk through earnings? Sell the 5.5 put? This is a little better. Buying power effect, $466. 80% probability of making $17 before expiration. Let's see, 2.5. Skews pointed to the upside in 32 days. Let's just offer these out. There's 11,900 contracts of open interest. Who the heck is doing this stuff? Let's offer it out at 42. See if I get filled. Get decent return. So again, theta return on capital. Theta return on capital is one of my metrics. I'd like to see it out of the platform. I have it in with the developers. We'll see if they can do this. 1.45 divided by 458 is equal to by 0.003. So about 0.3% return. I like that. Ship it, submit. Go to watch list now. Let's look at now. Service now. The only reason now came up is I saw a story on AI stocks, and not traditional AI stocks like Nvidia or AMAT or something like that, or TSM. But now ServiceNow is I guess a service provider, advisor, consultant practice, whatever the heck it is. I don't know. But they're using AI, whatever. I don't know. It's reasonably liquid options is what really grabbed me. I was looking at some very short-term stuff. Volatility, 145%. Earnings are coming up in 2 days. Okay, so what's the chart look like for those playing at home? Not really going anywhere. It's up a little bit today. Pulled itself up off of lows. Let's check the skew. Should we reward it with a bullish trade? Stocks at 104.97, close enough to 105. Go down $3, up $3. The 102 puts 495. The 108 calls 515. Skews point to the upside. Let's see if we can get 1/3 of the width of the strikes. Yeah, so if you're willing to trade through earnings, and the thing is, the only thing that makes this attractive is the 145% overall IV. You're getting rewarded for taking risk in NOW. Do I know anything about the stock? No, don't really care. Skews pointed to the upside, high IV, that's all I need to know. So if I sell this for 62 cents, P50, because there's only 4 days, P50 does not like this calculation when it uses 145% volatility of the 4 days. Okay, when I created that model, it's a Monte Carlo simulation, 1,000 potential price paths between now and expiration, and because of that high IV, it just makes the paths crazy. It's okay. I mean, it's not wrong, but it is what it is. So 68% probability of expiring worthless generates $5.89 of theta versus $138 of max risk. I like that. Let's play. Let's go with 62 cents. Bullish trade in NOW. Filled. Take a fill. Let's go into watch list. Moving right along. How about Abbott? Abbott Labs. Everyone's favorite pharmaceutical, right? Stocks up today. A lot of those healthcare stocks are rallying. People are feeling sick, I guess, with the eating the contaminated lettuce. So they're going to places like Abbott to buy their medication. I don't know. Just making stuff up. It's stock that's rallying. I'm thinking, when does it have earnings coming? I have a short call spread loaded up in here. Doesn't have earnings. Volatility is fairly high. Go to the chart with Abbott Labs. Volatility came off a little bit on this rally, when it had earnings. But again, it's still reasonable. 30% is right in the middle. Filled on my Lucid. Right, yeah, it's probably high enough. Let's just be bearish on Abbott. I don't know. We'll go to the phones at some point and get your opinion. I mean, I do, hey, your guess is as good as mine is with any of these symbols. This is just number of occurrences, folks. So if I can do 4, 5, 6 trades in a half an hour, it just adds into those number of occurrences. And I like to do, thousands and thousands of occurrences a year to get the probabilities aligned with the theoretical. So if I'm selling this 2-point vertical with 32 days, Abbott Labs, and I know you want to look at the skew, everybody does. Oh, I have an iron condor in here. We could do an iron condor. How about $3 down, $3 up? Yeah, the skew's to the upside. Let's see. Should we do an iron condor? Let's go to the phones. Let's go to the phones. What do you think about Abbott Labs? Neutral, bullish, bearish, what? Oh, well, no, let's give you a choice, either bearish or neutral. Short call spread or iron condor. Let's put it up to the. I'm reading. I can see now, thanks to the production team, Garrett and the production team was able to get my internet all working properly and my screens running. Bravo to him. Now I can see the trading platform and the YouTube chat. If you have any comments about Abbott, let me know. If you work there, let me know. In any case, if we did an iron condor, let's push this down. See anything? Nothing yet. Dollar sign, $1.30. Let's push this out here. Kind of like this one. How about one more? $50.50, $10.10, 65 cents. Yeah, all right. I'm going with neutral. I'm going with neutral on this stuff. 10 votes. I may have to change this. They're coming up with votes. I don't know how to see the results. That's bearish. 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 Iron condor on big nothing burger. Bearish. Come on. Ooh. I'm being told it's 50-50. It's a battle of the bears versus the iron condors. A bear, of course, could rip a condor apart. Bears are pretty big. Do you see that? Everybody saw that video on Alaska of that guy getting tossed 8 feet in the air by the moose. Don't want to mess with moose. Don't mess with a moose. Don't mess with a moose. Condor, we're going with condor. What's the probability again? 16 votes? For neutral? I'm hearing 56% for neutral, I'm being told. All right, I'm going to go with neutral because I can't spend more time on this. 2-point iron condor for 65 cents, 66% P50. I like it. Ship it, review, and send. Send. Bing. There's only so much time. Who did I submit it? Filled. There's only so much time you can spend looking at this stuff. Next, let's go to Bank America. We did Meta. How about Alcoa? Alcoa. Alcoa. So Alcoa, volatility is fairly high in here. Does it have earnings coming up? No. I think the stock's been getting whacked. The stock's down, obviously. Nobody wants aluminum foil anymore. Personally, I love aluminum foil. It makes all sorts of things possible. You can make helmets out of it. You can you can wrap your barbecue in it, all sorts of things. The problem is, let's say stock's at $43, down a buck, up a buck. So 42 puts 232. Not awesome liquidity in here, but it's not bad. No open. I mean, there's some open interest around here. Let's go into 25 days. It's about the same. About the same. How about these? No, let's just stick with 32. If up a point, down a point, 42 versus the 44, 261. Skews pointed to the upside on these things. What do we get for the 41 puts? So selling the 41 puts, dollar, and do this, and this is going to be price discovery, folks. This is going to be watch Tom Preston work in order. 78% probability of making $91 in before 32 days generates $4 of theta versus 648 buying power. Not bad. $4 divided by 650, let's round up, is 0.006. That's pretty high. That's 0.6% per day of theta return on capital. And it's only $648. Yes, the max losses if the stock goes to zero. Okay. But the bottom line is the buying power effect is approximately 20% of the stock price, approximately. And what it means is this is what the exchanges and the regulators think is a reasonable amount of money to hold as capital against the risk of this short put. So yes, the max loss is much bigger. The buying power effect is what I typically look at for trades like this. Let's ship it at 182 and see if we get filled. Hey, let's play. See, that was quick. Probably should have worked it a little bit harder. Now the 182 bid. Yeah, good for me. I hit the bid. Thank you very much. Thank you very much, Alcoa Market Makers. Let's go in and look at, we did Lucid, we did Now, we did AA, Meta, we're working. CMG, we did. Abbott, we did. How about XLE? XLE is the energy ETF. XLE has been rallying, obviously. Let's check out crude oil /CL. Crude's been rallying with the bullets flying and stuff, and unfortunately, we had 3 American soldiers killed over there this weekend. Very sad. Hate to see that. And it's driving up crude oil. Crude oil is off a bit though. I'm not very bullish on this stuff. Let's go into XLE. And can we do a bearish trade in this? There's a bullish trade. I don't know. Let's see. How about the markets are tight in here. That's nice. Let's go into 60, 62. No. How about the 59.5, 61.5? Yeah. So 58.25. The stock's right in between. Let's go down $2, 93 in the 56 calls. $1.15. Skews point to the upside. That's what I'm afraid of, folks. Let's all right, fine. You know what? Let's play with the skew. Let's look for a short put spread. Fine. We'll keep the market happy if I can find one. No, I don't see it. Let's do. You know what? Let's do this one. Let's do a 1 point for 30 cents. Let's just do it. Review and send. Somebody filled. Ooh, explosive diarrhea. So diarrhea can go farther. Yeah, that's good. Okay, so one of the questions I saw, can you check out MSTR? Let's check out MSTR, just MSTR, which is a strategy. The big, I guess it's an AI company. Skews pointed to stocks 99.75, right in between here, down a buck, up a buck. Skews pointed to the upside. I like it. Let's sell the 96, 94, 63 cents. Earnings are coming up in a couple of days. This is before earnings. MSTR, that's how I evaluate strategy. Send 63, submit. Filled to 63. So we did a bunch of trades. Half an hour, that's how I bang through symbols. Okay, I don't take any one of these any more personally than any other. I don't take Chipotle any more seriously than I do Abbott Labs or Strategy. If I can get filled, if the metrics work for me, that's it. So none of this is a trade recommendation. If you do want to trade these things yourself, that's your call. And if you do, please do not take any more risk than you are comfortable with.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show, today. Welcome to the broadcast, man. Welcome to the Monday edition of what it is that we were trying to do. Welcome to the We Are Back from I Ghosted Y'all edition of what it is that we were trying to do. So on Friday, I just bounced, man. Goodwill Hunting style, like no goodbyes, like no, this is coming. I was just gone. Well, it turned out that Friday morning, my youngest daughter, our assistant, our intern for the show, Amelia May, all of a sudden, out of nowhere, she just kind of started feeling bad. She was throwing up. She was this, that, the other thing. So all of a sudden, like Autumn's trying to juggle all these things. And my son Eli had a ninja tournament later that day that he had been training for. He did not want to miss. And so I'm like, well, I got to call in because my man's not going to miss his ninja tournament. So Autumn ended up staying home with Amelia. I went to Eli's ninja tournament, which he took fourth in, by the way, which was absolutely awesome. And so sorry for being gone on Friday with no warning, with no, hey, this is what's going on, whatever. But I think the fact that we gave Amelia a little Taco Bell on Wednesday night, that took her down. So welcome to the show. I am glad that you guys are here. No, I would never allow Taco Bell, but it's so good. Oh, it's so good. And you know what? We are depriving our children of the lived experiences that we had as elder millennials. Like, is there anything better when you're like 14 or 16 or 17 or 28 and you're like, man, I really need something to hit the spot. I know I'm going to pay for it later. Like, I know the gotchas that are coming on down the chutes, they are significant. But man, this gimme right in front of me, I got to have it. Like, I 100% got to have it. But Autumn would never let that stuff in the house. I can assure you. But anyway, if you are watching over on the Tastylive network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. I can assure you it will be a good time had by some. So Laura, bring us into the chat. Man, it's only Monday. The week is almost over, and we're already well off the reservation with no prospects of returning. Even the S&Ps up 650 on the day. Got the risk-free instrument, also known as the Nasdaq futures, which is an extremely high-risk product if you're brand new to trading. That is a very weak, mediocre attempt at internet sarcasm. Up 152. Got the boomers down 220 And then you've got the Russell 3000 down 5.5, got bonds down a little bit, got notes down a little bit, got oil up a little bit. You got UB40 down a little bit. You got the shifties getting slapped around just a little bit, down $8. Got the Hunt Brothers out there. I would have to imagine the weekends are good times for the Hunt Brothers. I mean, with all that gas station pizza they're slanging out the back door, I would imagine they're doing okay. Yeah, silver up 55 cents. That makes a little bit of sense. British pound is down. Euro is down. Volatility is down. Volatility futures down 53 cents. And then spot volatility, the old VIX. Yeah, apparently on Friday, man, some things happened in the markets, all right? On Friday, like we had some knickers, and they weren't exactly ironed out straight and narrow. They were kind of twisted up a little bit. VIX down 77 cents, down to 18. Let me go ahead and revisit. I know we got crushed on our Netflix trade. We'll talk about that for a couple of seconds too, of course, but let's just look at the overall market. Let me see here. If I go to, I see you guys in the chat already putting in some work, man. Look at you guys. Look at Jared Kramer. Adam Armfield is here. Grumpy Mike is here. C.A. Paris. Ash Finn is here. Aunt Duh is here. Please give my best to Uncle Duh. I appreciate you all so much. I see a lot of people tuned in for the morning show Inside the Trade. Dr. Jim at 9 Central, 10 Eastern. We are dangerously close to the too much Dr. Jim level. Like we are asymptotically approaching that guy with a quickness that you don't usually see. So be very careful with how much Dr. Jim you might consume in a 24-hour period. But I see you guys in the chat just putting in work. I'll get to as many of you guys as I can here in the next little bit. But if we look at the Nasdaq, so it's up today, right? Up 142 today, which is good. That's obviously a positive thing. But then if you go to, if I go to the chart, what do I want to see here? Yeah, I want to see what happened on Friday. Yeah, so this is a daily. Yeah, this is a daily deal. So take a look at this, man. This was Friday. This was Friday's action. And again, we were gone. I mean, we were obviously, I had the skinny on Friday morning. I thought everything was going to be normal. And then it was clearly not normal. But the range on the NASDAQ on Friday was 881. You had them closed down to a low of 28. Well, they didn't close on the lows. I don't want to misspeak here. They closed at 28,773. The low was 28,408. And so they rallied them pretty nicely off the lows there, a few hundred points it looks like. And so that was pretty good. But then if we take a look at EMI S&P, similar type of thing here. EMI S&Ps were all the way down to 74.73 on Friday. They closed them at 74.97, little pin risk for all my pin risk fans out there. And they're actually kind of squashing them right now in the moment. EMI S&Ps only up 175. E-mini S&Ps at 7,500. And then, yeah, they rallied them back a little bit into the close on Friday, and then a little bit of strength today that is apparently fading as we speak. But let's talk about Netflix for a second. So Netflix, hold on a second. Netflix, let's see. That's pretty funny. Laura's sending me some sneak messages. That's pretty good stuff. So if I go to okay, so Netflix. Okay, I'm back on track. I mean, not really, but more or less. So if we go to Netflix, okay. So Netflix, we did our earnings trade on Thursday night, right? And again, guys, listen. I'm gonna try and do it. I'm gonna try to find more ways to make you money. I'm gonna do it. I will spend at least 2 to 3 minutes on it today. And by at least, I mean at most. But I don't know that I could do anything more than I'm already doing. I don't know that we can improve upon the perfection that we already have in our midst. We already have it in our hands. Just fade Dr. J earnings trades sight unseen. Doesn't matter the stock. Doesn't matter the strategy. Just be on the other side. Case in point, exhibit quadruple Z, Netflix from Thursday. So Netflix, we triple dipped on the upside and we got burned on all three. So we obviously had the butterfly. This was a super butterfly, if you guys remember. It wasn't as super as I would have liked, but nevertheless, this is what we have in front of us. So we did a super butterfly in Netflix. If I bring up my activity tab, this was the trade, by the way, that we did this morning on Inside the Trade. And so we did an XLE strangle for $1.91. Nothing super crazy about it, but of course, I'll talk about it for 8 to 12 minutes here in a couple of seconds. If I go into Netflix and I go to just the last 7 days, you can see here is the super butterfly. This was the butterfly. Well, actually, you guys called me on this, and thank you guys. You saved me for sure. I actually put this in wrong when I first entered the butterfly. I meant to do, you can see it was a 1 by 1 by 1. It was supposed to, of course, be a 1x2x1. And I forgot that, and you guys helped me out with that in the moment, so thank you guys so much. So we ended up with the 1x2x1, which is what we should have had the entire time. So we ended up burning about $1.20, $1.21 on the butterfly. We still have on the short put right now, and it is TBD. I mean, it doesn't look good, but technically it is TBD right now on the put. And then, of course, we have our in-the-money short put that we're just holding as essentially stock at this point. So we have, wow. I forgot about Starbucks. I forgot because I meant to do it on Friday. Man, autumn took us down, man. Autumn took us down by feeding my children Taco Bell. I've been telling her for years not to feed my kids that trash. I've been telling her for years, for decades, I don't want that in-house. I mean, I'm going to eat it myself. Like, don't look at those wrappers over there. They have nothing to do with you. But for the kids, man, autumn took us down. Starbucks is gone. I can't believe it, man. I can't believe it. So if you happen to have any Banana Natty on hand, if you happen to have any Banana Natty left, I mean, we're 7 minutes into the show right now. That's only about a 50 delta. I would pour out a little bit for the Starbucks position because it's gone. It's over. It's like it never happened. Right? So now, I mean, all the long-term projects and the case studies and whatever else is, man, it's gone because I meant to do it on Friday. I didn't want to do it on Thursday. Let me see, though, if we got assigned on Thursday night or Friday, because that's very different. Because I know we held it on Thursday. I said, hey, let's roll the dice. Let's push this a little bit further. I think we have plenty of extrinsic value to shield us. I am now curious to see if we actually got assigned on Thursday night or Friday night. Obviously, carrying an in-the-money option through expiration, you're going to be assigned. That's going to happen every single time. But I'm very curious to see what happened. So, all right, so I have lots of things. I'm in a fast market right now, as you can see. Let's go back to Netflix. So Netflix. So right now we have our in-the-money short put. How long is this show again? Yeah, we're gonna need a whole lot of more time than that. If we sell a 90 put, and by I mean we already have this on. We have on an in-the-money put in Netflix. This is basically long stock, as I've said. You can see right here the delta on this is right around 100. Essentially, 100 shares of stock would be equivalent to this position because the deltas of 100 shares of stock are 100. The deltas on our in-the-money short put at 90 is 99.8. And so we're essentially holding long stock at this point in Netflix. That's fine. That's okay. That's what we wanted the entire time. You can see there's no extrinsic value there. So obviously the likelihood of assignment is very possible at this point. But, we've been trading this like long stock the entire time anyway. So that wouldn't really be that big of a deal. And so that would be fine. The buying power changes would be somewhat significant, and it might cause us to potentially, have to do something and adjust the position after taking assignment. But for right now, there's no reason to do anything just yet. The butterfly you guys saw, you guys can smell the smoke in the air. You can see the pile of ashes, and that guy is over and done with. But this short 70 put, so this is the guy that we currently have on. Now, what can you do when you have a put that you sold that you want to adjust? Remember, the default setting in a lot of ways is don't do anything. Right? If it's an index, if it's a stock, we're like, hey, I really feel good about this stock coming back, which is no guarantee, of course. It may be the one time in the history of the stock market that it never comes back. And by the one time, I mean, there are plenty of stocks that never come back. But that could happen. Of course, you have to be aware of that. We're all aware of that. That is the risk that we're taking. But if you really want to play the upside, then holding the in-the-money put, in my opinion, and holding that intrinsic value and holding those deltas can make a whole lot of sense. But there might be times when you're like, hey, I kind of want to lessen my risk, improve my probability, and I'm willing to give up some upside in exchange for that. Well, one of the things you can do with a short put is you can roll it out. And in the money short put specifically, you can roll it out, but you can also roll it down. So I can roll it out and pick up extrinsic value for doing that. But then I can use that extrinsic value to kind of restore some of the space in the strategy that you typically have with an out of the money option. And so right now, if you look at this 70 put, you can see that we are in the money by a few points. So I would much prefer to have like a 67 put or a 67.5 put at least. That would essentially be the at the money strike, or a 66 put or a 65 put. So what I want to do, let's take a look at what it would look like right now to roll this put out and potentially down to create that space. So we go into our 70 strike. Again, this is not typically my preferred adjustment strategy when it comes to short puts, I actually usually prefer to I usually prefer to hold the delta and the intrinsic value and just say, hey, I'm going to make the stock beat me some more. I'm going to make the market beat me some more. And in a market that wants to go higher over time and has been incredibly bullish, that's going to pay off. That's going to pay out pretty well. But of course, if that doesn't happen, then you're going to be hurt more than you would be if you did roll out and roll down to create the space like what we're going to look at here in a second. So if I go into this 70 put, let me highlight this guy. If I go to roll the expirations, okay, so if I roll the September, so let's do this kind of piecemeal and we'll kind of analyze this in like a step-by-step type of function. So if you take a look at what I'm setting up here, this would be a roll from the August cycle to the September cycle. So I'd be adding about 28 days to this guy, so about a month. If I did that, I would pick up 90 cents in extrinsic value. Okay, that makes sense. That should not surprise anybody. Now, if you're brand new, welcome to the show. I'm glad that you are here. Man, you are in the right spot when it comes to active trading, when it comes to selling volatility, when it comes to high probability. I mean, I try to personally produce all my content around those pillars. So you are in the right spot, and just stick around. I promise this will all make sense through osmosis. Give it like 1 to 41 months, like somewhere between that range, it will all begin to click. I can assure you. But if you've been trading for a little while, then you probably already know that if I roll this guy out into the future, I'm taking on more risk. I'm taking on unlimited risk for a longer duration of time. So I should be compensated for that by way of more extrinsic value. That's exactly what we see right here. So if I wanted to roll out from August to September and keep the strike the exact same, I would pick up 90 cent. I would pick up a 90 cent credit for doing that. Okay, that's an option. But what I want to do, I want to explore, let's use that credit, or at least some of that credit, if not all that credit, and let's actually begin to push the strike down lower so that I can take what is an in the money option right now and at least make it like an at the money option, if not an out of the money option. So to do that, what I would do now is I would take my strike from 70 and let me move it down to 69. Okay. So if you notice here, I'm using some of my extrinsic value, right? I'm using some of my extrinsic value to reposition my strike, right? Typically, we're rolling on tested sides. Typically, we're rolling the opposing side of the strategy that has not been hit and has not been tested. But there are times to maybe adjust the tested side. There are times when it comes to recentering and repositioning to actually move the side that's been tested. And when it comes to a short put, you only have one side. Like when it comes to a short put, the one side is both the tested side and the untested side at the same time. Like it is both. It is all the above. And so when it comes to this short put, I can move it from a 70 to a 69 strike. That's a little bit better, but it's still in the money. Now my extrinsic value and my credit collected has dropped down to 35 to 37 cents. Okay. So if I push it down another strike, if I push this guy down to 68, now I'm into debit territory. So now I'm into the debit territory. So that's not typically what I want to do, especially on a position with like Netflix where I'm already kind of loaded to the gills. Like I'm kind of loaded up, to the hilt in terms of, upside risk in Netflix. I'm bullish on the deep in the money short put. I was bullish on the super butterfly that didn't work. And now I'm bullish with this leftover short put that was a remnant of the super butterfly. And so this is where kind of being mindful of upside risk and concentrated risk and things like that can be really, really helpful. And so for right now, I don't think I want to be adding risk to this trade right now. And so looking to roll for a credit is still very much top priority. So I can't do it yet. So what could I do? Well, I can't roll down anymore because if I keep rolling down, the debit's just going to grow. So my only option from this point is I have to now explore rolling even further out in time. So now September is not enough. We've got to consider going to October. We might have to consider going to November, right? And again, remember, if you have a short put on and the stock has gone down and your short put is now in the money, especially if the stock has gone down a lot and your short put is in the money by a lot or a significant margin, this is not a good scenario for you. Like you're not holding all the cards. You're not holding all the leverage, pun intended, right? Maybe you're holding too much leverage actually, But in a sense, if you want to reposition the strike to make it a bit more favorable for you, then that's going to cost you something. And so in this context, it looks like what it might cost us is having to now be in this trade for a very long time, where the decay slows down, a lot more things can happen. It could get a whole lot worse. Now, again, I mean, the Greeks kind of slow down, not as much delta, not as much vega. Well, actually more vega, not as much delta for sure, not as much gamma. And so, thinking about Greek exposure as it relates to exploration cycle can be really, really, really helpful. But right now, September is not going to cut it. So we're going to highlight this guy. Let's kick it out to October. Okay, so now, look at what has happened. The plot thickens. So now I am in October with 88 days to go. I mean, I didn't think we were long-term traders, but apparently now we are long-term traders. 88 days to go. I can roll down to the 67.5 strike, which is effectively my at-the-money strike, and I can do it for a 48-cent credit. So I'm continuing to improve my basis. I'm continuing to improve my break-even point. And again, the trade-off here is if Netflix does rally back, because you might be looking at this and you might be thinking, Jim, I don't see any gotchas, man. Like, why would I not do this? Like, what are the gotchas with doing this? Well, it's a good move to make. I'm not saying it's not a good move to make, right? The gimmies are you're able to improve your basis. The gimmies are you widen out your break-even point. The gimmies are you reposition, the positioning of the strike that's been tested. These are all gimmies. But what are the gotchas? Well, there are at least two gotchas. Number one, if you stay at the same strike, you pick up more extrinsic value and you give yourself more profit potential, just by and large. But then number two, which is kind of like a subset of number one, so maybe we have 1A and 1B. If Netflix does rally back, we are not going to get paid back nearly as quickly as we would if we held on to the position that we have right now. Now, again, you might be thinking, man, this company's going under, like it's over, it's done. Like this thing's never coming back. So I'm actually okay with that. And that's fine. And that's what makes a market. But again, just understand, what am I signing up for? Right? Understand, what am I getting myself into? That is essentially the gimme gotcha exchange and the gimme gotcha relationship with rolling out and rolling down on an in-the-money put when it comes to repositioning of the strike. But given the fact that we already have an in-the-money put in Netflix, which is giving us a lot of upside delta already, this seems like a no-brainer to me. So we're going to go ahead and we're going to do it. All right, so we did it for 48 cents, and there you go. So we rolled out Netflix. And that is that. Oh my gosh, yes, Starbucks. We have to talk about Starbucks. And I see you guys, man. You guys are in the chat. I see Laura in the chat, reminding you all that you have one job and one job only: to pump that algo. Get in there and drop stuff in the chat. Questions, comments, stories, jokes, random rigmarole. Whatever you want to put in there, man. Just strings of characters. Right? It'll make some sense to the algo in some way, shape, or form. So put it in there. We will take it all. But if I go to Starbucks, let's take a look at Starbucks. Now, this is where, when it comes to assignments, you can't do the activity tab. It'll kind of lull you to sleep a little bit and make you believe things that aren't necessarily true. Like if I do the activity tab and I go to Starbucks, this is just a little insider tip with Tasty. You can see 7 days, it appears nothing has happened. But au contraire, mon frere, a lot has happened. And so the activity tab is not going to get us there. I don't even think the change will get us there. Let me bring up my change there really quick for my Rooster fans out there. For my man in the box fans out there. There you go. So now, not Netflix. Let's look at Starbucks. I don't want to see the change for Netflix. I already know how bad that was. Yeah, this guy is not going to help you either. Right? So you look at the change, and it's giving us a whole bunch of riffraff that doesn't mean anything to anyone. You look at the activity tab, that's not going to help you either. I mean, assignments kind of throw a big wrench in the works, so it makes sense. You have to go to the history tab. So we go to the history tab, we punch in Starbucks, and let's take a look at what happened. Now, again, I really did not think this would. I don't know what happened. I have not looked at this. I have no idea. You're only going to see this live on the Tastylive Network. And have I ever let you down live? Have I ever had a huge snafu live on the show that we can't take back? On second thought, don't answer that. But right here, I don't know. I did not think it was going to happen Thursday night, and I still don't think it happened Thursday night. I think this happened Friday night after expiration. I think we had enough extrinsic value to shield us. You can go back and watch the show in the Thursday archives. You can go back and check that guy out because your boy needs that watch time, so you should absolutely do this. I think we had like 30, 40, 50 cents of extrinsic value. And so that should definitely be enough to ward off any of the long side exercisers. Let's go ahead. Let's go back to, I'm a little nervous. I got to be honest, because I don't know what's going to happen. So Laura, do you have the edit ready to go? Do you have the cut, splice, clip button ready to go? If we go 7 days and we look at Starbucks, look at that. Well, what do you know, man? It's almost like Dr. Jim has been doing this for quite some time. Man, look at that. We got out at 5 o'clock, not on Thursday. We got out at 5 o'clock on Friday. So we did it. We held this in the money option the entire week, which again is not to say this will always happen. It's not to say that you'll never get assigned. It's not to say that, that you might not get assigned yourself, but it is to say that remember, if you have enough extrinsic value that is in the option to ward off those long side exercisers, then a lot of times it's going to work because they're giving up that extrinsic value if they choose to exercise. And generally speaking, right, option traders, option investors, can you be an option investor? I don't know, man. That sounds like jumbo shrimp to me. That 100% sounds like jumbo shrimp. It also kind of sounds a little bit like tuna fish and applesauce. I'm not sure these things are supposed to go together. But can you be an option investor? I don't know. But either way, from an economic significance standpoint, nobody wants to give up, $20, $30, $40, $50. And that's what they would be giving up if the extrinsic value were 20 cents or 30 cents or 40 cents or 50 cents. So unfortunately, our Starbucks position is over and done with. But we move onwards and upwards to new horizons. Yes, many, many, many new horizons coming on down the chutes for sure. So if we go to, let's see here. Oh, look at Laura coming up clutch. Let me see if I can surprise and delight somebody. Well, hold on. Okay, so Laura has a great question for us. I'm going to get to that in 1 second. That's near the beginning, though, Laura. I'll get to that here in 1 second. Let me see if I can surprise and delight somebody near the end. Man, can I find we got any new people? I'm seeing just the old crusty people. I see Ray Reen in the house. Let's pump that. I'll go. Ray Reen might be new. What's going on there, Ray Reen? I appreciate you very much. Man without a parachute. Random rigmarole, my man. Man without a parachute. That's what I'm saying. You're getting it done. You're putting the work in. And now the algorithm has no choice but to push this out to more folks, but to push this out to more people. And so thank you very much there, man without a parachute. And so, all right, let's go back. So Laura's got a great, okay, so Laura, you can bring that question up now. This is from Orgdenu. What is going on there, Orgdenu? My man, part of the core position. Orgdenu, I hope everyone's good at home. They are. If I'm at 21 days to go, the extrinsic value position is 0. Should I close it to avoid assignment, or should I wait until 14 days to go to give the DNS a chance? Okay, this is a great question. Thank you, Orgdenu. Excellent question. So a couple of things to think about. Number one, if you have a trade that is anything other than significantly in the money, it's going to have extrinsic value at 21 days to go. It's going to have something. It's not going to be 0. The only scenario where you might find yourself with 0 extrinsic value is if you have an option that is deep, deep, deep in the money. Case in point, again, let's go back to my Netflix trade. This is the perfect example, right? Like if you look at this 90 short put that I have on, there's still 32 days to go, but look at the extrinsic value. It's 0. Why is it 0? Because it's $23 in the money, right? So this is the only exception to this rule. If you're super deep in the money, that's where you might actually see 0 extrinsic value. But as long as you're somewhere around the money, in the money a little bit, out of the money a little bit, even out of the money a lot of it, those options are always going to have extrinsic value. So essentially the scenario that you've painted is only going to happen when you're deep in the money. So in that case, you are basically holding long stock if you have a short put, or short stock if you have a short call. So then the decision to keep the trade on or not doesn't come down to extrinsic value anymore. It comes down to a purely directional play. which doesn't necessarily mean you take it off right away. You may want that directional play. You may want that directional bias for whatever reason you want that directional bias. Like that's your feeling about the stock, that's your feeling about the index. It fits well with the rest of your portfolio. Like you can fill in the blank with what makes sense there, but just understand that that is indeed what you are holding. You are holding long stock or short stock, and there is no extrinsic value left that's going to, decay over time. Like that's all gone. And so when it comes to giving the DNS a chance, it really just comes down to a directional play. Now, to extend your question a little bit, to kind of, offer up a bit of a broader net to maybe catch a few more scenarios. What if I'm at 21 days to go and there's very little extrinsic value left? And so I've essentially captured most of the extrinsic value in the trade. Well, if it's a winning trade, I think you definitely take it off. I think that's a no-brainer as long as it's economically significant. You don't have to wait till 14 days. I mean, anywhere between 21 and 14, I think you're totally fine. But that's where you take it off. It's pretty straightforward, in my opinion. If it's up 30, 40, 50 cents or more, almost regardless of what your profit target may have been on that trade, you go ahead and take it off. What if there's some extrinsic value left and it's a losing trade? Well, this is where, maybe you decide to roll it, right? So maybe this is where you roll it out to the next expiration cycle. You bring in more extrinsic value. You improve your break-even point even more. Like that. That's where I would kind of probably be looking to just go ahead and extend the duration of the trade. I'm not doing that right now with Netflix because there's only, not even only. There's still, that's the word I was going for. There's still 32 days to go in the Netflix, in the money short put. So I'm going to sit tight. And so hopefully that helps you there, Ordenu. But thank you there, my friend. Man, let's go all the way back to the beginning. Man, look at you guys, man. I appreciate you guys. Sam L is in the house. I hope you had a great weekend. We did. I mean, Amelia May, she recovered pretty quickly. She bounced back pretty strong on Saturday. And so, man, these kids, their immune system, 99 times out of 100, like they're back like within the day, like within the hour, right? And I'm pretty sure that's because they're faking it most of the time. But even when it's funny too, my wife, she will not buy into this, right? And I'm like, man, have you ever been a child before? I'm like, are you serious right now? Like Eli, man, he's got you in the palm of his hand. He's just milking it. Like he's clear of the concept. Like he's done this before. He's seen how the movie ends. He knows what he's doing. Right, Mom, my stomach hurts. Mom, my head hurts. Mom, my this, that, the other thing. And Autumn she's so sweet and she's so loving and she is just so compassionate and caring and empathetic. And it's like, oh, baby, how are you doing? This, that, the other thing. I'm like, that kid is faking it. That kid is 100% faking it. And I started saying it early on, but then it didn't end well for me. And so I just go back into the studio and I answer some emails from you guys. And yeah. But anyway, the weekend was good. And I digress. And so there's O'Daniel's question. I appreciate you, my friend. Thank you so much. Wolf is in the house. Let's go, Doc. What's going on there, Wolf? Thank you for being here there, my friend. Sam L, looks like we're back for another week of gotchas, some bloops, and asking the most important question, what could possibly go wrong? Correct. We asked that question for Netflix earnings, and we found the answer, actually. I was kind of hoping we might be able to sidestep getting an answer that quickly, but no, we got it. We got it in spades on Friday. Let's see. Ordenu, you are the piece de resistance. You are the greatest. Thank you so much. I appreciate you, my friend. I'm going to send you those euros that we agreed upon for you planting this comment in the stream at this very time. So thank you, my friend. The piece de resistance. There you go. I like that a lot. E-Media is in the house. Samuel, time to wake up, fire up the charts, and remind the algo who's in charge. Spoiler, it's probably still the algo. That's correct. The algo is in charge. I've been all about the algo from day one. The algo can check the tapes. It can check its own tapes. We've been all on board with the algo from day one. So remember that in 2029 when they all fully take over. CA Paris is in the house. What's going on there, CA Paris? Thank you for being here. Brian Racketon is here. Hello again, Dr. Jim. Nice job this morning. Yeah, thank you so much, man. They got your boy. I mean, that's it, man. They got your boy in the morning slot. They got your boy in the afternoon slot. They got your boy in the evening slot. And there's only one slot left, and that's the infomercial slot. Right? And so you better start clearing your schedules at about 12:30 a.m. because I'm coming for you. And so let's go ahead and Laura says she has another question. Let me get to one more. This is a surprise and delight inside of a surprise and delight. Man, let's do it. All right, Laura, you can you can push this guy up too. Can you please tell me how to know my net profit after multiple rolls and delta adjustments? How to know when to close the trade for profit on the Tasty Trade platform? Great question. So this is a great question. I'll get back to kind of moving through them sequentially. So number one, here's what I would do. So the chains can get you there. So that, a lot of times if it's just a couple of rolls and a couple of adjustments, I mean, the chains in theory should be able to handle whatever you throw at them. But every once in a while, right, again, you want to hear some rooster, and all of a sudden Carly Rae Jepsen comes on. Like all of a sudden you're like, I thought this was Man in the Box, and it's Nickelback. Which, I mean, that's a lateral move, let's be honest. But if you want to double check, you can go over to the activity tab and you can just actually manually do it. And I do this oftentimes myself, where I'll just kind of pull up, just sort by the stock, and then you say, all right, did this trade, the roll adjustment, and then just kind of scribble it down, and that's where you're at. And then from there, like I know, like for example, if I go ahead and do, like let's say I did a bunch of trades in Netflix, and I went to the activity tab and I saw that my total credits collected were $6. So this is my total credits collected, and I'm left with 2 short puts or a short strangle, whatever. I now know that if I buy this back for $6, it's a scratch. The whole thing is a scratch. If I buy it back for, $5, I make $1. If I buy it back for $4, I make $2, and so on and so forth. That's how you figure it out. That's how you reconcile it. What should you go for? That's a much harder question to answer because there's multiple pathways forward through the forest in terms of what's going to make sense. Generally speaking, for me, when I'm rolling and adjusting and I'm making all these moves around the edges, I'm not looking for, I'm not in offensive mode anymore. I'm in defensive mode. I'm not looking to push the ball down the field anymore. I'm more like, all right, let's try to stop the bleeding. Let's plug some leaks and let's try to keep the lights on. And so with that understanding, I'm not going to be going for like 50% of this $6 anymore. That's way too much. I'm probably not even going to be going for like 50% of my original profit target. Like let's say that I originally sold it for $2. That would mean 50% of that would be $1. I probably won't even go for that anymore. I might just go for, any type of green, any splash of green on the screen. I'm going to take it. I'm going to run. I'm going to take it. I'm going to move on. Or even, some splashes of red. I'll just be done with it. It depends on how bad things have gotten. That kind of begins to, it calibrates or recalibrates, I guess I should say, my expectations with the trade. When things get really bad, I obviously lower my expectations on the trade, correspondingly. When things are only like a medium amount of bad, then I typically am like somewhere around a scratch, maybe a small winner or small loser, and then I just move on. And, as long as things are happening like within the kind of the, normal operations, I don't typically change too much. But when I roll, I almost always bring my profit target down from what it was because it doesn't make sense to keep that. So hopefully that helps you there, point B. Thank you there, Laura. That's some good stuff. Man, I think, did we just get a surprise and delay from Laura? So I surprised and delated y'all, and then Laura surprised and delated me. And so, wow, that was some good stuff. So I appreciate you there, Laura. Nice job. And so let's see, CA Paris, E-Media, Dr. Jim, what happened to you on Friday? And what did you do with Starbucks? I forgot. Yeah, we went over that a couple minutes ago. I clearly forgot about it too. But again, it did happen on Friday. So we did go out with a bang there at the very end. Jared Kramer, we get double sessions of Dr. J today. That's correct. And it will be that way indefinitely into the future. Ash Finn is in the house. What is going on there? Ash Finn, I appreciate you so very much. Adam Armfield, a ninja tournament. Did he assassinate anyone? He did not. It was kind of, he's 9. And so I think the assassinations are in the 10 to 12 group. And so it was mostly, it was like Ninja Warrior, right? So it was like obstacles and like rings and like all that kind of stuff. And it was cool, man. It was cool to see all those kids do it. And it was really, really fun to go watch. And so I didn't like having to ghost y'all. I really didn't like that at all. But the gimme, that was the gotcha, right? The gimme was I wouldn't normally get to go to something like that because I'm with you guys. And so I got to go to that and see him do it. And it was really, really cool. And he was super surprised when I showed up and not Autumn, because he's like, why are you here? And I was like, I'm here because, Amelia, blah, 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 blah. He's like, oh, wow, this is awesome. All that kind of stuff. So maybe we fired him up a little bit to get forth. It's pretty cool. And so Jared Kramer, we must look after our intern. That is correct. We must do that indeed. BBB fine. Hey, Dr. Jim, glad you are back. We are here. Lorge P, Monday chest day with Dr. Jim. Let's do it. It is International Chest Day. That's correct. Again, this is not rocket science. We are not splitting the atom. Monday is chest day. Tuesday is back day. Wednesday is legs day. So obviously off day. And then the rest is up to you. And so Grumpy Mike, Ninja Attorney, is that like the obstacle course TV show? It is, actually. It is. Let's see. Shane says the France of Ninja Attorney. I'm not sure what that means, but it sounds like it could be pretty funny. Sam L, hope our intern is feeling better and fully recovered. She is. She bounced back really, really strong. I don't think she was faking it, though. It's taken a lettuce parasite for people to blame Taco Bell for diarrhea. That's correct. We need the intern back before things get completely out of hand. I agree. Viggy Zags, a little bleep and bloop action coming your way only on the Tasty Live Network. And in the house, I am upset. This is a family show. I am upset that I can't get my midnight Taco Bell midnight fix without changing my shorts in the morning. Again, guys, listen, I don't know who said it, right? If you know, let me know. If you know, let me know in the chat because I want to know and the algo is dying to know. But man, it is a catchy jingle. For every gimme, there's a gotcha. You know that Taco Bell gimme, you already know it. I don't have to sell you on it. You already know it. Like you could smell it right now. It's got that mixture of kind of like amazingness with like trash. It's like it's got that blend of like, should this go in me or should I put this in the trash can? I'm actually not sure. But you know you want it, you know you're craving it, but you know what's coming on down the chutes, and it might be sooner than you expected. And so Grumpy Mike is here. Word is up. Ranch is in the house. Word is up. Man without a parachute is back. Appreciate you. Sam L. Doc, I only give protein bars to the kids. There you go. The Snickers bars, they've got protein, carbs, and fats. That's basically balanced nutrition, right? Well, did you know they have a protein Snickers bar? This is really hard to find. I think it's really popular in Europe, actually. Sam L., I think you're in Africa, if I'm not mistaken. I think this is really popular in Europe, and sometimes you can find it at like random gas stations. So whenever I go to a gas station, the first thing I check is Hump Brothers Pizza. The second thing I check is protein Snickers bar. And I have found it at a couple. It's not at every single one, but I've definitely found it at a couple. And yeah, it's an amazing thing. It's exactly like what you would think it would be. And so it is a marvel of technology. And so point B is in the house. Word is up. CA Paris, just a little bloop. That's all you need, man. Just a little bloop. Point B, there's the net profit. Thank you there, Lord. We got to that one. Let's see. Jared Kramer, the Bears are trying to bring us down during Dr. J here. Yeah, they are, and they're doing a decent little job. I mean, S&P's down 9. Boomer's down 300. Man, I don't know. Somebody check on their local neighborhood Boomer. I mean, they're napping right now, but they'll be up in about a half hour. And so give them a courtesy call. But BBB fine. Dr. Jim is great at setting piles of cash on fire. No one does it better. No one does it better. Ranch, the order change, that would be the Allison chains. Ordenu, fade the man, fade the market, follow the doc. That's his strategy. That's a bold strategy, Cotton. Let's see how it plays out for him. But I appreciate you. We win as a family. We lose as a family. I like that. I like that a whole lot. But you should still fade me. So Viggy Zags, next time I do one of them earnings one day jammies, make sure I put it on after this show. I knew I was a goner on that. That's correct. Weiss in the house. What is up? Jackie W. What was Starbucks a covered call? It was, but it wasn't any old covered call. We actually held that guy for a year and a half. We held that guy from December of 2024 to now. Now I could get back in. I could, do all these other things. But I'm like, I don't know, man. It feels like it needs to be done. And I wasn't necessarily ready for it, but this is maybe better. This is better than having like the LeBron retirement year. Like I got to go around to every city. We have to have an event. We got to have speeches. It's like, nah, man, just be done. Just be done. It's over. And so Grumpy Mike and Chorito sounds really good right now. I know. You know it. I know it. We all know it. Not the trash at the bell now, but the way they made them in the 70s. 70s? Man, I don't know about the 70s. I don't want Taco Bell in the 70s. I want Taco Bell from the future. Like Demolition Man? When Taco Bell won the fast food wars and everything was Taco Bell. That's the Taco Bell that I want. I want the Taco Bell from the future. And so Jared Kramer, the Bears broke the 7,500 on the ES. Did they now? Maybe they did. I mean, it's hanging on. It's clinging on to dear life. Live from Vienna is here. Stan Lucian is here. Doesn't matter what we think. It's a coin flip. I totally agree. I couldn't agree more. But man, we got 43 minutes to fill. Right? We got the Dr. Jim power 3/4 of an hour. Right? There's so many coins. There's only so many coins you can flip. I mean, that actually kind of sounds like it might be tomorrow's show. So you're not going to want to miss that. But Jared Kramer, it's kind of weird to see Bears in control leading up to earnings, if I'm being honest. I agree with you. Jackie W. Starbucks was a short 105 call. Starbucks closed at 105.49. Yeah, well, it was a covered call, though. It was a covered call. Donnie said his thing on the Truth Social, and the Bears were on it. Yes. Ordenu, let's see. Jackie W. I hear Iran wants to make a deal. I'm sure they do. And our boy knows the art of the deal. So it's a match made in heaven, is it not? for the 27th time in just the last 10 days. I think it's a match made in heaven. Let's see. Ryan, day 4 of 1 to 41 months. That's correct. That is 100% correct. Nice job there, Ryan. That's well done. That's very well done. Sam L, 1 banana natty for Starbucks. One day it's a core holding. The next day it's a sign and riding off into the sunset. That is also correct. And that's just how fast things can change. I mean, markets move and things change. You just never know what is coming on down the chutes. And so it looks like, am I done? It looks like I'm done. And so, man, I appreciate you guys, man. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys tomorrow.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Live trade ideas,
technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
Only at Tastylive.
Only on Tastylive.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hello. Well, it's a new week, I guess, isn't it? And it's a good day. It's a really good day. So overall, as far as my charting and my prognostications have been going, it's been going great lately. I'll be the first to admit there are some times I run cold, and it's really bad when I start talking about like long ideas and such. But it's been going great lately. Just fantastic. There's one and only one area that I've been stinking, which is crypto. But otherwise, sorry, I've been knocking them out of the park. I nailed the SMH top like to the minute. I like set it on the air. I've been right about SpaceX. I've been right about the diamonds, the IWM, all of that. Semiconductors, on and on and on. So it's even just today, because if you watch me in the morning, I spoke about, the market was like blazing higher. NQ was up hundreds of points. Everyone's running around screaming, buying stuff. I was like, I'm shorting more. Because the charts are looking beautiful. And that's exactly what's going on. So we've gone from a completely green day, bull ecstasy, to red ES, red RTY, red YM. The only thing green for the moment is the NQ. I've got a hunch it'll be red by the time the day's over. But it doesn't have to be, because the larger setups are just beautifully in place. And like I say, the fly in the ointment is Bitcoin. Sometimes I feel really in sync with certain markets. I've been crazy in sync with all markets, with the exception of friggin' Bitcoin. And I think what's going on is that people are like rushing, trying to find something that's going up. And so, now that semiconductors have completely stunk up the joint, they're scurrying over to buy Bitcoin. That's my theory, and it's probably right. And so I don't know. I guess I'll just wait, keep an eye on it, wait for higher prices. But it's been a dud. So let's go into things that aren't duds. Let's look at the charts. Diamonds has been a sensation. We talk about this daily, and it stayed above that trend line persistently. Finally cracked it a little bit last Thursday, and then we fully cracked it on Friday. We got a little bit above this price gap while it was monkeying around here, but the fact is that we cracked it last week. I went short the diamonds right about there because it was, if you watch me in the morning, I noted that we were perfectly guessing the bottom of that trend line. It was just a fantastic place to short it. So I was already short. I just added more. So we've got a bearish engulfing pattern on this now. And it seems that the arch enemy of the bears, which has been the phrase, Iran wants a deal, is maybe losing its efficacy. Because for months, Iran wants a deal, which is just completely fabricated, I think. Sent markets skyrocketing to lifetime highs every time. Iran wants a deal. Whoosh, up they go. And I guess they trotted up Marco Rubio to say it this morning, and it worked for a little while. But reality is starting to sneak in a little bit, and we are seeing some selling. And I just love this. Diamond's looking terrific. It's my biggest position by far. IWM also looks good. I shorted this on Friday. Same rationale. It broke the trend line. It rallied, kissed the bottom of the trend line, and we are undoing most of Friday's gains. I don't think we'll get far enough to be a bearish engulfing pattern today, but we do have a beautiful broken trend line on our hands, and we might. Things have been bleeding out. People are freaking out. The vast majority of traders have no idea what to do in a bear market. Zero, because they've never seen any market that's gone down for more than an hour. They're utterly naive. Doe-eyed, naive nitwits. They have no idea what a bear market looks like. And it's going to surprise them. SpaceX is kind of a rapid introduction to what that looks like when you lose 50% of your market cap in like 2 weeks. And over $1 trillion. Was it $1.5 trillion now? It's getting there. So, it's going to be really interesting to see just the look on people's faces as this thing kind of unveils itself over the next year or two. Tech stocks, XLK, are rallying. We were weak on Thursday. We were weak on Friday. Absolutely expected it to rally today, which is why I lightened up in some positions on Friday. We are still up, although we're near the lows of the day now. But as I said, we were up hundreds of points in the NQ earlier. Now we're up 50. And it could be red by the close, like I said. But the cold fact of the matter is that XLK peaked on June 3, which feels like, a decade ago. And we've been sloppily moving lower in fits and starts ever since. Now, as far as the ES goes, and I said this same thing this morning, and we'll close with the NQ later. The ES is fine. It's a mess. It has been range bound for months. And if you sort of thought of the range as like a 0 to 100, we're kind of at 60 right now. So on Thursday, we were right near 100, and we slipped some on Thursday, slipped a lot on Friday, rallied today, and then it barfed all over its lapels. So now we're at a loss on this. So we're down around 60 again. There's room for downside, even if we're range bound. More important to me is things like the SMH, the semiconductor index. This peaked here on the 22nd of June. And in that time, it has crafted a rather handsome looking head and shoulders top. So we have a left shoulder, the head, the right shoulder. The right shoulder is lower than the left. We've got a breakdown. It's not the cleanest neckline you're ever going to see. It's sort of kind of around here, but it's like not a to the penny kind of thing, but it's something like that. It's a little bit of a mess. But the good news is that the rally today was stopped short. I added more to my, as I said last week, I had January puts. I decided it was silly to have like 8,000 days of time on it. So I changed it to September puts. And I added to those this morning when we were rallying. So yeah, that's my position on SMH September puts. And it's, yeah, like I said, it's not a terrible pattern, but it's not going to win any Pattern Hall of Fame awards either. This line is such a mess. I'll just kind of leave it there. EWY, which is South Korea, is up a little bit. We hit a multi-month low on Friday. And this has been, as you can see, I haven't drawn it, but this is just a nice descending channel right here. A lot of margin calls in South Korea, a lot of shocked faces, never seen anything like this before. And I think there's plenty more to come because the AI bubble, the everything bubble, the tech bubble, they're all gargantuan. You know, and back in the day, I would show you charts of like, you know, the S&P going back for 120 years. And the big bubble of 2007 is like, you know, you have to get a microscope out to see. It's like, oh, that little thing, that little dot, that was the bubble back then. And since then, from March 2009 to a couple of weeks ago, nothing but up. Stocks are up tens of thousands of percent in some cases. It's just like everything's going insane. So this bubble dwarfs all the others. EEM, emerging markets, also up a little bit, thanks, I suppose, to South Korea. These are just bounces from those exhaustion late last week. Now, besides my general fixation on tech shorts and semi-memory and such, I'm getting more and more dedicated to being a China bear, just based upon the chart action over there. Now, it's not universal. Alibaba, I got stopped out this morning, and I'm not going back into it. It's a little robust for my liking. However, Baidu, which is also up, is still a great-looking chart, and I'm sticking with Baidu. Here again, we've got a nice head and shoulder, although the neckline is a bit of a mess. But the real position here, the one that I described my position on Friday as an irresponsibly large number of puts. Now it's beyond irresponsible, reckless. I just keep buying them. These are $36 September puts on FXI. And as I described it this morning, we're kind of in the peanut butter phase of the chart, which is this crunchy, thick, gooey mess that I think will make it tough for prices to push through. We fell very swiftly. Recovering from that is easy. And I was hoping Friday that we were done with that, but no, we leaped higher because China's getting a huge amount of positive press these days for their cheap AI. And the general idea is that if the world's going to go to AI, they're going to go to China because you can get the, 95% is good quality for 60% less. I'm just making the numbers up, but you get the idea. You get a more bang for the buck from China. So that's been the narrative, and people have been going crazy about China over the past month or so. But from a charting perspective, I think that this is going to be rejected sooner or later, and that's what those puts are all about. Some of the other positions I've got, which have tons of time on them, they expire in January, are things like Costco, which is down today about 1%. Carvana is having a nice down day. We talk about this on a daily basis. This one's down over 4%. And it is, in my estimation, completed a Steinman pattern, but it really hasn't let loose yet. It's actually been kind of range bound for a month or two, but we're definitely moving in the right direction on this. It's probably going to take an earnings announcement to wrench this thing one way or the other, but definitely moving in the right direction. I mentioned SpaceX in passing. This poor thing, I tell you. There it is again. There's your red bar for the day. It's getting absurd. What is this? 1, 2, 3, 4, 5, 6, 7. 7 red bars in a row, and big ones too. So we're approaching the 50% loss point on this. It peaked at around 230 if you include after hours trading, and now we're at 120. So we're $5 away from a 50% wipeout. Well over $1 trillion lost. Elon has lost hundreds of billions of dollars of net worth. in the past few weeks, as have the thousands and thousands of employees. I can guarantee you there's some bright folks that were billionaires for a day or two, and that probably felt amazing. And they're not hurting. They're only centimillionaires now. But the froth definitely got blown off that beer a long time ago. It 3 days of exaltation and then bleh. So yeah, no reason for this to just keep sliding. Not to keep. You got to have the earnings out, and I still think they haven't bothered mentioning what they're going to have their earnings announcement. So August 11 is coming. First tranche of many selling opportunities for insiders. And the earnings, God knows, it better knock it out of the park. I can say that, because you're going to have a $90 stock in your hands real quick if it doesn't. Hyperscalers continue to weaken. CoreWeave had broken down quite severely from its own top. It's bouncing today a skosh, but not much. Oracle, even on a day like this, green NQ day, it's still sliding down about 3.5%, having lost over half of its value for one of the biggest corporations on the planet in a matter of weeks. So, and I read their bonds also are just one mark away from junk bond status. And the CDSs on Oracle are flying higher. Bonds, we've got a island reversal gap right here. I don't trade TLT because it's completely a somniferous instrument, but it's flipping lower. Interest rates on the rise. The reason I mention it is because I do have a couple of germane shorts that benefit from rising interest rates. One of them is our old friend Lennar, which makes houses. And this is January puts on this, going nicely. And then the other one I mentioned a few times last week, Floor and Decor, FND, which I guess you got less floor and decor to sell if they're making fewer houses, but this is down almost 5%, flipping away from its own resistance line like so. So everything in that respect going well. Like I say, crypto's been a dud. And it's not like I've got 30, almost 40 positions. I had one crypto position, actually two. I got out of MSTR at a tiny loss, and I got out of my Bitcoin short at a not as tiny loss. But STRC bouncing today rather nicely, and then MSTR up about 2.4%. Still quite a sickly looking creature, but just kind of getting weary of losing money on Bitcoin, so I think I'll take a break. Last chart is NQ. It is a beauty. This was the line I was mentioning this morning as resistance. It did a yeoman's job of holding prices back. Today's high basically matched Friday's high. It was repelled from that, so it's proved itself to be resistance and proved that this long chunk of trading is our barrier now to price acceleration. So the next level we want to see broken, of course, is the support that we've and it's a lot more feeble because it was just a couple of days, but this level here, I guess one or two really nasty earnings would do the trick on that. So, okay. Well, all things considered, I don't think we're going to get a red close in the NQ after all, but it's still a good day. So hope you're doing all right, and I'll see you here tomorrow, and we will traipse into the thick of the earnings season starting on Wednesday. See you then. Bye-bye. Okie doke. Bye-bye.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
TP, the second half of the day has been no bueno for these equity markets. It's still Monday, July 20th. We're here for last call. He's TP Tom Preston. I'm CV Chris Vecchio. Tom.
I like that. I like that CV. I like that.
Trying something new.
Yeah.
We'll see how it fits.
It's well, I have my charm turned up, but it hasn't done the market any good. Let's see, where are the spoos now? S&P is down 450. Again, not a big day down. So just for reference, Chris, and I know you like numbers. I know you do. Out of the 500 stocks, where's my little spreadsheet? One moment, please. Out of the 500 stocks in the S&P 500, only 163 are up this afternoon. Compare that to the Nasdaq 100. Of those 100 stocks, 52 are up this afternoon. So this is a huge discrepancy between the NDX and the SPX as far as number of symbols. SPX down on the day, Nasdaq up 100. It was up, I think, 240 earlier. It was up a lot. Now it's only up 100. 0.35%, but it's a very broad-based sell-off in the S&Ps, mixed bag in the Nasdaq.
What do you make of that? That's been unusual. It feels like we haven't seen that in a while. It feels like the Nasdaq's been the heaviest of the indexes on any given day just because of what's been happening in the semis.
It really has, and it's surprising. Well, it's surprising. It's surprising. I'm surprised that the Nasdaq isn't leading the way in the downside, but it's not. That's what it is. If I were going to short anything, I'd short the Nasdaq right here. Just because, it's outperforming relative to the S&Ps. So yeah, if I were a contrarian, I'd sell the Nasdaq here, buy the S&Ps if I were bullish. But what's the story that I'm seeing is the 30-year, not to change the subject, Chris.
That's where I wanted to go next.
but the mortgage rate, 30-year mortgage rate, is the highest it's been in a year. What's the actual number? For the most recent week, 6.55%. 6.55%. And that's, that's a big number for the 30.
By the way, you know what's so remarkable about that number right now? There's a housing analyst, Housing Wire, Logan Mashami. I'm mispronouncing his last name. I apologize. But he's pointed out that if you looked at the data from 2022 and 23, if we had the spreads that we had back then because of prepayment risk and what have you, applied to today, 30-year mortgage rates would be north of 8%.
Really?
So this is, no, seriously, which is remarkable considering where they actually sit.
Well, even if he's only half right, Chris, I'll take 7%, seven and change in the 30 years. So it's I don't know if you're still bearish on ZB. I sold some call spreads in ZN, just the notes, because they were, I thought they had a little bit more room in the downside than the ZBs did. So I sold a call spread in ZN today. But looking at the housing stocks, they're all, at least the ones on my watch list, they're all down today. HOV's down, RKT, Rocket Mortgage, count that as a housing stock, down 5%. DR Horton down 3.28. Lennar down 166. Toll Brothers down. Home Depot down. It's just the broads. Of course, the home building stocks are weak. And a lot of them just don't have the liquidity for trading. The only one that I trade in that list is Rocket Mortgage, RKT. And let's just check the skew on that and see if there's earnings. Earnings are coming out on July 30th.
Next Thursday.
Yeah, RKT, you could sell the margin requirements. It's basically the puts are cash secured in here, at least as far as I can tell. So like a 32 DTE, the 12.5 put. Let's go down to the 12s, make the math a little bit easier. It's a cash secured put. So the buying power effect, at least from what I see, is about $1,163, which is $1,200 minus the credit. So it's a cash secured put, which kind of stinks, but it's a very volatile product, very volatile stock. The skew is pointed towards the upside in there. If you were willing to take risk through earnings, you could maybe sell, a 13, maybe the 13, 11 half put spread, something like that. So in other words, buy the 11 halves, sell the 13s with 32 days. I'm not convinced that Rocket doesn't have a little bit more room in the downside, though.
No, but there are starting to get some interesting setups in that area. Because it is a 68 IVR and it is a 71 raw volatility reading, implied volatility. The 12-13, you are getting that 32 cents of credit for $1 wide strike, so that's kind of right on the nose, and risking 2 to make 1. If we didn't have a chart that's starting to keel over like this, TP. I just don't know. Forget it being like a counter trend move where it's like, things been in a broader uptrend. No, this thing is turning back lower aggressively while it's been going from top left to bottom right. So I don't know how I feel about trying to.
So Chris, all right. So Chris, so it's what
I'm more interested in going back into bonds.
What about that chart? What about that chart on RKT points lower? Is it the moving average stuff? What makes you not like RKT? I don't want to put you on the spot, but if you're playing at home?
Really simple. Take a crayon. It starts in the top left near RKT and it ends in the bottom right near the bottom of the y-axis.
Okay.
But also I have a bias on rates, and these things tend to move opposite to one another.
Of course.
Right? And so instead of looking to, I don't want to do something that could be directionally against my bond position, because TP, I owe you some ice cream, as they say.
You really do.
I was able to take off that 112, 111 today, basically at max profit.
Nice.
Which was beautiful. Beautiful. Nice. But it begs the question now, what do we do next? It feels like the next thing to do is going to have to be find another way to get entry here.
I would, if you want to, like I said, I sold a call spread in ZN. And that's just because I'm getting I'm thinking I'm getting a little bit more credit for the ZN call spreads than I am for the ZBs. You could go back into ZB and buy another put vertical in there. That's how I'd trade it. And I'm bearish. I'm bearish on notes and bonds, and bullish on interest rates. Meaning, if interest rates go up, it's going to push the prices of these things down. And I'm just looking at just keeping it simple in both ZN and ZB. And even though the rates might not rise that much as we go farther out into the yield curve, again, they're more sensitive to changes in the yield, so their prices are going to respond. So yeah, I'm not, like I said, I'm not a big fan of buying Rocket Company here. It's just, I'm with you, Chris. I don't necessarily want to get long the housing stocks or anything like that. Even something like Home Depot. Not a huge fan of buying the dip here on Home Depot either. I've traded Home Depot a lot.
I'm just looking at a setup here in ZB. There's just not enough volatility for what it's worth to even think about doing something like short call spread right now, in my view.
No, they're not in
IVR. Just
not in ZB. Not in ZB. In ZB, I would look at the depend. You go out to 25 days. It's your call how far out you go. But like the 12, 13, it's either the 11 half. The 11 half, 12 half, sell the 11 half calls, buy the 12 half calls. There you get about a third of the width of the strikes. Everybody playing at home, this is a big product. This is $1,000 a point. You could tighten that up to maybe the 12 half, or the 112 half for, it's kind of close to a third of the width of the strikes. Kind of close. I'd like to get a little closer to $1.60 for that. I would actually sell the 11 half 12 call spread. If you wanted a short vertical in ZB, that's what I would trade. Or alternatively buy a put spread.
No, I there's a decent enough. You're collecting enough credit there, and I want to keep this against 112 because we had that pivot high from Friday. And we started to turn beneath there. And as long as we hold last week's high, then we're kind of working with something here. It doesn't even need to fall further. It can just stay pinned down here for a little while. But one thing that I can't help but notice, TP, is that a lot of this move in the equity market's falling back today. What we're seeing here in ZB and ZN, a lot of it hinges upon what's been happening with oil in the market. 35.6 IVR. The raw volatility is a little bit more rich than that, we should say, in the 50s. Closer up, you're going to be looking at something in the 60s or the 70s here. I put out a new trade today, but before we get there, curious, how are you approaching oil given this new return, the return of the Iran war?
I'm bearish on oil. Yes, it is. And I'm very sorry for the Americans who were killed over there. Very sorry for that. Not taking this lightly at all.
Never.
And I don't feel, I don't like anybody getting killed, but particularly American soldiers getting killed. I don't like that. But I don't think it's the war in Iran that's driving this market. If it were, the S&Ps would be down $200. Right, or 50, but maybe not 2. But you see my point. The equity market is very slow. Even the crude oil, it's up 62 cents. It's up, but it's not, $90. It's not 95. The market isn't panicking. I think the market or the oil industry has already gamed this out and is either just going to bypass the Strait of Hormuz, depending whatever happens. With other land, conduits for the oil. There's still enough oil sloshing around out there. And we'll see how long Iran can hold out. But I don't think the market's panicking yet. And so I think, Chris, the risk is to the downside, even though the skews pointed to the upside in crude oil. I'm trading crude oil from the short side here.
What expiration cycle are you looking at when you say skews to the upside? Are you looking at, say, like the 1 DTE right now? And
well, you could, yeah. I mean, you go into one day. This is trading at 82.5. So let's say down a point, down to the 81.5 puts are trading 66. The 83.5 calls are trading at 70. So it's not a screaming skew, Chris. But it is skewed to the upside. And if you go out to, let's say, 25 days, where it's still the SEP futures, 82.5, go down to the 80, waiting for my quotes to come in here.
Yeah, the 25s weren't giving me a good read, so I'm going down to the 81.5, 83.5 at 28 days, and you still see that slight call skew, 510 versus 493 on the asks for the calls versus the puts.
So that doesn't. So what does that actually mean? Just to reiterate, the market is. It doesn't say crude oil is going up. The market is just placing the risk to the upside. It's just said we need to price in more risk to the upside than the downside. It doesn't mean the crude's going up. That's not what it means. And does it bother me that I'd be short crude here? No, it really isn't. But I would look at something. I haven't done it. I haven't put in a trade yet, but something like 7 days. Just keep it short term. I'd sell maybe the 85, 86. Taking it about a third of the width of strikes, maybe the 84.75, 85.75 call spread. Sell that. Take in a $300 credit versus a $700 loss. That's kind of that would be my take on short crude.
Yeah, and there is a way to visualize this, and I don't think we have it on the platform, but there's a website that I use for this, which is publicly available and it's free to use. So I think one of the only reasons why I'm going to share it. But it's called Market Chameleon. It takes this website is the difference, the historical volatility of the 25 delta put IV minus the 25 delta call IV. You can see back in March, right? That's when you really had the most aggressive skew in the market. This is peanuts right now compared to where we've been.
Yeah.
So, are we at an extreme? Yes. But when you had this extreme skew back in March, did it mean that the prices were still going up? I mean, we could just look to the charts themselves.
Yeah.
They advanced again in April and May, but they didn't keep surging. So
I don't think it has anything to do with it. Think of it this way. In March, we didn't know what was going to happen. Right. We didn't know what Donald Trump was going to do, yada, yada, yada. Now we know. And I don't think the market cares about the intensity. Are we blasting Iranian, the Republican Guard, or whoever it is? I don't know. I guess so. Pretty badly now. It's pretty intense, I guess. Market doesn't care. The market doesn't care, Chris, because it's sort of the broad contours of supply and demand are known. That's why I think any sort of easing on the bombing, any sort of truce, any whatever, and crude oil is just going to stall out. That's why I'm bearish on it. And that's just the excuse. For me, it's just one of 25 trades I would do today. That's it. I don't take it very personally.
Don't take it personally.
Unlike Adobe, Chris, I take Adobe personally. I take Meta personally. Those things are out to get me.
It's true. We talk behind your back about you quite frequently. At Meta and Adobe, but we'll save that for later.
I knew it.
That's actually one paranoia that you should have. I went into the short iron condor today in crude oil here. We just recently touched the halfway mark between the highs that we had in the CLU6 contract and the lows in the recent 3-month trading range. And so the expected move just kind of pitch perfect. TP just below 67. You can see the brown line here, and just under 95. And that's basically where the market had petered out back in May. So short iron condor, did it make sense then? Yes. Does it make sense now? Would I put it on here if we were doing this on air again? You bet. You know why? Dollar-wide spread, 36 cents in credit, risking 2 to make 1, a little bit better than that, in fact, at 57% probability of profit. Check. So this one, not betting on the next headline, just that we're going to oscillate in the range that we've been oscillating in throughout these headlines over the past few months.
It's the only thing that matters to me, Chris, is the math. Does the math make sense? Do the probabilities of theta, the risk, all that stuff make sense? then fine, fire away. And that's what I'm getting to. You can disagree with Chris and me about the direction of crude oil, up, down, whatever. As long as you use a smart strategy, I'm not gonna be upset with you. Not that I matter, but you can take Adobe and Meta's side against me. Anyway,
you mentioned Meta. Can you show me on the chart where Meta's hurt you?
Meta hurt me.
Where are your strikes?
Back. It was, I got to look at my own chart because my eyes aren't any good. I was long Meta back in June, sold off. I got short Meta over the past couple of weeks in early July. So I've been whipped back and forth by Meta. And I just went in today and I sold again just to spite Meta. Because I think, Chris, people say, "Oh, love is the most powerful force in the universe." It's not. It's spite. Sure. Spite has fueled more ambition and empires than anything else. So let's go to my trade activity. What did I sell? I sold the 7 days. The 7 days I sold the 662 half call spread for 93 cents. A little bit more credit than I usually get. I was happy with that. I'm just short I'm short the 660 calls as part of a vertical.
TP, you have me
7 days.
You have me thinking here because Meta Friday pulled back, but then it did hold above where it kind of petered out back at the beginning of June, end of May. And it is still holding above its downtrend here from the yearly highs. Maybe it does want to base around here. So what does a trade around that 50-day 614 look like? This is a pretty fat market in terms of volatility. So I'm going 5 points wide here, TP, at 610, 615, risking 3 to make 2 effectively, collecting $1.93 in credit for a $5 wide strike.
Yeah.
That's fat. That's around a level I really like. This is why you got to go fishing sometimes because you find those setups that that look good may not be on your radar.
It's all, and this is why you have to watch the show, is between the 8 traders who are on here all day, we each come up with our own symbols. We each have our own various, amounts of expertise in different things. I see stuff Chris doesn't see. Chris sees stuff I don't see. Ilya sees stuff that neither of us sees. It's just the way it is.
Can I pick your brain then on something here?
Hearing things. What's that?
Maybe I'm missing something then because I feel like I'm not seeing the trade. I use this tool to pick apart what's being discussed on Twitter and on Reddit.
Rocket
Lab was the most discussed ticker on Reddit. All of Reddit, not just Wall Street Bets, but stocks, investing, all of it put together. Rocket Lab was the most discussed ticker coming into today.
Are they bullish or bearish on it?
Well,
or is just discussion? So they're bullish.
Do you think Rocket Lab is a stock that's not going to moon, TP? It's a space company. Come on.
I don't know.
Get with it.
I don't know.
Rocket Lab here, though, it's down huge from its highs near 150 a few weeks ago. But this is the entire space. I guess that makes sense. I could say semi-space. That would work. So, the entire public space. ASTS, Rocket Lab. We could go over to, I don't know if we want to pull up Chamath's SPCE, but the point is they've all been slammed here. Are you bottom picking in SpaceX, or do you have your eye around that expiration lockout?
I'm not trading SpaceX right now. If I were, I'd be short. I'd sell a call spread in there. But no, I don't find. There's a lot of other stuff to trade besides SpaceX right now. But it's just weak. I don't know what the bottom is. Maybe around here, maybe around 120. Who knows? But I would bet on the downside a little bit. But what is it? Rocket Lab, RKLB. What is it?
RKLB. It is.
Yeah, with 11 days, earnings are coming out on August 6th. So the markets aren't great in Rocket Lab. The markets aren't great. With 4 days, or go out to, 32 days, maybe. I don't feel anything compelling in Rocket Lab.
Double digits
bullish on it.
double-digit stock. We're trading at 65.5 bucks, and the bid ask on the 66 strike is $2 wide.
Well, and what's surprising, and I want you to take a look at the ES volume too. Well, there's 15 million shares of Rocket Lab traded. So, and the stock is, 2 or 3 cents wide. I'm very surprised that the option markets aren't tighter, but hey, I get it. It's very volatile. When you don't know which way they're going, you keep them high, wide, and handsome. You just widen out your strikes and, respond to anybody who wants to play, but you're not aggressive with them. As far as ES, though, goes, ES has traded only 1.19 million futures today. Again, a relatively low volume day.
Yeah.
This is... it's lower than Friday, which isn't surprising because we had a huge sell-off on Friday. But even Friday was low, relatively speaking. So I heard the woman talking earlier today with Chris. She came on, she commented about the low volume that she's seen over this past month. And I agree 100%. Just the low... the lack of trading activity is really kind of bothersome.
I saw a report today that hedge funds have jettisoned their tech positions pretty much nonstop over the past 2 months. They've just been unloading. When I hear that, I don't think people are like, oh my God, they're scared of this market. It's if you've just been in tech stocks for the past 3 or 4 months, you may have just doubled your money in some names. So you're probably going to book some profit going into the mid-year turn, right? and put some W's up on the scoreboard, get that P&L in the bank, so you can have an easier second half of the year. Do you read into that? I mean, that does seem to make sense. Profit taking at an end of quarter.
Sure, I would, and there could be some, like you said, to the end of the quarter, there could be some push to the downside on them, or there was. I mean, we passed the actual second quarter. I don't really care what hedge funds do anymore. Most hedge funds, it's
close.
They're just taking shots like anybody else. If they're trading the stocks, which they probably are, most of them, and not the options, they're just taking shots. And they just have a hunch. Do they have better information? Probably not. Maybe they say they do, and that's part of it. How do you raise money for a hedge fund? By telling people that you have the inside information on stuff. Not insider information, this is what I mean. But you have some special insights that nobody else has. That's the hedge fund business. Okay, great. If you can do it, great. I'm not that good of a salesman. I'm not that good of a salesman. That's why I'm not a hedge fund manager. But I would take the other side of these hedge fund trades just to be a contrarian.
Yeah, I'm thinking about all my friends that are at hedge funds now, and then I'm thinking of the other side of my brain of them being my fraternity brothers and the things that we've done together. It's just funny. It's like these people are definitely not the smartest people in the room. No offense to my friends.
Well, no, and it's not to be mean about it. Not to be mean about it.
No, not at all. Not at all.
But the skills of managing any money and ultimately hedge funds is public money. It's when you put your $100 a month into your mutual fund or your 401k or whatever the heck you're doing, where does that ultimately go? It goes to the institutions. Unless you're George Soros, okay, unless you are just yourself massively wealthy, these funds are made up of individual investors' money at some level. Like if you're CalPERS, the California Pension Fund, of course they invest in hedge funds and try to give them some alpha. Where's that money come from? California teachers. California teachers making, I don't know, $80,000 a year putting in their money in their 401ks. That's what it is.
I love these new fund of
they're
funds.
Just taking shots.
Yeah, I love these new fund of funds. Managers have too much money, so they're trying to create diversification in their portfolio. So they're giving multi-strat funds their money because it's like, what do I do with it? They'll be diversified.
They don't know.
They have no idea.
They don't know. And it's just all this money sloshing around has to go somewhere because the charter of the fund or, the pension fund or the insurance company or the hedge fund or whatever it is, they have to invest. They can't just sit on cash. And they have to buy have a specific portfolio. And they just go in there and buy it. It's not like they're evaluating stuff. have to do.
Not much buying today. Nasdaq does squeak out a small gain. S&P down by 7 points. 74.90 here, TP. We're going into another busy week. Novartis tomorrow morning. We have Schwab. There's a few others. But Wednesday is when earnings really kick off, and that's probably the banner day of the week with Alphabet and Tesla. You and I are running over here, which means we're technically in overtime right now, but we need to swap hosts. So we'll see you in 90 seconds. You're watching Tastylive.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Stocks slip. They lose their gains. Oil's back up. Are we back into the Iran war trade? It's still Monday, July 20th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your other host, Ilya Spivak in San Francisco. We're here for the next 28 minutes. 28 minutes today as we wind down the trading session. Ilya, if you're on YouTube, you should join us in the chat. Tell us what you're trading, what you think of this market. Send your questions. And of course, if you want something answered on the show tomorrow morning on Confirm and Send it over to research@tastylive.com, research@tastylive.com. Otherwise, like and subscribe. Ilya, stocks are down here today. S&P 500's off 7, 8, now 10 points here in the aftermarket. Nasdaq gives up most of its gains. It was up nearly 1% earlier, now only up by 0.09. I could see that little 29,250 line in the sand that I know you've been looking at, as we discussed earlier, and it never quite could get through that hurdle. But the big news today, of course, is what's happening in oil, which is sending some perhaps spook back into the yields. Oil prices are up only 64 cents, but it continues after what seems to be another weekend of new bombings. And maybe the memo's over, Ilya. The war is seemingly continuing into the week, not just in that period from 5 p.m. on Friday to 6 p.m. on Sunday when the markets are closed. I digress, though. We want to pay attention to those yields here today because across the curve, if it's the twos, which came in, and the daily chart will show that a little bit better here, but if it was the twos or the tens in the notes or out in the 30s, ZB, it's been a day for higher treasury yields. So, Ilya, we'll start here. ZB tends to be the thing that long duration assets pay attention to.
Yes.
I'm thinking about TLT, for example, the Barclays TLT Treasury Bond ETF. Its duration is like 15.7 years right now. So it kind of trades right in between ZN and ZB, as it were.
Yep.
These are all trading heavy across the curve. I would look to the SR3 contract real quick for December, just to make a point, which is to say that we're starting to see a rebound in these rate hike odds alongside this lift up in the yield curve. So this to me reads as an inflation problem, perhaps. Is that the market's read-through from today? Should we start putting back on our inflation helmets again and strapping?
I think you certainly get the sense from the markets that they're reading this as, oh no, the war, here we go again. But I think what's really interesting about this is how much vigor you've had in crude oil and how little vigor, actually, you've had in yields, even today. I mean, let's take a look at ZN, ZB in context. I mean, sure, we have a strong day. There's no question. Yields are up. But are they up in some sort of a way that would suggest a trend is developing? Like what's going on in oil? No. You just don't have it. You don't have a convincing sort of move here. And that's doubly so when you look at what's going on in gold, which you'd think would be the bogey of bogeys for something like this. Obviously, it has been down aggressively since the start of this war because it is, in fact, exactly the kind of asset you might think. It is not an asset that's going to do well when Rates go up because it yields nothing, and it is not an asset that's going to do well when the dollar goes up, in part thanks to those rates, because it is a natural foil for fiat. Well, on a day like today, what would you expect gold to do in this environment if that's still the playbook? It should be collapsing. Nope.
You would think.
Nope. And then you look at the bonds and you go, okay, sure, ZN is near the bottom of its range. ZB is near the bottom of its range. Has anything broken, even, let's say, back to where we were 2 weeks ago? Even that range hasn't broken on the bonds. Never mind a revisit of the lows back in late May. We're not even talking about that here.
Can I just get, by the way, reflecting on it, so funny, my confidence in gold, just last year when I was confident in gold, what was I doing? Swinging GC.
Oh, I mean, just wrapping yourself in ropes like Slick Rick.
And this year, it's like maybe a little 1OZ to the downside.
Let me get a 1OZ.
Not even. It's like, I guess that speaks to my confidence in holding the position right now, because I want to. I really, gold does have a chance to break lower, but the fact that it's not. The fact that it's not on a day like today, silver's up. It's odd.
It's odd. Silver is up, which is not a risk sentiment thing, because obviously stocks aren't doing well. So you go, what's going on here? Why is it that the bonds and the precious metals are as well supported? What would happen if this wasn't a day when yields were relatively higher? What would they be doing then? And you go, well, something is going on here. The market is doing something different. It's sniffing out something different.
It might be, which is why, I mean, tonight, it's Monday night. I guess the Mets are on. I really don't want to watch that. So I do have to catch up on the new Game of Thrones, House of the Dragon.
It's pretty good. It's pretty good. I'm one episode back from being caught up.
Same. They really made a mistake by pushing the first 2 episodes of this year from last season. Last season really needed it. Anyway, $58 is my lot in the sand right now for silver. I know I haven't played in this pool for a little bit while here, Ilya, but if we can find ourselves back above $58, you're then comfortably back through the former lows that we had in June. You're making your way out of the recent downtrend from July. It then feels like a false breakout to the downside a little bit when we scroll back our charts over here. And I could work with that. It would also probably be a cue to take off any gold short exposure right now. But I'm just tinkering here. I really don't love this exposure. It feels good. I want to add more, but it's not falling down the way that one might think it would if the world's getting really hammed up about what's happening in the Strait of Hormuz and the Persian Gulf once again. It really
if we're
isn't
back
there,
to
though.
that kind of a dynamic, then you'd be seeing different things. And the dollar is a part of that story. It looks like it wants to break higher. You'd think this would be the day, but it just cannot manage it.
I really like what the dollar's doing here. I don't think I was able to get filled today on the 6C position. Gosh dang it. Let's see if we can force something through.
I mean, there's always MCD.
No, don't. We can always get it when we want to get it. 71
Yeah,
and a
dude,
half,
if you wanted to be short some Canadian dollars, you could just go ahead and short the outright MCD future and call it a day.
Well, the reason why I was doing this, a few things here. So 50 pips wide, 72 minus 71 and a half, 15 cents of credit. So not quite the 17 cents third that we were getting before, a little bit worse than that, but still 15 cents credit versus 50. So again, 30%. Not 33%. Either way, though, risking 350 to make 150. Why, Ilya? You can see it much better in the dollar CAD spot rate, although because of how I want this trade structured, maybe we just find support here, just like DXY has found support. Maybe dollar CAD turns higher, steadies and turns higher, 6C steadies or turns lower. This is just a beautiful little bullish engulfing bar today. Key reversal, if you will, because we did move below the low that we had on Friday. We closed above the Friday high. It's up against the 50-day moving average. It's occurring right above the former swing highs at the end of March, beginning of April. I can just check enough boxes there, and then coupled with the pricing that we're getting in the 6C contract, which, again, close enough, 30% of the width of the strikes here, you could do it right now for 16 cents, which is even better. But it fits. It fits like the criteria of being mechanical. When you see these things do the next task. And the next task here is looking for something to say that maybe we've found some support. So foot's in the door. I'm comfortable with it. Canadian dollar had, the inflation data today was not great.
No.
And that runs afoul of, and so just the headline was negative 0.4% month over month versus negative 0.2. But what really had been a driver of the Canadian dollar strength recently has been BOC officials talking up how inflation would probably necessitate a rate hike. And today, BOC rate hike odds just dissolve after that CPI report. So, I mean, I'm good saying that this thing has calmed down for now. I really like the setup here. First time I've really liked the currency setup in a while, I feel like.
I don't hate this setup. I'm a little bit circumspect.
I really like it. You don't hate it.
I'm a little. Well, it's probably the only one of the dollar crosses where I think there's something here, and I'm cautious. I don't want to jump into it because it really does stand aside. In fact, the Canadian dollar has been kind of weird the past 2 weeks, 3 weeks. But if you look at a lot of the other setups, pound, euro, Aussie, the yen is kind of on an island by itself too. But all of these other majors look like maybe they're looking for a dollar to get weaker. And if you look at what's going on with the situation in gold, the situation in bonds, you go, well, yeah, that tracks.
If the dollar's in trouble, what's the case for Europe to keep its head above water?
I think it's not so much about really the economic reality as it is about everybody is betting on the same thing, and that's the Fed. I think everybody is basically just going, okay, well, what's the rate differential going to be? I mean, consider when this war starts, there is a hawkish adjustment in all the major central banks. Which currency rallies? It's the dollar. Which central banks have already hiked rates? Not the Fed. The ECB has hiked rates. The RBA has hiked rates. The Bank of England hasn't. The dollar has rallied in everybody's face. Why? Because the bogey is the Fed. That's the pace setter. And so when we're looking at this here, I don't think we're looking for, okay, well, if the U.S. has a problem, Europe has a bigger one. Oh, without question. Europe is in the midst of having a bigger one as we speak. I don't think that really animates the speculative story here, and hasn't.
Gas prices in Europe are starting to skyrocket again. Dutch TTF was up another 2% or so today, but they're up 35% this month so far. The benchmark European natural gas prices, and they're already doubled this year, up over 100% year to date.
Mm-hmm. Yeah. It's not looking good.
No, not great. So I'm content with my dollar exposure right now. Is the yen doing anything? Ilya,
it's going to be an interesting story with the yen.
They're not going to intervene
this week.
Are they going to intervene this week?
I don't think it really bodes well for them, but I do think we're getting into this interesting area, right? If we're really getting distribution in AI, money is going to start to come out of yen carry. Because a lot of that exposure is funded with cheap yen loans, or at least some of it is. And then you get yen repatriation, especially given Japan's exposure to the space. There's a lot of yen-funded exposure to AI. And so you look at this and you go, okay, well, if the AI trade really does distribute, maybe you get something like a tailwind for the yen, and then that's what I think the BOJ and the MOF would want to intervene into. I think they want a tailwind.
So the BOJ is going to intervene in the market when the market's getting the rug pulled through a liquidity crunch?
I think if
they're going to make things so much worse.
Well, I think if there were a liquidity crunch, then they really wouldn't have to intervene. But if there were a kind of slow unraveling as opposed to an elevator down kind of a liquidation, and you started to see yen creep higher, they might help that along.
Maybe. I'm shocked that they didn't intervene after, oil fell below 75 when yields started breaking down. Like, that felt like a spot where they could really
That
shove
could have
the
been a
market
spot.
back. And then they missed the opportunity. And so now what do they do up here now that oil's creeping back up? Ilya, crypto here had some legs underneath it today, which is one of the standout green areas of the market outside of oil prices.
Yes.
4.7 IVR. I know crypto's not the hottest thing right now, and I'm sure
I'm a
people
bit
will roll
long.
their eyes and turn us off as soon as we get to this section. But I'm curious. 66 seems to be that line in the sand. I don't have anything doing here today, but can we both concur as people who respect horizontal lines? You may not respect my diagonals, but I respect your horizontals. You get through 66 now, you're cooking, but risk reward on getting long up near this multi-month since late June resistance. Probably could find a better entry if you're trying to get long.
Yeah, it's a
Wait for
better. I mean,
confirmation.
I'm not adding anything here, right? So it's been kind of creeping higher ever since it rounded that bottom at that range there in late June. I've had a little bit on as a call vertical. Let's see. I don't think that there's anything attractive here right this moment. But if you take out this range top, there's another opportunity to add.
Maybe it's a deja vu of what we had in March, right? It
could be.
Did crypto sell off during the Iran war?
Not really. Crypto didn't really pay attention. Crypto was selling off before, and it didn't really go one way or another around this news at all. It just generally ignored it.
Closed February 65,800 or so. Closes March 68,000.
Yeah.
So adds like what, 5%? We'll call it.
Yeah.
But you had this interesting thing where you ran up towards your 1 month, you fell down. You ran up towards your 50-day, you fell down. Then you made another run. So we see that 1, 2, finally push higher 3. We got another run here, Ilya. I don't have much conviction right now behind Bitcoin. We'll see if it gets over 66K.
I'm just doing it from a ticker agnostic perspective.
Yeah. I have a lot of things cooking still, though, that I'm keeping on until tomorrow. I have the double bowl, the Super Bowl, I think people call it, as Mike and Jermal call it here, in Amazon. Still sitting at 32 days short the 230, 235. Put spread to finance a potential move higher up towards 285, 290. I also have the short put spread in Google. And the reason why I bring this up, Ilya, is I'm thinking that I may need to just throw some of this stuff overboard before we get to Wednesday. In part because, yes, it's Tesla, yes, it's Alphabet, but between those two names, that's 15% of the Nasdaq, 12% of the Nasdaq, depending upon the weightings on any given day.
Mm-hmm.
And so, yes, I have a Nasdaq position on it, and semis. So, yeah, it's 5 different positions. It's really one position.
Right.
I don't want to have 5x in one position on. The whole point of it was diversification within a view. So I think tomorrow is going to be cleanup and then resetting for some of these earnings. In particular, where's the volatility? I want to keep an eye on what's happening with Google here because 70% raw vol and a 75 IV, that does mean that we could get creative like we did last week with Netflix, although we did it the wrong way. Looking for something like a call butterfly, which if we had done it the bearish side, it would have worked out fine. And quite frankly, if we do both the bearish and bullish side on this one to the expected move, you're paying out $54 for the potential risk, potential profit of 473 if you kind of land right there. I like those odds any day of the week. Last week with Netflix, it was losing $14 to make 183, and I chose the upside call butterfly. If we had done the put butterfly on the downside, it would have worked out well as well. You know why? Because it landed right $6 lower. I just chose the wrong $6 direction, but I should have taken both. As long as it landed on one of them, I would have been paid out handsomely. So I think that's how I'm going to learn my lesson this time for this week's earnings. Find the high vol product with the high implied volatility. See if we can try to pin the tail on the donkey for high convexity risk to reward here. And, you just need one of these to hit every 15 to break even. So let's go within that. Let's just try to get like 1 out of every 10 to hit. And we could put a new maybe earning strategy in the pocket.
Well, riddle me this. How do you make sense of today's sector breakdown? Because I mean, yeah, it's tempting to say, right? Like, oh, AI is distributing or blah, 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 blah. But then you look at the sector breakdown and you go, it's healthcare that's getting hosed. And industrials. Industrials, okay, fine. AI build out, fine. Basic materials is down, fine. Okay, I get it.
Consumer discretionary, home construction, biotech, home builders. I see a lot of rate-sensitive stuff in there.
I see a lot of rate-sensitive stuff, but why healthcare?
Maybe that's
the worst.
idiosyncratic.
It's the worst sector on the day.
Is it? That's not what I have.
Yeah.
I have
down 1.4.
Which ETF are you looking at?
I'm looking at our friends over at FinViz.
Oh. No. Okay, no, I'm looking at XHB and XLV. XLV is down 1.14.
Okay.
XHB is down 2.02 here right now. So that's why I wanted to make sure the inputs were right. But yeah, biggest inputs for healthcare, Eli Lilly, Johnson & Johnson.
Yeah. Eli Lilly, Johnson & Johnson, Merck. Merck is off 2.5%.
Yeah, fantastic. Great timing.
Jesus.
Great timing for me, but that's fine because we're still above the short strike here. I got in last week, Ilya. Small minor loss right now. I'm looking to see if this can hold up above the 120 area, as it looks like maybe it's trying to turn a corner. But all of healthcare today, you're right. I mean, the healthcare ETF, Eli Lilly, not great for me personally, given my own long-term stock holdings there. AbbVie took a little bit of a dip. We did mention Johnson & Johnson earlier. It's down here. Johnson & Johnson, though, this is kind of more this is staple-y. I'm looking to buy a dip here.
It's staple-ish.
I was looking for an opportunity to buy a dip in here last week at like the 240, 235 short put spread to see if I can get a little exposure. The market's finally coming into a place where right now I obviously can't do it, but $1.35 in credit for $5 wide strikes, 71% probability of profit, risking 3 to make 1. I mean, it's all kind of there. It's below the 1 month, but it's above the 50. It does feel more of like a defensive name, Ilya. So if air is going to come out of the AI pocket but stay in the stock market, where does it go? Probably more defensive stuff, right? That's like a theory I'm working on with the Procter & Gamble and the Kimberly-Clark and blah, blah, blah. So this would fit the profile of that trade. Feels weird, though. None of these I would consider to be like super healthcare, super rate-sensitive names. Would you?
No. And so what's particularly interesting about this is, healthcare has really been the place where that's where you've seen the jobs growth. That's where you've seen a lot of kind of cycle kind of resilience. What was really interesting was when you looked at last week's retail sales and CPI and PPI numbers, you started to see weakness in the healthcare space. You started to see a little bit soggier indication. And you start to kind of put these things together and you go, wait, why in this environment would you have an unraveling in healthcare spending? What is it that we're looking at here? And so when you go into, so this is where it gets interesting. You go into the breakdown by component of the latest retail sales numbers. And of course, there's a 5 odd % decline in gasoline station sales because this is retail sales. It's not adjusted for inflation. So volume times price, crude oil falls. Okay, fine. I understand why sales look like they're down there. Health and personal care down significantly, down 0.8%. That's the second biggest decline in this series. Now, it is, of course, fascinating that in the same report, spending on food is down and spending on food and drinking services, that is eating out and drinking out, is flat when everybody is apparently reveling for the World Cup and all these tourists are in the country and et cetera, et cetera. It's a very interesting thing that it's flat and not up, you'd think. But healthcare spending being down at the same time that food is down and food services is down and clothing is down starts to give you the sense that there's a belt tightening kind of a dynamic out there.
Airlines bounced back today despite higher oil prices here, Ilya. I'm looking at my little heat map right now. I'm in the transportation and logistics. It's the only air travel was one of the few places that was up today. You're not finding many. Software
not a lot
had
of up
decent
today.
session. Datadog, Alphabet, Microsoft, ServiceNow. Not a lot up. The betting space had a decent Penn, MGM. I don't know if there's anything to write home about there. Blockchain companies, Coin, Mara, they all had good days. I'm not really intrigued by some of the volatility here because we're starting. I mean, I'm looking in some of these names. Sure, Marathon is unique to the point I'm trying to make here right now. But when you're looking at single million volumes and then the amount of volume actually in the options, some of them have a lot. Marathon has a decent amount. Some of them just do not. And we're after hours here too, so maybe not a great time to make the point about thin bid-ask spreads. But Ilya, tomorrow, change of plans for you? Same approach?
Yeah.
How you doing?
Those
are ugly candles for stocks.
I'm not changing anything here. I mean, I already have short exposure. I'm doing it by selling calls. This thing can either continue to be stuck or it can sell off, and that'll be fine. As long as it doesn't rally up a storm.
Yeah, I'd like a little bounce, but that candlestick today.
Ugly.
It's ugly.
It's ugly.
Really ugly.
It's a really ugly candlestick.
It's like a shooting star falling out of the sky. Just really ugly on the S&P and the Nasdaq. Same thing for the Dow. Dow's a little heavier. Russell. Maybe we'll see what happens tomorrow. Hey.
Yeah.
I may need to lift some positions tomorrow morning. But we'll find out. Ilya, we're done here. Overtime's out of time for this Monday still. Still Monday.
Nope, still Monday.
July 20th. We'll be back in 3 minutes' time because Ilya's back. He's here with Macro Money up next on Tastylive.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to Nasdaq, all CME one click.
Well, the stock market tried. It tried and it tried to rebound all day, and it couldn't stick the landing. So what's going on here, and why are these markets out of sorts? That's what we're going to try to figure out here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tastylive. And as ever, we're going to look into the price action here first and see if we can't make sense of what the markets themselves are trying to tell us. And from there, see what the week ahead brings. There's quite a bit that we have to unpack on the event risk front. Not quite as dense as it was last week for the big headline event risk, but nevertheless, quite a bit to chew on. So here's the S&P 500, and we can see here that range top that we've seen holding continues to hold. We get rejected there last week. It seems like we're trying to make headway on a break of this kind of lopsided diamond pattern that we've been carving out here. At some point, it does lose its potency because you get so deep into this wedge that eventually you're going to see a break just because price is going to meander through a sloped line. And that's what seems to be occurring here. So it's not the most convincing setup. If we had seen a break, let's say somewhere over here, and with a little bit of pop, that would be much more interesting. For now, it looks like we're sitting at the bottom of the range where we've been consolidating over recent weeks, but it's really the shape of today's candle where we gap down at the weekly open. We try to get back through into this upper area all day long. And by the end, we end up with a goose egg. And so it's this loss of conviction that is perhaps the most interesting in this setup if the top is still somewhat unconfirmed based on how much progress we've made here and what kind of strength we've seen behind the down move. So far, it looks more like a lack of conviction to go higher than it does building conviction to go lower. It's a similar story for the Nasdaq, although here things look a little bit soggier. The congestion that we've seen has seemingly given way, and there is a clean break of the most immediate layer of support, though again, the larger range that's confined this basically since, let's call it mid-May going into June, that continues, and this is really the line in the sand that needs to get overcome still. But again, as with the S&P, today's candle is a soggy-looking candle where we try all day to recover the opening gap, and we just can't do it. So momentum here seemingly still favoring, at the very least, a kind of circumspect perspective, if not an outright bearish one. Now, the backdrop for all of this comes from crude oil, which gaps higher at the start of the week. And this is yet another interesting tale in attempted unwinding of concerns that ultimately doesn't bear fruit. So we get an upside gap because the US and Iran are back to shooting at each other. And the markets really do try to shrug it off. They try to get to some sort of a place where they say, okay, this is not a restart of the war. This is still friction within the confines of a ceasefire. Neither side really wants this. It's okay. We'll come back to some sort of a détente. Well, the markets don't manage to stick the landing on that idea either. Now, in fairness, crude doesn't go running to the upside, but the gap that it formed at the start of the week, it tried with some conviction intraday to close and overturn. And ultimately, we end up holding it and going into the close, little changed intraday, but of course, with that gap as the underpinning for a rally as far as the daily performance is concerned. Now, perhaps the most interesting thing from here then becomes what this didn't do. Because if there was a war trade dynamic that really seemed to be unfurling here again, the way it was at the start of the war, then we would see, well, here goes a jump in crude oil again. So stocks come down. That would be very early days of the war, late February, early March, when everything was still working in relative macro harmony before the semiconductor melt up took stocks left, and everybody else, be it the bond market, the currency market, gold, they stayed occupied with the war. Before any of that, the initial response was really very straightforward. Higher oil is inflation. Inflation is higher rates. Higher rates is a risk-off sort of thing. Stocks come down, bonds come down, gold comes down, dollar comes up. Very clean cut. If that's what was going on here, it was difficult to see beyond oil itself. Now, what's happening in stocks certainly seems to echo, and it's tempting to say that this is what stocks were doing, that they were looking at oil and getting spooked. But when we look at what's going on in some of the other markets, there's a very different story. Now, it's very interesting to see, of course, that bonds don't break down on this. They get a little bit softer, but they don't even come down to retest the recent range bottom from mid-May. So this attempt at anchoring in the bond market, it still seems to be attempting to take shape. And on a day when crude has been rallying, and really through a period where crude has been rallying, crude's been going up since late June, going into July, and you wouldn't know it by the bond market, where we've seen a little bit of a shift higher in rates over the same period, but generally, since mid-May, this range continues to hold. It's a very similar story in gold, where again, since mid-June, you're anchoring. We even manage a tiny little gain on the day here, but one would think gold was a major casualty of the war trade when it began. If crude oil was giving us echoes of the same thing across markets, we should see gold selling off. And that's not what's going on here. And so, again, there is an interesting loss of downside momentum that seems to be saying, hold on, something different is going on. The US dollar is another kind of little tell here, another little piece of this puzzle. Now, on the face of it, it looks like the US dollar is holding up at former resistance turn support. This was a year-long range that held from July of last year that we finally took out from May into June, right here. And this pullback seems to be finding support and anchoring before the next leg higher. But we can see here the bounds of the higher lows and higher highs that defined the most recent up move from late April going into May. They've kind of given way here over the past several days, and we're testing the underside of former support turned resistance at the bottom of this near-term range, and we're not really clearing the other way, which is an interesting sort of setup. And again, seems to suggest that maybe the dollar is not doing everything it could on a day when surging oil might be fueling yields with more vigor, might be hurting gold to a greater extent, might be sending the dollar higher in a more convincing way. So far, it doesn't really feel like the war trade of even a few weeks ago. And so the question becomes, well, what's going on here? Why are these markets suddenly trying to cultivate a different kind of relationship? Let's consider what we have coming up over the coming days. Now, it's a little bit lighter on U.S. event risk until we get into the end of the week. We're, of course, going to get the inventory numbers for crude oil tomorrow and Wednesday. Tomorrow, the API numbers, Wednesday, the official ones. But maybe the more interesting bit here comes from outside the US, because there are interesting factors now starting to take shape. Last week, for example, we saw unexpectedly US CPI and PPI fell month over month in June. Now we have UK data coming up, and the expectation is month over month, we're only going to see a rise of 0.1% on UK inflation. And the headline number is expected to come in from 2.8 to 2.7%. That kind of echoes what we saw with Canadian inflation that came out just earlier today. Expectation was for 2.9%, we got 2.8, a decline from 3.2% in the prior month. Core inflation almost flat in June, and headline on the month actually down 0.4%. This was, in fact, the first downtick for headline year-on-year Canadian inflation since February. So, okay, U.S. inflation ticks down a bit. Canadian inflation ticks down a bit. UK inflation is expected to tick down a bit. Job creation in Australia is expected to slow from 40,000 to 15 on net in June. Then as we keep looking through the rest of the week, we've got the ECB coming up. They're expected to hold rates unchanged this time. The deposit rate is the key bogey here. So 2.25 is what we're looking at. We'll see what the message is out of the press conference with Christine Lagarde, the president, if in fact global central banks are starting to smell something different with the inflation story. She's a good barometer of the sort of benchmark mainstream view of how major central bankers are seeing the situation. Then there's an interesting report coming out of the Bank of the Bank of Japan, and we're going to see how that meshes with the inflation numbers. The expectation here that we're going to rise to 1.6% on the core. The Bank of Japan is an interesting barometer, perhaps not because it fits within all of this Iran war conversation, but because it really hasn't. All of the major central banks have seen a hawkish repricing of expectations when this war began, but for what's going on with the Bank of Japan. And this is really where things start to get very curious indeed. Because what we're seeing now as a consequence of all of this is still the expectation that the Bank of Japan is going to raise rates. Now, the question, of course, is when and whether they really are going to change the weather, considering the very slow pace at which they do things. But nevertheless, if you get continued strength on the inflation side, especially at the core outside of energy, that conversation is going to be reinforced. And if that's what's going on here, well, then we start to get into a situation where the yen, sitting at the lowest levels since the mid-1980s, is going to start to raise some questions. Because if the Bank of Japan is going to raise rates, and at this point, they're still on the menu for 50 basis points in rate hikes this year, then there's going to be a pull to some extent on Japanese capital to come out of some of the AI-based and some of the more risk-on based positions where a short yen position is effectively baked in because people have been borrowing cheaply in yen and buying those things that go up and those things that are higher yielding. So how this feeds into the larger situation that's happening in stock markets starts to become interesting. The yen is again at historic lows going back all the way to, let's call it, the mid 1980s. And at the same time, of course, the Bank of Japan has been attempting, with not a lot of success, but attempting to intervene into that market to try to get the yen to go a bit higher. Because, of course, in an environment where crude oil is high, food prices are high, and you're an island that imports all of those things, you don't want a currency so weak that you've eviscerated the population's purchasing power. And so there's an interesting situation emerging here where, outside of what may be happening with the response from these big macro assets to what's going on with the Fed and the war and so forth, there is this situation where if there is a risk-off undercurrent whereby stock markets are soggy and they start to come down, at the same time as Japanese inflation starts to tick higher, some of this exposure that is de facto short yen underpinning the stock market, because people have gone and borrowed cheaply in yen to then go buy higher yielding and better performing things. If that starts to be a source of friction where they start to unwind some of that, well, then not only do you get a higher yen, not only do you beckon the Bank of Japan to give it a little bit of extra juice because a tailwind has emerged in their direction, but you also create a situation that starts to look like risk aversion in the stock market, all at the same time. But the really big news for the larger narrative starts with the coming out of the purchasing manager numbers for July out of S&P Global. And on Thursday, you'll get Australia and Japan, but on Friday is the very big story. And here we're going to get especially the composite numbers out of the Euro area and the US. The UK is also coming out, but when you consider that overwhelmingly most global growth is a function of what happens in the Eurozone, the US, and China, and you don't have China numbers this week, but you do have the US and the Euro area, between them two, you get a very good sense of where the overall global business cycle is. And of course, in the US, that has been a live debate. Now, as we've seen, and Australia and Japan are interesting cases in point for the overall story, we can see, for example, in Australia, the economy is at standstill. 50 on the PMI index is basically neutral. Above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. Australia's economy is basically at 50, so it's standing still. It's standing still as its service sector stands still, but its manufacturing sector is growing at a decent clip. Japan looks relatively strong. We're seeing decent growth in both services and manufacturing. When we get into Europe, all of a sudden things look a lot more like Australia. Manufacturing is generally holding up, but services are in contraction mode. And so the overall economy is at best idling. In the UK, it's even more acute. The situation in manufacturing here, we can see strong. Services are in contraction mode, so the overall economy is contracting. The US looks a bit more like Japan. Manufacturing is strong, services is acceptable, the overall economy is quietly growing. What is it that we're seeing here? Well, Japan and the US, where you see the strength, are the most exposed to this AI build-out. Europe, Australia, less so. But to some extent, still, because you do see a bit of a tailwind to those manufacturing sectors. But that tailwind is not enough already to offset weakness in their service sectors, which are, for all these major economies, much larger than manufacturing. And so the weakness in those service sectors is already pulling those economies to standstill or worse. Now, when you look at the makeup of U.S. growth in the first quarter, you see that this is not happening in the U.S. yet, but the recipe is very much analogous. In the first quarter, you have growth of 2.1%. When you look at what's contributed to that growth, it is overwhelmingly the investment side of the equation, whereas consumption adds barely anything at all. In fact, the last 2 times that we've seen consumption give this small of a contribution to growth, in the first quarters of 2022 and 2025, the economy was shrinking. So if not for this investment boom here, we might be looking at negative growth with consumption this week. Now, because investment is only 14% of the economy and consumption is 5 times larger at 68% of the economy, having this much contribution from investment and barely anything from consumer spending and still growing at 2.1% means the consumer has to be a lot slower and investment has to be a lot faster. And that's, of course, exactly what you see. Investment, thanks to this AI boom, is surging or was surging in the first quarter, and the consumer was receding, weaker for the second consecutive quarter. Now, this is inherently unsustainable because of that size mismatch. If spinning the business investment engine this quickly to essentially carry GDP is what's necessary to do this without the consumer, well, the upshot is inflation. Because when you spin a smaller engine of growth this quickly, the nature of the growth it generates through all of the quick rotation of capital that this implies is inflationary. And that seems to be already squeezing the consumer. And of course, it doesn't take a whole lot of retrenchment for the consumer to overwhelm what this already overclocked investment engine can generate in growth, because again, the consumer is 5 times larger. It doesn't have to weaken a lot for business investment to lose its ability to keep up. And so already looking at the Atlanta Fed's GDP Now growth forecast, or nowcast, we should say, we're looking at second quarter growth estimated at 1.7%, slower than the first quarter. And we can see the evolution here of incoming data into this model. We can see it going all the way back to mid-May. Growth expectations have been deteriorating in this model as new information has come in. Moreover, if we look at Fed policy expectations, we can see, yeah, we've had this big build in crude oil again, but Fed rate hike expectations aren't really going anywhere. They're oscillating a bit around the likelihood that we're going to get one hike this year, but they're not really moving very far, even as crude oil surges. Here is where we are, sort of mid-June to mid-July, and here's what crude oil has been doing in that time. One would think there would be a build in rate hike expectations, much like there has been stasis in the bonds, or an attempted bottoming in the bonds and an attempted bottoming in gold and struggling to rally in the dollar. So too, there's not really been a big move in Fed policy expectations, almost as though the market is looking at these growth dynamics and saying, this is not sustainable. We're not going to go and extrapolate all of these rate hikes because the economy itself is on weak footing. And maybe we get the war this way or that way, but this central bank is not going to be in a position to do aggressive tightening with what's going on in the growth picture itself. And so, with that in mind, my exposure here is largely unchanged from where it has been. I am still looking at a little bit of an exploratory long on gold and doing this as a Delta 1 exposure. So just outright buying the 1OZ futures, keeping it small and just seeing how this works out. I'm a little bit short the dollar. Again, looking for the market to reconsider just how much tightening it thinks we need. So a little bit long the Aussie, long the pound, long the euro, a little bit long Bitcoin around this same idea with a call vertical. What I'm doing in stocks is selling call verticals because there's so much skew here that you have an incredible risk reward setup here where you can sell calls and end up with receiving more premium up front than the max loss on the trade. So I've been building exposure here in both the Nasdaq via the Qs and then in the S&P as well, just essentially looking for this market to either meander or fall, but not rally. And so building all of this exposure in here through this vehicle to essentially capture that idea. I'm a little bit long silver around the same idea as the position in gold, though here I'm doing it with call verticals, a little bit long the bonds at the long end with lots of duration, looking for that bottoming to continue, and still long oil, but two different ways. Long a call vertical, and then when it was time to add a little bit more duration, I sold puts instead that helped to finance the position. And so I'm looking at essentially just further upside, but not necessarily implying or extrapolating that that's going to give us this broader war trade across the markets. Instead, it seems like crude oil is still on its geopolitical mission, but the broader markets may be starting to think that a turn in the business cycle is a more immediate and pressing idea. And perhaps those PMI numbers at the end of the week will show us why. And that is Macro Money for today. As ever, we are here Monday through Thursday. That's right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am also writing for the News and Insights portion of Tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.
What's up, Tasty Nation? Happy Monday. It is July 20th. Hopefully everyone had a great weekend. I know Jermal and I did.
Yeah.
Happy belated birthday weekend.
Thanks, buddy.
Was it?
Thanks, buddy. It was good. Yeah, we had the finally had the party for it. It was fun, man. Thanks for coming. It was a good time. Saw a lot of people that I like. It was great. This was always what I wanted to do. So it was a lot of fun, man. And then how about that match yesterday? That was crazy. I did not expect that many people to be out watching. I don't know what it was. I went to the same spot, actually, my local bar, and there was a lot of people there watching that game. And all of a sudden it brings to mind, you start thinking, how many people are watching this thing? Did you have any idea?
I didn't look at the numbers, but I assume it was a large number because right before the game ended, I was in Lake Geneva. I was like, we got to go. We got to get back to the city because it was all green, like going back. And then 20 minutes later, it was like I added 5 minutes, added 5 minutes, added 5 minutes. I was like, okay, so the whole city was just like out, and now they're trying to get back.
Yeah.
Got to be a big number, huge number.
So Super Bowl numbers are 120, 130 million. 1.5 billion 1.8 is the official number. We looked it up during. I was like, what are the comparable numbers? And yeah, 1.5 was a lot, but apparently 1.8 has been just told us in the ear of the producer. 1.8 billion were watching us today.